the narrative is going to be like, oh, things are a lot worse than we think. It didn't seem like the inflation was coming down, the disinflation story was coming down fast enough to justify the 50 basis point cut. But if you look at WIRP, we're still pricing in over 25 basis points, not 50, but still over 25 within the market. That's a different scenario.
Yep, and we got red and green on the screen here today. The S&P pretty much unchanged. The Dow up about 80 points. The NASDAQ off about 0.6%, so we'll keep note of that. WTI crude oil, $78.15 per barrel. Bitcoin off 2.2%, just under $60,000 per token for your cryptocurrency. We're going to have more coming up. This is Bloomberg Good Morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major stock averages, they are mixed right now. 6 of the 11 major industry groups in the S&P 500 are lower. Communication services, that is the biggest drag right now, and that is home to Google's parent, Alphabet, as the Justice Department looking into the possibility of breaking up Google. Shares right now of Alphabet down 3.5%. The Consumer Price Index seems to put the Fed right on course to cut rates in September. As we look at yields, 2-year unchanged, 393. The 10-year yield is down 2 basis points. That is at 382. And Kellanova, the best performing stock in the S&P 500 right now. Kellanova shares up almost 8%. Amar is buying Kellanova, and the price tag $36 billion. Well, if you can't beat them, grab their CEO, Victoria's Secret, poaching the top executive for Rihanna's lingerie brand. As a result, Victoria's Secret shares, they are up 17%. Overall, the S&P 500, 5 points lower. That's down 0.1%. 54.29 on the index. The Dow Jones Industrial Average is up 67 points right now. That's up 0.2%. And the Nasdaq 100 down 97 points. That's a decline of 0.5%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Alex.
All right. Thanks so much, John Tucker. Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economic, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries worldwide. We also take you outside Bloomberg Intelligence to get the broader take from some chief investment officers, and one of them is Brent Schutte. He is CIO at Northwestern Mutual Wealth Management Company. He joins us from Milwaukee, Wisconsin. Brent, really great to see you and to get your take here. So if we take into account CPI, the non-reaction that we've seen, how aggressive does the Fed actually need to be now in September?
Well, I think absent any further labor market weakening, I think the Fed only does 25 basis points. To me, you've had 3 good reports after 4 bad. Look at the 3-month numbers, they look pretty good. The 6-month numbers are still kind of in the middling area, but the longer-term numbers on things like services, et cetera, are still a bit elevated. And I think the Fed wants to avoid a repeat of 1966, where they cut too early and that led to inflation. Or even if you think about last year this time, in the 4th quarter, we had CPI that was coming down. The Fed expressed some optimism. Investors priced in a ton of rate cuts. Optimism regrew, and what you saw was inflation coming back. And so the reality is we're later in an economic cycle, and typically late in an economic cycle, the Fed does not cut aggressively, especially where they don't know where the neutral rate is.
So, Brent, I think historically I kind of considered your view probably more conservative than maybe than the consensus as it relates to the economy and maybe the Fed and markets overall. Has anything changed in the last several weeks in terms of either economic data or company earnings data that would change that?
Look, I think over the past year, there's been plenty of things that historically have led to recessions, and investors have been able to say, yeah, but. And that yeah, but always ended with the labor market. And to me, what has changed is you have seen the labor market weaken, although we've been pointing to that for some time. Non-farm payrolls versus the household employment report has had a huge divergence. And you've seen other indicators show that the labor market is weakening. And this is where I think the market woke up last week, at least a bit for a touch of time at least, that this beloved SOM rule that everybody talked about was finally broken also. Look, I invite you to go look on your Bloomberg how many times the unemployment rate has risen by 0.9%, and we haven't been in a recession or headed towards one. And this is where I think if you think the labor market's a lagging indicator because companies want to hang on to people because they're hard to find and expensive, that's where I worry that we're a little bit too optimistic. And mine is not conservative. It's just that can we admit there are risks out there, and the stock market on many measures is as expensive as I've seen it since 1999.
Well, that's the funny thing is that last Monday and the Friday before, we would be like, yeah, you're right. There are the risks in there, and we are taking it on a chin. And then all of a sudden, it feels like yesterday, it's a go ahead, put on some more risk. So what is it? Which is it?
I think you've had investors for 15 years who have kind of been lulled to sleep by the Federal Reserve, who has always supported risk assets post the Great Financial Crisis because they needed to get the economy higher. Now I think we're on the opposite side of that, and this is where this continual commentary that I hear about the Fed cutting rates because the market fell last week was a bit, I don't know if the word is silly, but a bit premature, and that's where I don't think you're going to have the Fed be as easy any longer because there are no shortage of risk takers. And so to me, we're just a bit on the frothier side of the equity market. And that is not an all equity market thing. That is just in some of the places where people want to go no matter what. I think there are plenty of opportunities for long-term focused investors. I heard about I listened to your prior guest. I think small caps, certainly there are some issues that are there. But I think if you're thinking about a 3 to 5 year time horizon, given how cheap they are, that is where I think if you're willing to stay through a downturn, which I still think one is likely, that's where I think there is opportunity now in those areas, even if we have that downturn.
How about some sectors, Brent? Are there some sectors that screen well for you guys if the economy is in fact slowing, but there will maybe an easing interest rate environment?
That's the irony. I think small caps, if you look back to 1999, which is a similar time period, they actually did fairly well into the recession because they were trading at similar levels to where they are today, and people had placed money into that late cycle economy into a narrow group of stocks based upon the belief that they were impervious to any economic downturn and were longer term things that you needed to own no matter what. And that's where small caps actually did okay into that downturn. And then I think this one will be mild. And that's where I think the economy turns from a headwind to a tailwind. The Fed turns from a headwind to a tailwind. And that's where I think there are opportunities there. And even in parts of the S&P 500, we happen to like the S&P equal weight just a bit. And so I think there are plenty of opportunities in this kind of odd period where you hear things that made sense in the past that don't make sense today. That just worries me a bit. And it brings me back to those moments in my 30-year career where I've heard these things in the past shrugged off. And history does have a tendency to repeat.
What do you do with then bonds at this point?
So we've been extending our duration, and we are actually overweight bonds right now. And so
Connection
we've
lost.
been pretty much underweight bonds for most of my career here because of the belief that the Fed would do what they did even post-COVID and the fiscal policymakers. Now we're just a bit overweight bonds and a bit underweight equities. The thing I think people are missing is that I don't think you want to just hide out in cash. You saw what happened during those 2 days, which was supposedly traumatic, of market downturns in which the long treasury actually did quite well. And so I think bonds are back to being a hedge against equities because I think any downside this time is not going to be caused by rising inflation, but falling inflation. And that's where I think people are missing kind of the second question that you ask about inflation falling. Why is it falling? Usually it falls because demand falls. And I think you're seeing that on the services side. And I think you're seeing that in the labor market.
In a fixed income market, Brent, how much credit risk should I be taking? I can sit in 2-year treasury and get almost 4% here. How do you think about credit and credit risk?
I think you want to be higher in the credit quality spectrum. I think you're not being paid much to take on excess credit risk right now. Spreads are pretty tight. And it kind of goes back to the reality that I just don't think people are pricing in the possibility of all the warning signs that are out there potentially being actual real warning signs, not things that are going to go away because of the post-COVID period being odd. Look, that's my bottom line. It's not that people shouldn't be taking risk or you should dramatically alter your asset allocation. Just make sure you're taking the risk that you want to take, and that if the stuff does hit the fan, that you don't do what I tell every investor not to do, and yet they want to do it every time, which is not sell stocks when other people panic. And so just make sure you're comfortable with your risk level, and if last week comes to fruition and happens again, that you're able to hold through that, because I do think it will be brief and mild, but I do think there will be uncomfortable moments for people in the future, especially with an election on the docket, for example.
Well, I was going to bring up the election too, because more and more I feel like I'm hearing anecdotally that the election is becoming a big risk for, say, capital expenditures, that what CEO is going to lay out a lot of CapEx in the U.S. when they don't even know what tax policy is going to be, and there is so much risk. I also was reading an article, I think it was in the Journal, that talked about how, or the FT, that talked about how the IRA projects have been delayed and delayed and delayed, and this is all that CapEx cycle we've been waiting to see deployed. How do you think that plays out?
I think it plays out exactly the way that you just mentioned. So thanks for answering the question for me. I mean, I do think that's a reality. Look, investors should not overreact to any presidential cycle. If you look historically, what matters more is where you're at in the business cycle, not who's actually in office. And that's where I think, just right now, we're later in a business cycle. The unemployment rate is still low. It's actually rising. But it's still low, and typically in that environment, you do get presidents who actually preside over a recession. I think all those things that you mentioned are concerns that are out there, as well as the economic concerns, which I don't think are settled yet, which I do think means that there'll be more volatility that I just want people to be prepared for. It's been a bit odd that the market has kind of gone in one direction. At least those 7 stocks have pushed it in one direction, while everything else has been a little bit weaker. But it's kind of an interesting period of time where I think we're closer to a recession, at least according to the labor market, than any point in the last 15 or 16 years, absent COVID. And people are willing to take all kinds of risk at this moment because they don't believe things that worked in the past will work in the future.
All right, Brent, thanks so much for joining us. Always appreciate getting a few minutes of your time. Brent Schutte, Chief Investment Officer at Northwestern Mutual Wealth Management Company. They are based in Milwaukee, Wisconsin. And again, my call on Milwaukee, pound for pound, some of the smartest money managers I've ever seen, and I don't know why. But it is.
Maybe it's the water.
Maybe it's the water. University of Michigan, University of Wisconsin, I'm sorry, bad mistake there. Anyway, so got some smart folks there. So what are you looking at in the market today, Alex?
Honestly, nothing. Volume. Okay, if I have to do something, because I have to do 2 hours of radio and then 1.5 hours of TV, it's just volume, which just says to me, if we don't have a lot of volume in the market, I have a hard time taking any of the price action seriously, which then leads me to positioning. And if we have a clean enough positioning in the equity market and the bond market, that when we get, say, Jackson Hole, and then next week, and then we also get NVIDIA, does that have the idea to really move the markets? That's kind of what I'm thinking about. It does still feel relatively one-sided if you just look at that Bank of America Fund Manager survey, when so many, I mean, almost like over 70% think we're still in a soft landing scenario, and almost 100% think that rates are too high. I mean,
something's got to give there.
One-sided.
Yeah, S&P 500 off about 8 points right here. With our news in New York City, here's Michael Barr.
Thank you very much, Paul. Alex, John, Vice President Kamala Harris plans to roll out her economic vision with a campaign stop in Raleigh, North Carolina on Friday. Mario Parker leads our White House coverage at Bloomberg News and has more on what we know so far.
We'll expect from our sources that she'll hone in on healthcare, housing, and food costs, how to lower those costs and those prices for middle-class Americans. Part of that platform, we should note, is the fact that the Democratic ticket that she was on with President Biden before she succeeded him, I should say, at the top of the ticket, the message on the economy was just not getting through. It just wasn't cutting through, and a lot of that had to do with what voters felt was a lack of empathy.
Bloomberg's Mario Parker reports the Trump campaign is accusing Harris of stealing his idea to end taxes on tips ahead of this rollout. Trump is planning his own economic rally today in Asheville, North Carolina. The progressive member of Congress who's been outspoken against Israel's conduct in Gaza has won her primary in Minnesota. Democrat Ilhan Omar defeated former Minneapolis Councilmember Don Samuels 56.2% to 42.9%.
We know it is joyful to want to live in a peaceful and equitable world. So I am incredibly honored by this victory tonight.
While Joe Biden was vice president, his son, Hunter Biden, reportedly sought government assistance for an energy deal, writing to the U.S. ambassador in Italy. That's according to the New York Times, and says it got access to federal records about the request only after Joe Biden withdrew from the presidential race. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. With this Bloomberg Business Flash, the inflation deceleration continued. Core consumer price index that strips out food and energy because they're so volatile and tend to bounce around so much. That increased 3.2% in July from the year ago. So that's the slowest pace since early 2021. Still, Steve Rasciuto, the chief economist at Mizuho, says the Fed's inflation fight is not over yet.
Inflation is not near the Fed's target. It's still 1 percentage point above it at the CPI level. At the PCE level, it is lower. And it's telling me that we have an economy that is still very, very healthy. So, again, they want to cut rates. They're probably going to cut rates in September because they've opened the door wide enough.
Well, it's the biggest deal of the year. Shares of Kellanova, best performer in the S&P 500. Mars agreeing to buy Kellanova for nearly $36 billion, including debt. Shares of Alphabet keeping a lid on the S&P 500 down as the Justice Department considers breaking up Google. Right now, you have shares of Alphabet. They are down 3.5%. Shares of Kellanova, 7.8% higher. In your earnings report cards, 79% of the S&P 500 companies delivering positive earnings surprise. Just about done, but I think about 40 companies left. Right now, the S&P 500, 5 points lower at 54.29. The Dow Jones Industrial Average up 47 points. The NASDAQ 100 down 102 points. That's a decline right now of about 0.6%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Alex.
All right. Thank you so much, John Tucker. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We're broadcasting to you live from our interactive broker studio right here in Midtown Manhattan. Also check us out on YouTube. So one stock to watch is UBS, posting higher than expected profit in the second quarter. The firm reporting net income of $1.1 billion. That was double analyst estimates. Remember, UBS is still absorbing Credit Suisse in all of its glory. UBS CEO Sergio Armati joined Bloomberg Television and Francine Lacqua to discuss the bank's second quarter results. He also spoke about the recent market turmoil and how it was a wake-up call for investors.
For the markets and for many investors, what happened early on this month has been a wake-up call, right? So, I mean, you look at the magnitude of the movements should make people think carefully about having a proper diversification and being very thoughtful about the way you invest money.
That was Sergio Armati joining Francine Lacqua after earnings this morning. So let's go right to Allison Williams, Senior Analyst for Global Banks and Asset Managers over at Bloomberg Intelligence. She joins us from Princeton, New Jersey. Hey, Allison, can you give me the broad strokes of like what really stood out for you to UBS? And because we're still not in a super clean quarter yet, right? Because we're still absorbing the Credit Suisse turmoil.
We're not, but the core business shows that they're executing and they're making progress on the deal. So it's really the two things. So the core business, wealth flows, they're the largest global wealth manager, and they had very strong flows similar to the first quarter, especially within the strategic Asia region. So that was a key positive. The investment bank is really where we got a lot of the earnings beat in terms of revenue coming in better than expected on both the fees and the equity trading side. That's a theme we saw throughout 2Q, and we would say that 3Q is off to a good start. And then finally on the deal, they're cutting costs. They raised sort of where they expect to be at the end of the year in terms of gross cost save. They expect to achieve 55% of a $13 billion target by year end. And they're reducing non-core assets at a faster pace than expected. And so that's a key positive because it helps the overall profitability of the bank.
So, Allison, let's step back a little bit and take a look at the global investment banking business. Where is UBS now in terms of their global capabilities, global ambitions, now that they've added the Credit Suisse assets?
I mean, really, what they did was add to the businesses that they historically UBS has been very strong in, right? So equities trading and fees was really the areas that they wanted to add to they have really, made some cuts to the FICC trading business. As you know, even before UBS acquired Credit Suisse had a deal to sell off some of the securitized asset businesses. So really where UBS has added to the business is the equity trading side of thing, and as well as the equity underwriting and M&A capabilities, especially within the U.S. Of course, UBS as a whole, they also benefited from the wealth and asset management side of things. But in the investment bank, it is equities and fees, and that's where we saw the strength in the industry this quarter. So that's also helping out the bank.
Allison, what are the questions now, I guess, that you have about UBS?
So I think it's just more, we just want to see more of the same. So as I said, the non-core assets coming down faster than expected, we like that, right? The sooner you can get to a cleaner entity, the better. And that really does involve working down those legacy assets, the businesses that UBS doesn't want to be in anymore. They announced a sale of a mortgage servicing business, so that's another key step. They are also cutting costs. That was sort of has been the negative entering the year. They said that the costs were going to be much bigger than anticipated on the integration front. But the positive benefit of that is, getting that behind them sooner. And so the key questions going forward, we do want to see for the industry, IPOs and M&A continuing to do better. It's helpful on the investment banking fee side, but also keep in mind that as people, entrepreneurs, et cetera, sell their businesses and go public, that helps wealth creation, and that helps their global wealth business. And those are one of the reasons why they like to be in those investment banking fee businesses. And so to see that sort of virtuous cycle, I think will be positive in the second half. So in terms of what do we want to see more of, just more execution on the deal front. And then can M&A and IPO move forward more towards a historical average? Even though we've seen a pickup in fees, there's still a lot of room to run if you just look at sort of where the average is. And in fact, if we look at some of those ratios, the ratio to sort of deal volume to market cap, we're at sort of setting new cyclical lows. So any improvement will be a positive.
So where are we, Allison, just stepping back globally on kind of the investment banking pipeline? I think I've heard the rhetoric is that it's better now than it's been for a while. We had a nice big trade today on the M&A front with Mars and Kellanova. What are the bankers saying about the backlog?
So the bankers are positive. In particular, we always listen to Goldman Sachs because they tend to be the biggest in M&A fees, and certainly have a line into some of the biggest clients in the world. And they said that they saw a significant sequential jump in their pipeline entering the quarter, especially with regard to M&A and debt. So that's a positive. And we have seen, as you said, we're seeing incrementally more deals being announced. The Fed starting to cut rates is something that bankers and investors are looking for in terms of potentially a key catalyst for CEO confidence. As you know from your banking days, CEO confidence is key to deals, because even if you have the ability to do deals, you want to see that the price you're paying is not going to change drastically in terms of value right after you've announced it. So to the extent that we know that we're moving and have entered that Fed cutting cycle, that could be a key catalyst to confidence, and that could really help the deal pipeline.
Allison, we appreciate it. Thank you so very much, Allison Williams. She's Bloomberg Intelligence Senior Analyst for global banks and asset managers. And speaking of banks, Citigroup is now lifting the limit on some of its top UK bankers and traders bonuses. And this follows in the footsteps of rivals like JP Morgan as well as Barclays. So basically now the firm's so-called material risk takers can now earn a bonus that's as much as 6 times their base salary. And this is according to an internal memo by Bloomberg News. That's got to feel nice. And that's up from a previous limit that restricted those employees' bonuses to just 2 times their fixed pay. So that is obviously reading high on the Bloomberg terminal.
It is.
Go bonuses over in London. All right. Much more coming up on Bloomberg Intelligence. I want to pick Paul's brain as to what David Zaslav has to do over at Warner Brothers, particularly in light of all those job cuts in Paramount. So get ready for that, Paul.
Coming up.
Do your homework. Yeah. He's got 2 minutes to prep. This is Bloomberg.
company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom. Look at some of the company stories we're following. Let's think steel and iron ore. China's steel market is by far the world's largest, flashing multiple warning signs. You have that protracted property downturn, no sign of it ending. The iron ore futures in Singapore, they fell to the lowest level since May last year. The rout in steel markets, even more marked. This is a China Baowu Steel. They say conditions in China's steel sector are like, they call it a harsh winter that will be longer, colder, and more difficult to endure than we expected. You know, plastic is more expensive, actually, than steel.
Really?
Believe it or not.
I actually believe that. I believe that.
Newly appointed Starbucks CEO Brian Niccol taking over a company in crisis. Niccol, who orchestrated that remarkable turnaround at Chipotle, he's going to have to contend with inflation, where consumers foregoing $6 iced lattes and staffing. That's nuts. And staffing changes that have angered once loyal customers. On top of that, you have activist investors, Elliott Investment Management and Starboard Value. They have been circling. And three-time former CEO, Mr. Schultz, he's been both publicly and privately griping about the business. Starbucks bleeding customers who no longer want to shell out for high-priced coffee drinks. And finally, a group that represents more than 200 of Harley-Davidson's U.S. dealers say the motorcycle maker has boosted its profit margins at their expense. They're hogging their profit, threatening their viability. The Harley-Davidson Dealer Council of the National Power Sports Dealer Association outlining its grievances in a letter sent to its members. The Wall Street Journal got a copy of it. And that's your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Is it Wednesday?
Yeah,
It is Wednesday. Yes. Oh, it's Wednesday. I've been a day ahead for like weeks, so I just needed to confirm that. It's Wednesday. Happy Wednesday. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are live from Interactive Broker Studio right here in the beautiful Midtown Manhattan on this Wednesday. We will also bring you all the world and national news that you need with Michael Barr. Michael?
Thank you very much, Alex, Paul, John. The focus of the presidential race is turning to the economy. Democrat Kamala Harris plans to roll out her vision at a rally in Raleigh, North Carolina on Friday. We get more from Bloomberg Government's Jonathan Tamari in Washington.
The economy and immigration are two issues that give Republicans a lot of hope, even as Kamala Harris has had this great rollout, this big surge in polling. Their belief is that once we get past the kind of initial excitement around Harris, the change of face in the Democratic Party, that fundamentally voters are still going to be unhappy with her on the issues.
Bloomberg Government's John Tamari reports Harris has already talked about pushing corporations to lower prices. Former President Trump has accused Harris of stealing one of his ideas, ending taxes on tips. Trump has an economic-focused rally of his own today in Asheville, North Carolina. International mediators are hoping to kickstart stalled ceasefire negotiations between Israel and Hamas, with a new round of talks meant to finally clinch a deal between the sides. But the chances of a breakthrough appear slim. Israel and Hamas are set to resume discussions tomorrow, but Hamas says it won't go. Tropical storm Ernesto is expected to become a hurricane as it barrels across the Caribbean toward Bermuda. Overnight, Ernesto passed Puerto Rico's east coast, bringing heavy rain, flash flooding, and sustained winds of up to 70 miles per hour. Juan Saka is the president and CEO of Luma Energy, a private power company in Puerto Rico. He says a lot of people are without power.
32 segments at this point of transmission lines have been impacted. Right now, we have 570,424 customers out of service.
Ernesto is the fifth named storm of this year's Atlantic hurricane season. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Alex, Paul, John.
All right, thanks so much, Michael Barr. So here was a cool article from Business Insider, and it sort of said, look, these are the things that David Zaslav can do to save Warner Brothers Discovery. So I wanted to pick Paul's brain to see what he thought of these things. And one is a 4-part game plan. One, make Max an international hit. It's clearly underwhelmed. It's a rebrand last May. This is what the article says.
Yep.
But if you go more, if you do more international, more momentum abroad, it could be in a much better spot.
Yeah, that makes a lot of sense. That costs money though, because you have to program in local languages. You have to, probably increase your investment in programming. And this is at a time when these streaming services are struggling to show profitability. And one of the two ways to do it: one is you cut your programming costs, and two is you raise your prices. And that's tough, so we'll have to see how they can play it out. But it was the HBO brand.
Yeah.
They changed it to Max for politically correct reasons. A lot of people viewed HBO as elitist and East and West Coast. And,
really?
And so it didn't appeal to Middle America, the brand. And so they changed it to Max.
I didn't know that. See,
Yeah.
I learned something. Yeah. But also improving ad targeting to deliver streaming profits. I mean, duh, right? But
yeah, that's a good one, because we are seeing these paid advertising-driven streaming services actually do quite well. So, I mean, and that's where the advertising dollars are going.
Does that mean money that you have to put out there to get that ad targeting with through AI or something?
Yeah, but it's actually a great payoff, and a lot of the folks in the industry are seeing a lot of success there. So that is a growing part of the business. Advertising, streaming.
There's one about sports, sure, okay, whatever. But also join forces with other media firms.
Well, coming out of the Sun Valley Conference just last month, David Zaslav and others were saying, at the end of the day, there's two ways for us to improve the profitability of these businesses. One is to cut costs, and the other one is to consolidate. So he says you got to loosen the rules, Washington, D.C. You got to let some of these legacy media companies, even if they own broadcast networks, consolidate.
So interesting. See, I just learned a lot in the last 90 seconds. All right, coming up in the next hour of Bloomberg Intelligence, we're going to break down the markets. Victoria Fernandez will be joining us, Crossmark Global Investments. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, in the next hour of Bloomberg Intelligence Radio, we have a good lineup for you. Victoria Fernandez, Chief Market Strategist at Crossmark Global Investors, will be joining us for her take on this market. Nothing burger CPI, nothing burger markets. That's what I'm saying. Grant Spoor is Bloomberg Intelligence Global Head of Metals and Mining. We're going to talk about the steel industry and the dire straits that we might be in for that. Also, Jennifer Reed, we got to talk to her. She covers antitrust for Bloomberg Intelligence as the DOJ moles breaking up Google. And Jen Bartashis on the merger of the day, Mars buying maker Kellanova in a $36 billion deal. She'll join us from Bloomberg Intelligence as well. We were kind of coming up with a name of like chocolate Cheez-Its and what that would be. Okay. So, Cheez-Its, chocolate Cheez-Its, Chuckits. Anyway, it's not a bad idea. It could be pretty good. Anyway, let's get you up to date now with everything you need to know in the business world with your Business Flash with John Tucker. John?
All right. The major averages right now, they are mixed, Alex and Paul. This morning's inline inflation report being met with kind of a ho-hum by stock investors. The swaps markets continues to price in the first Fed move in September. The report today reinforcing the recent trend of disinflation. The core increasing just 3.2% in July for the year-ago period. David Kelly at J.P. Morgan Asset Management had this reaction to the morning inflation report.
In the actual transactions markets of the economy, where people are sort of bidding and asking for in terms of prices, inflation is disappearing. So I think that overall, this very much confirms the idea that inflation is heading down.
Next up, we're going to take the pulse of the consumer. Tomorrow, we'll get retail sales numbers as well as earnings from Walmart. S&P 500 right now, 3 points higher at 54.37. Best performer, Kellanova. This is the biggest deal of the year, 7.7% rise right now for Kellanova shares. Dow Jones Industrial Average, 59 points. That's a rise of 0.2%. The Nasdaq 100, 36 points lower. That's now 0.2%. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, John Tucker. So, do we think like chocolate Cheez-Its is a thing?
I think that could be a thing. You know that.
Right?
You know the smart people in those combined companies are thinking about it. New product extensions is what they call it.
Do you think we can have like Pop-Tarts but salty rather than sugary? Or that's gross.
Now we're talking.
That's just a Hot Pocket. Okay, anyway, this is going to be our thing.
Chocolate-covered Eggo waffles for breakfast.
I mean, duh. That's like a no-brainer.
That could work.
Yeah. Norma Linda's here. She's going to give us an update on more stocks here. So you only have 2 stocks, which just goes to show that today's a nothing day. And I'm not writing you for that. I'm just saying, like, there's not a lot
There's
happening.
not much going on. I mean, I thought the biggest news was going to be CPI, but it doesn't seem like there was much reaction coming out of that. As you said, to steal your words, nothing burger today. But the biggest name that everyone has really been watching is, of course, what we've been talking about all day long, and that's Mars agreeing to buy Kellanova for nearly $36 billion, including debt. And this is the biggest deal that we've seen this year. And we do know Mars is, of course, a candy maker, as you guys are talking about the chocolate, making me hungry. But we also have Kellanova, and their focus is more on the savory side of things when you think about Eggo waffles and Pringles, and of course Pop-Tarts is a bit of an in-between here. But this would be the largest packaged food deal in nearly a decade, and they're saying that this could spur more M&A in the sector, especially as a lot of the companies in this sector have really been challenged about getting consumers. I mean, the story of the year has been the consumer and whether or not these companies are able to continue to keep their attention and get their dollars. And so this deal is really huge in the sense that everyone wants to know whether or not this is going to permeate. Will it trickle out into the sector and for other companies more broadly?
I think I'm going to ask Jen Rhee. We're talking to Jen Rhee later about Google and breaking up. I just want to get her idea about, is there any antitrust here between Mars and, but I think it's salty and not salty, so
I think that they're pretty different, which also raises the question, you're not going to have any synergies, right? There's not going to be that much savings
and
in
my
synergies.
thought is, like, A, why do this? And again, we'll ask Jen Bartashis when she comes on, but is it just to get more clout with the supermarkets? Like I get better shelf space and promotions and stuff.
I mean,
like
I don't
that?
know. I think also part of it is like cocoa's really expensive.
Right. So that's the perk, of course, for Mars or for Kellanova. It'll buying Kellanova will help Mars rather in terms of diversifying that portfolio that it has.
All right, before we let you go, Brinker International, ticker EAT.
Yes, so we're looking at this stock. The shares are down, seeing their worst day since 2022, tumbling as much as 16%. Now, this is after its weak profit outlook overshadowed its sales beat, and this is the owner of Chili's and Maggiano's. I love Maggiano's. They have the they used to have.
Now, what is Maggiano's? That's the kind of the Italian version of like.
You can put that in quotes though. Italian.
Yes, that's what I'm doing.
See, I would say when you start out with Olive Garden, when I was young, I started with Olive Garden, and you think it's amazing, and then you realize that it's not. I feel like Maggiano's is the next step before you get to that authentic Italian cuisine. Because now as I look back, I'm realizing that Maggiano's is not as great as I thought it was.
Really?
But I still thought it was a great deal because you can come in, you get your food, you get your pasta, and you get one to go. And I would come and get my apple crostata dessert. But I mean, it seems that their parent company, Brinker, isn't doing too hot.
Which makes sense, right? Because then you get more money, and then you're like, oh, right. This is pure pasta made in the back, and this is like homemade sauce. I got you.
Right.
Nora, thanks a lot. We appreciate Norma Linda joining us there on Brinker International and Kellanova. All right, let's get about our take on the markets here with Victoria Fernandez, Chief Market Strategist at Crossmark Global Investments. Victoria, I've been saying it's a nothing burger CPI, and it was a nothing burger market reaction. Am I right or wrong?
Well, Alex, I think you're right in the sense of the report itself did not probably bring any big news. I think the ramifications in regards to what the Fed is going to do have probably changed because of this report. So we know after the last 10 days or so, the market's really been pricing in that 50 basis point move after the weekly jobless claims last week, really anticipating that the Fed was going to jump in and really kind of give us a lift off here of 50 basis points. I think that's changed following today's report. You're seeing some of that get priced out of the market. It's why we originally saw yields move a little bit higher after the report. They've kind of settled back down again, but I think we're going to have to see some repricing and where it's just a 25 basis point cut in September. Although the market is still anticipating 100 basis points by the end of the year, and I think that is too much, and we'll continue to see some repricing over the next couple months.
All right, Victoria, now with a little bit of hindsight, what did you and your colleagues at Crossmark make of that market action a week ago, Monday? From your perspective, what happened?
Yeah, so it was interesting because you got a weekly jobless claims number, and then we got the non-farm payrolls number. Okay, it came down, but it wasn't like this huge difference that really just caused us to take a step back and look and say, oh my goodness, everything's changed. We have seen a lot of maybe yellow flags, I don't want to say red flags, but concerns in the market around growth, where we've already been in that camp that we think the economy is slowing, that we have to be cautious of pullbacks in the markets, that there's overvaluations and we need to see those names come back. I mean, you look at the numbers in the JOLTS market, forget non-farm payrolls, right? Immigration affects that. There's other things that affect it in seasonality. You look at the JOLTS number, openings are down, quits are down. The key number we watch is the rehiring rate or the hiring rate itself. Both of those are in downward trends. So we've been seeing that. Manufacturing has been poor. So there's other elements coming in there that are telling you things don't look so good. For us, it was more of a confirmation of what we had been thinking. What's surprising to us was the turnaround, how quickly the market just went from, oh my goodness, the sky is falling, to, oh, never mind, the sun's out and everything's great. There was such a quick turnaround that makes us a little bit nervous as to where we're sitting right now.
So if you're nervous, what do you do?
Yeah, so for our clients, what we've been doing, because we've been nervous, and what we continue to do, is really kind of add to more of that defensive or staples part of our portfolio, we have exposure to tech. Hopefully, people were doing what we'd been doing all year and trimming some of those tech names as those valuations got a little bit too high. And we've been adding into more of the defensive areas, into some of the healthcare names, into those staples names. We do like the banks because of the yield curve steepening again will be beneficial for banks, but it all comes down to those companies with solid balance sheets. You really got to kind of dig in there. It's not just all sectors, but discretionary versus staples continues to be low. And for us, that's another signal that the market has not reached a conviction low. We could see the market pulling back to the lows that we saw last week again. So I think you need to kind of fill in your portfolio a little bit on the defensive side.
How about on fixed income, Victoria, here? Where are the opportunities here? I mean, the two-year Treasury, we're just a little bit below 4% here. That seems like a reasonable return. Or do I want to take some credit risk out there?
So look, I mean, you're talking my language. I manage our taxable fixed income strategies here at Crossmark. So we want people to have some fixed income exposure. If you think the Fed is going to cut rates, and I think everyone assumes they will at some point over the next couple of months, then you can have some advantage to being in the short end of the curve. Even now, with yields lower than where they had been, you still have the opportunity to get in and take advantage of that short end of the curve coming down. I do think also, you mentioned credit spreads have behaved really well. Did they widen out? When all the volatility was going on in the market? Yes, but they've already tightened up a little bit. So I think you can add some credit exposure, high quality credit. We don't like junk bonds, investment grade credit, a little bit further out the curve to lock in some of those rates you see right now and have good cash flow to help buffer maybe some equity volatility going forward.
When you take a look at the rest of earnings season, by the way, how closely are you looking at the specifics when we have so much uncertainty with the Fed as well as the upcoming election?
Yeah, earnings are key, and I know we're kind of winding down this earnings season, and it's actually kind of produced numbers better than what we thought that we would see. We actually thought we'd see more margin compression coming, although the PPI numbers tell us that there was some margin compression in there. So maybe it starts to show up in the third quarter. Guidance was very weak for the majority of companies in regards to consumers. You were talking about the strength of the consumer. So I think we're going to see a lot of that flow through. Hiring is down, so wages will stagnate. I think a lot of that is going to filter into third quarter earnings. People are already starting to look forward to that quarter and what's going to happen there. That could also weigh on the markets a little bit. But this quarter turned out to be somewhat better than what we expected it to be. But again, right there at that double-digit line, right about 10% EPS growth.
All right, very good. Victoria Fernandez, thank you so much. We appreciate it. Victoria Fernandez, Chief Market Strategist across Crossmark Global Investments, the pride of Houston, Texas, native Houston. Gal staying put there, Houston. So some good stuff. All right, let's get to a story that is very widely read on the Bloomberg terminal. John Tucker's been following it closely all day.
Paul Sweeney doesn't understand it.
Yeah, I'm not. All I know is the store's not there across the street, and it was before. Mary Ross Gilbert joins us, Bloomberg Intelligence Senior Equity Analyst. She covers retail. And the story is Victoria's Secret has nabbed Rihanna Brand's CEO to lead a turnaround there. And I didn't know Victoria's Secret needed a turnaround, but apparently it does. And ergo, that's why the store is no longer across the street from our office, and that space has been vacant for like 5 years.
There we go.
There we go. All right, Mary Ross Gilbert, thanks so much for joining us here. Is this a big deal for Victoria's Secret?
Oh, I think this is a big deal for Victoria's Secret. Being a woman-focused brand, we think that Hillary Super, and as you mentioned, she was just the CEO at Rihanna's brand, Fenty X Savage, and that's a lingerie company. It's a teeny, tiny company, but Hillary has 3 decades of experience. She was the chief of the Anthropologie brands more recently. And prior to that, she's worked at a number of other brands, including American Eagle. And speaking of competition to Victoria's Secret and why they've lost share, American Eagle has a brand called Aerie. And that's about, a $1.6 billion business. So Victoria's Secret has lost market share, but they have been in a turnaround mode for the past 3 to 4 years. And we're starting to see some traction, but we really think that with Super's understanding of the consumer, working with multiple brands and really getting the brand heat, we think that she could really make a difference here at the helm. So we think this is good news. And of course, it comes as they say that they just beat 2Q earnings. You know, they gave preliminary estimates for their second quarter.
When did things really fall apart for Victoria's Secret? What was the trigger?
Yeah, the trigger was really the sort of Me Too movement. And given that it was a brand that was sort of focused on the perspective of what made women sexy from a male perspective rather than from the female consumer perspective. And that has shifted. When it used to be part of limited brands, it was then spun off. And Martin Waters, who has now left the company as CEO, he was the one who came in and really spearheaded that turnaround. And they've become a more inclusive brand. I mean, how many companies out there can say that they have 100% equal pay across the business? I don't know of any others, but they have achieved that. It's, you know, it's third party documented or certified, I should say. So they've made tremendous progress. They've really improved the lineup, and it is coming from the perspective. But I think kind of getting it to the next level and really getting that turnaround to a point where they can get back to growth, I think this is the right time at the moment to pivot and bring in somebody like Hillary Super. So I think it's very, very exciting for the company at this time.
Well, Mary, if the industry has changed, if the lingerie part of the business has changed, where is success coming from in that new world?
Yeah, well, so there's a couple things that happen. I mean, the category had been growing for many years and had been expected to grow, but they did experience a slowdown last year, but we're already starting to see improvements in the category, at least in the US. Internationally, by the way, Victoria's Secret is growing in the double digits. I think in the last quarter, international was up 11%. So the category did weaken, but it looks like it's starting to turn back up again. And really what happened is with this sort of Me Too moment, it became more inclusive. And so Victoria's Secret has adopted their brands to be more inclusive and, you know, once again, to come from the perspective of a woman and what the woman needs, you know, and it's a whole assortment. And if you go into the stores, you will see a dramatic improvement in the assortment that they have, in the employee culture. I would say it's very positive, very exciting environment when you go into the stores, but they do need to remodel most of the stores. They've only been able to touch a small percentage of the store base so far. So there's still more to go. And then the Pink brand is really at an earlier stage of a turnaround, but we're already seeing fall and assortments really improve. And they've brought on Natalia Bryant as a brand ambassador. So that's pretty exciting.
Yeah.
Okay.
The
stock.
I think we're heading in the right direction.
Yeah, the stock market agrees with you. Stock trading higher today on the news. Mary Ross Gilbert, thank you so much for joining us. Mary Ross Gilbert, she's a senior equity analyst covering retail for Bloomberg Intelligence. She's based in our LA office. Wilshire. No, where are they now? They're in Century City. They're in Century City. The new office, very good office. It's very cool, overlooking the metro.
I do have to say though, Victoria's Secret is still having a runway show, but the ads are very different.
Are they?
Yes.
Okay.
So we'll see what it actually winds up turning out to be. Anyway, coming up, we're going to talk to Jen Rhee about Google potentially breaking up.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
With this Bloomberg Business Flash. Year-over-year inflation reaching its lowest level in more than 3 years in July, and this sets up the Federal Reserve for an interest rate cut in September. The stock traders not too excited about it. Major averages mixed to little changed right now. We have Treasury yields not making any big moves right now. The 2-year unchanged 393. The 2-year is down 2 basis points. That is at 381. S&P 500 7 points higher. That's up 0.1% at 5441. The Dow Jones Industrial Average is up 105 points. That's up 0.25%. And the Nasdaq 100 18 points lower. That is down about 0.1%. And Calanova rising over 7%. And tomorrow said it would buy the company behind Pringles and Cheez-Its. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate it. Alex Steele and Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so check us out there. All right, GLCO, the Global Commodity Price Board for the Bloomberg Terminal. Boy, you look at some of this stuff. Steel rebar down 29% year to date. Iron ore, which I think is important for the steel industry, that's down 30% year to date. What is going on? And then I see one of our top read stories here today. World's top steel producer warns of severe industry crisis. No kidding. What's going on? Let's check in with Grant Spohr, Global Head of Metals and Mining of Bloomberg Intelligence. He's joining us from London. Grant, what's going on in the mining business here today, the steel business?
Well, I think we're seeing it's probably a bit delayed, but we're seeing the delayed impacts from the multi-year malaise in the Chinese property market, which is a key driver of steel demand. And obviously steel demand translates into iron ore demand. So both of those commodities are feeling the freeze from that malaise. And I think we must remember that it has a secondary effect as well. So a lot of local government funding comes from land sales for the property market. And as that dries up, funding is drying up. And it's no longer that easy to reinvest that money back into infrastructure, which has been up to now been a sort of a counter-cyclical balance. So it's just the demand side on Chinese steel is pretty weak and doesn't look like it's going to recover in the near term.
And how about China as an exporter of steel? Have they been flooding the market with cheap steel? I've heard that from some other of the global steel producers.
So yes, exports of Chinese steel has been rising. And, in terms of, we think somewhere, in terms of net exports, we're probably going to see about 100 million tons come out of the country this year. So that's, exports minus imports. And it's been, historically, it's always been the sort of relief valve for Chinese steel producers. When local markets are weak and you get a good price differential between, let's say, Europe, the US, and China itself, you start seeing a lot more Chinese steel into the market. It doesn't necessarily find its way directly into Europe and the US, but it's got a domino effect. So it'll export to its neighbors, and the neighbors will then consequently try and export elsewhere as well. So it's got this sort of east to west domino effect.
Hey, Grant, I mean, this is a cyclical industry, right? It's how it goes. What part of this is beyond normal cyclicality?
So the key question, and it's a debating point, is is the Chinese steel market or steel demand in structural decline? So it's been growing for a number of years. We had a sort of a cyclical downturn between 2014 and 2016 when there was a tightening of credit in the country. And at the time, commentators were saying, well, look, this is peak steel in China. Lo and behold, it recovered. It was proved to be more cyclical. So I guess the question is this the start of or the does this mark peak steel in China, as we've seen in other industrial industrialized countries like the US and Japan, where steel declines once it reaches a peak. So I guess that, this is the debating point. I certainly, my personal view is that yes, we're reaching certainly peak steel, and now the question is how quickly does it decline? And maybe there are support measures just to ensure that it doesn't decline too quickly. It doesn't drop sort of 20% over the next 5 years.
Interesting. Yeah, I was just shocked to see some of those the prices of steel and iron ore there. So definitely a big changes going on in that industry. Grant Spohr, thanks so much for joining us, Grant Spohr. He's the global head of metals and minings at Bloomberg Intelligence. He is based in London. Another big story out there is Google. The Department of Justice is coming down hard.
Yeah.
But I just don't know what it really means. What can they do? Jennifer Reed joins us, Bloomberg Intelligence senior litigation analyst on the DOJ. Thinking about Google, maybe thinking about breaking up a Google after pushing through a landmark antitrust case. So, Jen, thanks so much for joining us here. Explain to us what the DOJ has done, is thinking about doing as it relates to Google here.
Yeah, well, now push comes to shove with this case because the DOJ hasn't really talked too much about remedies. It's been working on liability and it won pretty resoundingly. So now it has to think about what it wants to ask the judge to do to remedy what the judge found to be anti-competitive about what Google's been doing. And I have to say that the idea of a structural request or a breakup's been around since 2020 because the Department of Justice inserted it into the first complaint it filed back in October of 2020. It said we may be asking the judge for structural relief as necessary. And it's something the DOJ is thinking about. And I don't think it's a surprise. Why not go for it? There's kind of a big is bad mentality right now. And if that's the case, then you want to break apart these dominant firms and they have this win. Why not try to go for the gold on this?
So if that's the case, though, I mean, is it one of those things where they're going to go for it, but really it's going to be okay and they're not going to do it and they're going to do something else? And then what's that something else instead?
Look, I think they will. It's going to be up to the judge. And my gut here is that the judge probably would not order that kind of drastic relief. I just think that the judge was really specific here about finding that it's the default agreements that Google had entered into that were anti-competitive. And what was harmful about them was that it did not allow the rivals to gain the data they needed through searches to have scale to be a good enough search engine. And those are two big issues. So those are the two things that are anti-competitive. My suspicion is the judge will say, hey, no more default, no more payment to be the default search engine at these key search access points. And by the way, maybe you need to share some of this data you've collected over the years through all these searches with these rivals to give them a chance to get better. Those are two options. And Leah Nyland's reporting was great about also this AI issue and concern about using its dominance to get a lead in AI. And maybe the DOJ will do something there too.
Because the AI thing is the one that I think has a lot of people concerned, not investors, but just people thinking about AI and what it means for privacy and all these other issues. What does it mean for jobs and security and all these things, which the market, nobody has an idea, and certainly not the courts or regulators here. But what are Google's defenses here, given that they did lose that antitrust case?
I think one of the things Google will do will point to language by the judge, and actually there was quite a bit of it in the complaint, about the fact that it really has been a great innovator, that it's been ingenious, that the fact of the matter is it developed the best quality search engine in the world by putting in money, by putting in innovation, by hiring great engineers and ingenuity. The judge did say that. And I think Google will say, look, you have no, and also the judge, by the way, said even though Google had obtained a monopoly position, it continued to innovate, even though it didn't really have to once it gained that spot. So Google will say, look, you have no guarantee that that same kind of innovative spirit will be behind the parent of this new company. If you cleave off Android or cleave off Chrome and it's run by some other entity, that might not be in that entity's DNA. You have acknowledged that we're innovators and that we'll continue to innovate. And it makes the most sense for these assets to stay in our hands. That's what I think Google will say.
Google stock is down by about, Alphabet stock down about 3.5%. Does that feel right in relation to what you're talking about and what you're looking at in the timeline, or are we underpricing this some kind of risk here? What do you think?
I tend to think the market always overreacts a little bit to headlines. It might have been a little bit of a shock the news that the DOJ is actually going to ask for this, but this has been bandied around as a possibility now for a couple of years. And I don't think anybody should be very surprised. And you know what? This is still going to take a really long time. Google's going to appeal. Google will fight this. And in particular, if there's a divestiture order, Google will try to take this all the way to the Supreme Court. And I have little doubt that that kind of an order would be stayed pending all these appeals. So it would be years before they'd be implemented. So I think that the impact really is still to be felt for quite some time.
All right, Jen, thanks as always. You lifesaver when it comes to this stuff. I have no idea, kind of how to gauge the risk here. But fortunately, we have experts like Jen Rhee to help us out. Jen Rhee is a senior litigation analyst, Bloomberg Intelligence. To answer your question, Alex, I kind of thought this was more than I would have thought that the stock would have traded down.
Me too.
That I thought it would have been a nothing burger. Oh, here we go again, trying to break up big tech. Nothing ever comes from it. But it's off 3.4%, which leads me to believe that some people are saying, all right, we need to think about some remedies that the judge may impose and what that may mean for the value of the company.
I mean, to be fair, it wasn't a whole lot of nothing before the cash market opened.
Yep.
It wasn't. It was down barely. So clearly there might be something to that as well. But anyway, but when you're lined up in the courts, it's just really hard to get a good feel for it. If I had known that becoming like a lawyer or an antitrust lawyer would have been so consistently lucrative, maybe I would have,
Yeah, but
done something different.
Yeah, but then you got to bill hours all the time. A friend
You
of mine
work like 100 hours a week.
Yeah, and my friend's a senior partner at a big New York law firm. Hey, Z, how's your day going? I hate this job. I hate my career. As he takes home millions and millions of dollars a year, as he's done for 40 years. Every day he's hated it.
Oh, okay. Well, that's not so. We don't love that for anybody. All right, coming up, we're going to talk about the merger of the day. And Michael Barr is here with World National News.
Thank you very much, Alex, Paul, John. Amid worries in Israel about retaliation by Iran for recent assassinations, Gaza ceasefire talks are supposed to resume tomorrow, but Hamas now is indicating it won't go. Meantime, the Biden administration has approved a more than $20 billion weapons sale to Israel. More from Bloomberg's Rosalind Matheson.
Well, this is the approval of a big defence deal that we knew was in the works, and it involves up to 50 fighter jets, F-15 fighter jets, upgrades for existing fighter jets, everything from vehicles, ammunition, radar equipment. It's a big deal. It's got a lot in it, but the reality is that these planes are not going to come at least until 2029, so there's some years away.
Bloomberg's Roz Matheson. Russian air defenses downed 117 drones and 4 tactical missiles over various regions in one of the largest overnight attacks of the war. Meanwhile, President Joe Biden has commented publicly for the first time on Ukraine's incursion into Russian territory. Here's Bloomberg's Ed Baxter.
While Ukraine has fought a defensive war for the most part since the Russian invasion, something the U.S. has supported, President Biden says the move definitely makes things more difficult for Russian President Vladimir Putin.
It's creating a real dilemma for Putin, and we've been in direct contact, constant contact with the Ukrainians.
Meanwhile, there are reports that Zelensky has told his top military officials to prepare for the next step, indicating more moves. Ed Baxter, Bloomberg Radio.
Donald Trump will hold a rally and speech in North Carolina that his campaign is billing as a significant economic address. The event is this afternoon in Asheville. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. With this Bloomberg Business Flash, S&P 500 is headed right now toward its fifth straight day of gains, longest winning streak in more than a month. You have Treasuries, they're seeing relatively small moves. And today's inflation report pretty much in line with expectations. The report reinforcing the recent trend of disinflation, albeit at a relatively moderate pace at this point. It does support the idea of a September rate cut, but Amanda Agati of PNC Bank pushing back against the idea of a 50 basis point cut by the Fed in September.
We're very much in the camp of it being 25 basis points as opposed to 50. Of course, the market is leaning towards 50. Market wants the sugar high, craving more policy accommodation, but the sky's not falling.
Well, Alphabet sinking over 3% after we reported a bid to break up Google, one of the options being considered by the U.S. Justice Department. And with the deal news, biggest deal of the year, Mars, Kellanova getting together, shares of Kellanova right now. Best performing stock in the S&P 500. They were up 7.7%. Overall, S&P 500 right now 20 points higher. That's up 0.4% at 54 on the index. Dow Jones Industrial Average up 193 points, 39,957 on the index, and the NASDAQ 151 points higher. That's a rise of 0.3%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, John Tucker. This is Bloomberg Intelligence Radio. I'm Alex Deal alongside Paul Sweeney. We cover all the main news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries all around the world. And we finally get to the pressing question of the day. Will we now have chocolate Cheez-Its? And the only person to ask about this is Jen Bartashis, Bloomberg Intelligence Senior Analyst, Retail Staples and Packaged Food, is joining us. So, Jen, seriously, we're actually kind of serious. Chocolate Cheez-Its, is that going to be a thing?
You never know. I mean, it certainly maybe Snickers flavored Cheez-Its or M&M's mix. I don't know.
Ooh, wait, what about like Cheez-It M&M's? No, that'd be gross.
That would be
gross. So like chocolate
I'm thinking more of like
makes
that
sense.
Chex Mix kind of thing where it's got M&M's and Cheez-Its and everything all mixed together. You might see something like that.
Why is this deal happening? Give us the strategic rationale for this deal.
Well, there's a couple of things. The first is, from a Mars portfolio perspective, when it comes to the snacking category, they are heavily exposed to chocolate. And the cocoa has been a structural issue in terms of cost for a while, and we think that's going to continue indefinitely. And so this helps them diversify out that snacking side of their portfolio. And it also helps them do a little bit more in emerging markets, which is an area where Kellanova has some strength.
So, okay. So is it offense or defense from that perspective? Because it feels like it could be a combination of both, like diversify away from just pure cocoa, but also expand.
Yeah, I think it's a combination of the two. It's on the cocoa side, it's a little bit of risk mitigation, in helping to ease some of the costs they're feeling there. And traditionally chocolate has held up actually really well through the pandemic and after the pandemic, but we're finally starting to see a little bit of weakness in consumer demand for chocolate just because of food inflation. And so diversification will certainly help with that. And then, on a global basis, Mars has leading, they're in the top 3 market share in almost every region in confectionery. And so having more of the salty snack side and getting more into that can only consolidate their market share position in a lot of leading global, regions.
Jen, what makes this deal really interesting for me is the Mars company, because it's a private company. What do we know about Mars? Maybe, I don't know, the size, capitalization. Did they ever talk to investors?
Very rarely, but what they have disclosed, their annual revenue is a little over $50 billion. So definitely a sizable company. And what I think is very interesting is when you break that revenue down, nearly 60% of their revenue is coming from pet food. So although everybody associates Mars with chocolate, the larger portion of their business is pet. And so they own the Pedigree brand, they own the Whiskas brand, and that is a big powerhouse for them. And so when, that's part of the reason we think there actually won't be a lot of FTC pushback on this, because it's a smaller part of their portfolio, and the products are, there's really no overlap between what Kellanova does and what Mars does.
Amazingly, I did not know that.
I did not know that
at
either.
all. This is why we love Jen Bartashes.
Chocolate-covered dog food.
I mean, that would kill them, but sure, right? Dogs can't have chocolate. Isn't that a thing? And so, Jen, does this mean we're going to see a lot of other M&A in the space? And if so, sort of who and where would we see that?
Well, we've seen a lot of sentiment towards tuck-in acquisitions over the last couple of years, but there are some pressures that are affecting the industry. So when you listen to what all of these packaged food companies are saying, their priority for 2024 and headed into 2025 is regaining volume. But the problem is the consumer is not yet in a position where they're buying bigger volumes of food. And so M&A is a potential route to be able to better navigate the market. So, in this instance with this deal, we're expecting over $1 billion in synergies between Mars and Kellanova, coming from procurement, coming from manufacturing, things like that. So I think that this deal may spark at least some consideration for larger deals again in the packaged food space, as they're trying to find ways to contain costs, expand their geographic and product footprint at a time when it's hard to spend to spur consumers into buying greater volumes. So it may be an alternative for them.
Jen, here's the big question out there for, I think, most consumers, as John Tucker digs into a bag of Cheez-Its. In food inflation, you cover the packaged goods companies, you cover the grocery stores as well. Those prices, while the rate of inflation has slowed, those prices ain't coming down, are they?
They're coming down, but very, very slowly. And so if you look on it on a basis, a comparison back to 2019, food prices are still almost 20% higher than they were in 2019. Now, in certain categories where there's been relief, especially from the cost of commodities, so as corn has come down and soy has come down and wheat has come down, sugar has come down, we've seen a little bit of price relief, but it's going to take some time for that to really translate into something that consumers feel in their pocketbook, instead of just individual products being either not getting increases or coming down slightly in price.
So which company in your space do you feel like is doing pretty well on the margin and the top line side? Because if margins are going to get squeezed, you need the top line to grow, but the top line is still really struggling with consumers right now. So who's managing that the best?
Well, up until probably the last quarter or two, Mondelez has actually navigated that pretty well. Because the demand for sweets and indulgences had held up pretty well. Companies that do have that exposure to snacking, generally speaking, are doing better overall than companies that are more center store. And I would point to Kraft Heinz as an example of center store, or Campbell Soup as a center store type of company.
What does center store mean? I haven't heard that before.
So center store is when you're in a grocery store, everything that's not on the outside. So it usually is like shelf stable products. So think about your canned soups, your pasta sauces, things like that. And those are the pantry staples that most people purchase. And then the perimeter is, of course, all of your fresh foods, your produce and your meat and your dairy and things like that.
Another thing I learned today.
That's why we love Jen.
That's why we love Jen.
Yeah.
All right, Jen, thanks so much for joining us. Jen Bartashes, Senior Retail Analyst for Bloomberg Intelligence. But when I do, of course, when I see an M&A trade cross a tape, I go MA go, click on advisors and see which one of my banker buddies are getting paid. For the acquirer here, for Mars, they were solely advised by Citigroup, good for them. And then for the target, which is really where you want to be as an advisor, they had Goldman Sachs and Lazard. So some blue chip names getting paid across the board on that big trade there, $36 billion with including debt.
And this was an easier fix in that, the antitrust issue is probably not there versus other companies where you're going to have it. Do you get in the queue now? Do you wait till after the election? What do you do? Increasingly, what do you do?
Oh yeah, let's get moving, get this thing closed.
Yeah, but you're the banker. Of course you're going to say that.
Yeah, but I was reading Jen's research, combined company only has like 6.2% of global retail spend or whatever the metric is that I think the regulators will use. So it's like,
yeah, for that one. But for other companies, I don't know. All right, let's check it quick. And what are we doing in the markets? It's not that exciting, is it?
no,
It's
but
still
we've got
pretty boring?
the S&P's up about 0.3%, the Dow's up 0.4%, the Nasdaq up about 0.1%. So
We're moving.
green, little solid there. 10-year Treasury yielding 3.82%. Bitcoin, it's off a little bit here today, 59,000. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom. Look at some of the company news we are following for you. Eli Lilly has sent a wave of letters to healthcare providers in the U.S. in recent days. They're demanding they stop promoting copycat weight loss drugs as the supply of the company's brand name medicines starts to improve. These are cease and desist letters. They went to telehealth companies, wellness centers, and medical spas. The letters are signed by their attorneys. They command the providers to stop the manufacture, promotion, and or sale of compounded versions of Lilly's weight loss drugs. As long as the drugs are in shortage, the Food and Drug Administration does allow compounders to step in to make copycat versions. Well, Lilly's CEO said at the beginning of the month that Zepbound, that shortage should be over very soon. NASA finally admitting that Boeing's Starliner spacecraft might not actually return its original 2 crew members back to Earth. The agency considering tapping SpaceX for help bringing Butch Wilmore and Sonny Williams back home sometime around February. Remember, this is supposed to be a pretty short mission. If NASA ultimately enacts this contingency plan, much of the focus will be on how bad this looks for Boeing. And finally, how's this for a new cologne? Titans quarterback Will Levis has helped unveil a new scented cologne. The NFL fans kind of divided by the strange product. It's a mayonnaise scented cologne. Levi's, who's now entering his second year in the league, made headlines. Levis, is it? Oh, Levis, I'm sorry. I thought it was Levi's. Last year draft, he shared a video of himself putting mayo in his coffee. So he's apparently a big fan of mayonnaise, so much so he put it on his face and smell like mayo. That's your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, happy Wednesday. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from our Interactive Broker studio right here in Midtown Manhattan. Let's get you up to date now with world and national news. For that, we go to Michael Barr. Michael?
Mayonnaise in your coffee. Hell, man. Okay, anyway, Tropical Storm Ernesto is expected to become a hurricane as it barrels across the Caribbean toward Bermuda. Overnight, Ernesto passed Puerto Rico's east coast, bringing heavy rains, flash flooding, and sustained winds up to 70 miles per hour. Juan Saka is president and CEO of Luma Energy, a private power company in Puerto Rico.
The wind damage that there could be, flooding, and any impact to the electric infrastructure.
Juan Saka with Luma Energy says more than 500,000 people are without power. The Russian Defense Ministry says its forces have thwarted an effort by Kyiv's troops to expand a stunning week-long incursion into Russia's Kursk region. Russian air defenses downed 117 drones and 4 tactical missiles over various regions in one of the largest overnight attacks of the war. Meanwhile, Germany is investigating possible Russian sabotage at 2 military bases. According to a senior lawmaker in Berlin, attempts were apparently made to contaminate drinking water at the bases. Opening statements are expected to begin today in the murder trial of a Las Vegas area politician accused of killing an investigative reporter who wrote articles critical of him. Prosecutors accuse former Clark County Public Administrator Robert Tellis of killing Las Vegas Review-Journal reporter Jeff German in September of 2022. Loyola Law School professor and former federal prosecutor Lori Levinson.
This trial is going to have everything. The sensational murder of a reporter, the defendant being a lawyer and politician, evidence that the police got surreptitiously, DNA under fingernails.
Former federal prosecutor Lori Levinson. Vice President Kamala Harris plans to roll out her economic vision with a campaign stop in Raleigh, North Carolina on Friday. Meanwhile, Donald Trump is planning his own economic rally today in Asheville, North Carolina. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg Paul Alex John.
All right, thanks so much, Michael Barr. So here was a fantastic article that I found in the Post. Thank you so much, the Post. And now I have to find it again. So here it is. It's basically that women are skipping college, and they're making 6 figures now in things like truck driving, car mechanics, being an electrician. And according to this article, and those they interviewed, they are loving it.
Yeah, I mean, it's interesting. I mean, this one woman, Victoria Carl, she owns her own repair shop here, and she employs 4 full-time mechanics. And she's saying initially there's resistance in the trades. And what I noticed from a lot of these people is the local high school sponsored, in your junior and senior year, you can go to, do some trade school while you're still in high school, and that gives you a little bit of an advantage, and that's what propels some of these women to go into the trades.
Yeah, and one here is talking about that she wanted to work as a car mechanic since she was 5. So that's different. Like, that's clearly like she had a dream to work with cars, and like that's what that was. But instead of taking out a lot of loans, and you can just, I was talking to my godson yesterday who's going to college, and he's like, I can pay $1,000 and go to electrician school and then have like a guaranteed income, which is definitely true.
And and we've heard it from the other side, from the employer's side, they're saying they can't find enough tradespeople out there.
Yep.
And so in order to get them, they have to pay up, and that's been a big challenge. So I think, we've just talked about this for a while, but this rising cost of higher education, I think is making this decision maybe a little bit easier for a lot of people to say the trades are very attractive.
And this actually dovetails with a story, I think it was in Bloomberg yesterday, that women are a lot more flexible when it comes to the workforce and changing jobs or sticking it out, whereas because there's such a weaker economy for younger people, men just kind of say, you know what, forget it, I don't want to do that job, and then they just kind of go live at home. This also shows the certain flexibility of some of the young women.
Yep, all right, very good story there. Bree Loomis, upstate New York, plowing roads in New York
Yeah,
City.
she is.
New
At
York
19.
winters. Yeah,
At 19. That's
right.
where you get the cash. That wraps up for me and Paul. Have a great Wednesday, everybody. Joe Matthew with Balance of Power is up next. This is Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Inflation eases for a fourth month just as Kamala Harris breaks through in more polling. Welcome to the fastest show in politics as the stars seem to align for a Democratic campaign that has yet to roll out an economic plan. That comes out later this week. And this hour, we're going to dig into the data with Stuart Paul at Bloomberg Economics, and we'll dive into the polling that we're talking about, new numbers from Florida and some of the swing states with David Paleologos at Suffolk University Political Research Center. Russia says it shot down over 100 drones as Ukraine pushes further across the border. We're going to talk with a voice of authority on this, national security analyst Rebecca Grant, and we'll assemble our political panel all after a look at Wall Street. Start there right now with Amy Morris and an eye on the markets. Amy, how's it going?
Hi, thank you, Joe. Underlying U.S. inflation eased for a fourth month on an annual basis in July. That kept the Federal Reserve on track to possibly lower interest rates next month. The so-called Core Consumer Price Index, which excludes food and energy costs, increased 3.2% in July from a year ago. Still the slowest pace since early 2021. Renaissance Macro's Neil Dutta says the Fed needs to get going after this report.
In my mind, I mean, I think the slowing in the economy and the fact that the inflation situation has broadly been kind of resolved, I think that will allow the Fed to go, I think, a bit more aggressively than not.
Renaissance Macro's Neil Dutta. You can hear more of that conversation on the Surveillance Podcast. Download it wherever you get your podcasts. We check markets for you all day long here at Bloomberg. The S&P 500 up 0.5%. NASDAQ up 0.3%. The Dow is up 0.6%. The 10-year Treasury yield at 3.82% and the 2-year yield at 3.94%. And Mars has agreed to buy Kellanova for nearly $36 billion, bringing together two major food companies in one of the biggest deals of the year. The companies released a statement saying that Mars will pay $83.50 per share in cash for the maker of Pringles chips and Eggo waffles. And that is a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew.
Amy Morris, thank you so much, and welcome to the Wednesday edition of Balance of Power here on Bloomberg Radio, on the satellite radio, and on YouTube, where you can find us right now by searching Bloomberg Business News Live. And just like that, you'll find our live feed here that actually runs all day from New York to Washington, D.C., and everything in between. All the shows you hear on the radio or on YouTube, and we invite you, as always, to join us here in the studio. Big news on CPI Day. That's where we start. And boy, the overlap with politics seems to be getting heavier by the minute. Keep in mind, today, Donald Trump's going to roll out his economic plan, at least as billed by the campaign. On Friday, Kamala Harris is going to do the same thing on the eve of the Democratic National Convention. Where are we on taxes? Where are we on so many questions, including an approach to the Federal Reserve and, of course, the almighty cost of goods? Is there any sunlight between Kamala Harris and Joe Biden? We'll find out, I guess, Friday. And the fact is, maybe it doesn't matter because the news keeps looking pretty good, at least if you're looking for the opportunity, maybe between now and November, to declare victory in the fight over inflation. Stuart Paul must be getting excited listening to this. He's with us right now on the CPI Day, live from New York, Bloomberg Economics U.S. economist. Great to see you, Stuart. The headline, pretty encouraging if your name is Kamala Harris. Core inflation eases a fourth month, sealing a Fed rate cut. What else do we need to know?
It was a pretty good report for the Fed. Headline inflation came in just a touch lower than folks expected. That allowed annual inflation to cool to 2.9% from 3%. As you said, that's definitely good news for Kamala Harris, who is being painted largely with the same brush in terms of attribution of economic outcomes as President Biden has been painted with. Within the CPI report, and one of the reasons why this is good news for the Fed, a lot of the things that people finance and the things that have prices that are very much so directly affected by Fed policy, things like cars, things like appliances and televisions, all of those are seeing price declines. Where there still are inflationary pressures are in a lot of the categories that the Fed can't entirely control, or at least not very directly. So still seeing a lot of inflation pressures in rents and home prices, due in large part to a decade of underbuilding. The Biden administration is trying to combat that, issuing a $100 million grant to support new home construction. That is just a drop in the bucket when we think about $46 trillion in residential real estate wealth in the country. But again, it's home price pressures and pressures in rent that's supporting inflation. Also seeing a lot of inflation in auto insurance. And you could end up seeing that attributed to corporate greed out on the campaign trail. That's a common refrain that we've heard from Kamala Harris. But this is really largely a story of catch-up inflation. We saw the run-up in auto prices when cars were in short supply during the pandemic. When the replacement cost of autos gets higher, so too will insurance premiums. That's a lot of what's buoying inflation right now.
Auto insurance. This is really interesting, and I'm glad that you pointed out, Stuart, the matter of shelter costs, because even if this economy is going into a slowdown, that doesn't seem to be impacting what we're paying to live. And it's interesting, the jump in shelter, the largest category within services, didn't matter if you were talking about ownership or rent. Am I reading that right? Both are up 0.4 after going up in June here. This is going to be very difficult for anybody running for office to get to.
That's right. The thing that folks need to keep in mind is that mortgage rates were brought down below 3% when the Fed cut rates down to the bone following the onset of the COVID-19 pandemic. When everybody refinanced their mortgage, it now makes it basically prohibitively expensive for them to list their homes and move. So again, homes are still in short supply. Exactly. So homes are still in short supply, and so we're still seeing those pressures on both home ownership costs and on rents. And again, politicians can try to combat that as best as they can, but it's going to be difficult after a decade of underbuilding.
We got a statement from the White House today, and you can almost just, don't even look down. Just tell me what you think it says, because that second paragraph starts the same way every month. It doesn't seem to matter how good the news is. Prices are still too high, period. This is a White House that is desperate to not be caught in the act of celebrating. Could that change between now and the election? We're noting in the statement, inflation has fallen below 3%. Core inflation, lowest level since April 21. When can this White House, or God forbid, Kamala Harris, say we made it?
It's going to be really tough. It's going to be really tough to declare victory while at the same time recognizing that over the past 4 years, overall prices have increased over 20%. So the purchasing power of the cash that folks have had in their savings account is now reduced by a fifth relative to where they were when the Biden administration took office. It's not the administration's fault solely. Of course, again, rates were cut to the bone. We had stimulus and multiple rounds of direct checks distributed under both Trump and Biden. We had tax reform under Trump. This isn't this isn't a consequence solely of Biden-era policies, but it did take place on his watch. And if you were to just simply use, say, the Ray Fair model of predicting election outcomes, Kamala Harris would end up with just about a 49% share of the two-party poll. I'm interested to hear what we're going to hear in the next segment about her polling in Florida, but and just how much she's going to bear that burden of responsibility for economic outcomes. But it would be a little bit tone deaf to say that that victory has been achieved in the fight against inflation.
I think I've succeeded in turning Stuart Paul into a political analyst. What do you think? Bloomberg Economics U.S. economist. Stuart, great to see you. And thank you, on a CPI day. This is important stuff. And we're going to move right into retail sales later this week. There are going to be more data points, certainly before we get to Jackson Hole and a Fed meeting in September. But the trajectory appears to be in place here, underscoring the argument for a cut in September. Just more a question of how big it's going to be. Keeping tabs on the trail here, we've been talking about this through the eyes of the campaign. Donald Trump will be fleshing out his economic plans. 4 p.m., Asheville, North Carolina. And we'll, of course, let you know on the late edition of Balance of Power what he's talking about here, essentially preempting. We're trying to Kamala Harris's big speech on Friday. They're both doing it in North Carolina. She's going to be in Raleigh with her economic proposals. Today, though, she's off and running with Joe Biden. And you know they're going to be talking about the cost of goods, inflation. This keeps coming up. It's the number one issue. What are your plans for the economy as we face a slowdown here in a world of interest rate cuts instead of hikes? Bringing us to the swing state of Florida with a smirk is David Paleologos. It's been some time since we've had a chance to talk with the man behind the Suffolk University Political Research Center. And everybody's talking about you, David, this week because of this Florida poll that you guys put up, making us all wonder, what the heck is this map actually going to look like once the race settles here coming out of Chicago? Welcome back to Bloomberg, David. It's good to have you. I don't want to just dwell completely on Florida, but that is why you're in the news this week. And I just wonder, as you hear the conversation we're coming out of here on the economy, Trump speaks today, Kamala Harris on Friday. How important are these economic plans going to be for getting to folks who haven't made up their mind yet?
Well, the timing is really interesting. You know, in the poll, we looked at people who said the economy or inflation was the number one issue. And in Florida, Trump was beating Harris just among those voters by 30 points, 60 to 30 in Florida. And in immigration, voters who say immigration is the most important issue, Trump was winning 86 to 6. So Kamala Harris has drawn a lot of criticism for not doing Q&A and press availability. But I think what's going on is, since she got the nomination, she's doing research to figure out what her plan is going to be separate from Joe Biden and how she can sort of couch that difference and thread the needle.
Interesting. Had a conversation with Democratic pollster Celinda Lake. I always picture you guys in your own special club here. You must have a secret handshake or something. And she was talking about this idea of Kamala Harris making Florida viable, making it competitive. David, here's what she said.
The Harris campaign is very disciplined. We stay focused on the battleground states. Trying to go into Florida is like trying to go into Western Europe. It's so many media markets. It's so expensive. This is a team that will keep their eye on the prize. We have our 7 battleground states. We're going to win those states, and we're going to concentrate on them.
So, David, tell us what you are learning in the Sunshine State here and how much attention we should be paying to states like Florida that aren't part of the swing states that most polls are focused on.
Yeah, so what we picked up, and this poll was done on August 7th to the 11th, so it's pretty, the ink is still pretty dry on this one, is, you know, it's closer. Like, going into this poll, like, you have to separate yourself from being a pollster and just a voter. I was looking at this not thinking it was going to be a close race for a bunch of different reasons. Florida's purged a million Democratic voters since 2020 off the rolls, such that the active voter count is plus 1 million for Republicans. So I didn't really expect it to be close, but it is. And the reason it is because Kamala Harris has opened up a 12-point lead among women, and to kind of offset the 24-point lead among men that Trump has, and she's winning independents. So she still has a long way to go. There's only 3% undecided, so a 5-point lead for Trump in Florida looks pretty solid. And then it opens up the whole question of RFK, who's got the biggest block of votes after, you know, Trump and Harris at 5%. And I don't think he's going to end up with 5%. So the question is, where are those voters going to roll to?
Well, you just said a lot, and I want to unpack some of this. 5-point difference here in Florida. That in itself is news. I think we can argue, and you do have a 4.4% margin of error, just to give you a sense of what that actually looks like here. David, where was Joe Biden against Trump in Florida?
Oh, far. I mean, it was like night and day. What we've seen with Joe Biden is he had just low enthusiasm. Even in our most recent national poll, there was a difference of people being excited for Joe Biden versus very excited for Donald Trump. It was a 20-point difference. Now in Florida, it's pretty much wiped out. The amount of people who say they're voting for Kamala Harris are excited almost equally as they are for Donald Trump. So that's off the table, the excitement advantage that Trump had over Biden.
Fascinating. So you mentioned third parties, RFK. You combine third-party voters with so-called double haters. And this is the mushy middle here, right? This is the area that these candidates can actually maybe pick off some votes, David. How large is that pool when you put them together?
It's really large. When you're talking about percentage points, and now we're talking about a 5-point lead, not a 15-point lead. So it's an amazing dynamic to dissect. I mean, RFK was winning 10% of no party affiliations or independents. 10%. He was winning 12% of black voters in Florida. He's winning 17% of independent women that Kamala Harris really needs to win over. She already has a fairly big lead among independent women, but RFK was winning 17% of them. So when you look at RFK dropping, and you're seeing some of these percentages potentially rotating to Kamala Harris, that potentially could see even a closer race. That doesn't mean that she's going to win. It just means that way the dynamics are, it's a closer race than you would think.
Spending time with David Paleologos at Suffolk University Political Research Center. David, will Kamala Harris get a traditional convention bump out of Chicago next week?
I think you have to expect it. I mean, we have to look at history. And if that's the case, then her lead in the national polls will probably jump a couple of points to maybe +7 or +8. And then some of the swing states, maybe +5, 6. And I think that's why the Florida polls make sense to me. You've got that dynamic going on nationally and in the swing states. And, in Florida, a lot of people don't realize this, but Florida has a ballot question on legalized marijuana, recreational marijuana. That's going to drive out young people. They have an abortion rights question, statewide abortion rights question, which is going to drive up women, which will then, by default, will help Kamala Harris's campaign. So when you're polling, you kind of have to take each cycle and with the dynamics that are going on in each state into account, and we're picking that up in the polling.
David, I had to chuckle this morning. I was reading the Politico out of the State House in Boston, and apparently the governor and lieutenant governor, Maura Healey and lieutenant governor, will be in Chicago attending the festivities next week. And your state auditor is going to be in control of the government while they're gone?
Yeah, hold on to your wallet, I guess, with the state auditor being in control. I wouldn't want to be managing any of the state agencies at this time. But,
to be king for a day.
I expected Healey. I mean, it makes sense to me what Healey offers to the National Democratic ticket. Lieutenant governor is surprised a little bit. But, everybody, I don't know her personally, but everybody that, who I talk to speak very highly of the lieutenant governor as well. So it's just
one of the progressive celebrities in Chicago. Hey, David, it's great to have you back. David Paleologos, Suffolk University Research Center, with the latest on the trail. Even in Florida, the numbers are moving. This is Bloomberg.
It's 12:21 on Wall Street. I'm Amy Morris. Underlying U.S. inflation eased for a fourth month on an annual basis in July. That kept the Federal Reserve on track to lower interest rates next month. The so-called Core Consumer Price Index, which excludes food and energy costs, increased 3.2% in July from a year ago, still the slowest pace since early 2021. And we check markets for you all day long here at Bloomberg. The S&P 500 up 0.3% or 17 points. NASDAQ is flat, up just a fraction, and the Dow is up 0.6% or 250 points. The 10-year Treasury yield at 3.82% and the 2-year yield at 3.94%. And Mars, the brands include M&M's, Snickers, and Skittles, buying food company Kellanova. It's a nearly $30 billion deal, and it gives it access to brands like Cheez-Its and Eggo and Pop-Tarts. Kellanova came about when Kellogg, which was formed in 1906, split into 3 companies. It's based in Chicago, houses brands including Pringles, Townhouse, Morningstar Farms, and Rice Krispie Treats. It had 2023 net sales of more than $13 billion. Shares of Kellanova are now 7.7% higher. That's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew.
Amy Morris, thank you so much, and welcome to the Wednesday edition of Balance of Power, the fastest show in politics, live right now on Bloomberg Radio, on your satellite radio, and on YouTube. Search Bloomberg Business News Live to find us there. We've got the cameras up in the studio, and we welcome you always. Here in our first hour, about to talk about not only the campaign, which we've been invested in, and this CPI day with the intersection of politics and the economy. Donald Trump today rolling out his economic plan ahead of Kamala Harris doing the same on Friday. But one of the most important stories that's developing before our eyes here is one that is not getting enough coverage. And a couple of months ago would have been our lead story here for days on end, I'm sure. And that is Ukraine's incursion into Russia, going on the offensive in the Kursk region, as we've discussed here. And they are not turning back. Story on the terminal says it all. Russia says its air defenses had quite a night, shooting down 117 drones and 4 tactical missiles in one of the largest overnight attacks of this war since it began. The defense ministry in Moscow says its forces destroyed unmanned aerial vehicles over almost all regions bordering Ukraine. This is a remarkable moment we're in here. By the way, a Russian Su-34 fighter bomber was apparently also shot down in the Kursk region. If you're with us on YouTube, showing you a map now of that region in yellow here. If you're listening on the radio, this is northeastern Ukraine into Russia. And a pleasure to introduce Dr. Rebecca Grant as we seek insights on what's happening and what might happen next. National security analyst and senior fellow at the Lexington Institute. Dr. Grant, it's great to see you on Bloomberg. Thank you for giving us some of your time today. Broadly speaking here, Ukraine has been pretty quiet about this. It was only in the last 24 hours President Zelensky confirmed what was going on. How important is this foothold across the border going to be for Ukraine?
This is very, very important. And the Kursk pocket proves, first of all, that Ukraine is still very much in this fight. As you said, a couple of weeks ago, a couple of months ago, it looked like the war was locked in a stalemate. Of course, that is still true along the eastern and the southern front. But Ukraine, with this surprise flank attack, has really opened up a new chapter. And very interesting to me that the White House is absolutely fine with this. So this Ukrainian offensive into Russia is going on with more than tacit approval from the United States and also from other NATO allies.
So how does Ukraine turn this into a foothold? How long can they hold this area? Can they expand it?
Well, that is the perfect question of what happens now. And because of the operational security around Ukraine's operation, you know, we are going to just be guessing and watching YouTube and watching the map to see what happens. What we know so far is this incursion is about 45 miles deep and about 20 miles wide. They've been able to do it using vehicles like the U.S.-made Stryker and others to move very, very quickly. Got to mention, it shows that Ukraine's forces have been very well trained by several NATO partners, and they're really very, very capable. They're also rotating forces up to the battle edge and then back out. Very professional. But the question now is, are they going for a particular objective? Will they then consolidate? Or at some point, will they pull back? What we know is that Zelensky has said he doesn't intend to take and hold territory inside Russia. But what we don't know is how close Ukraine is to reaching their operational objectives with this invasion. We're really moving into the second week now. They may be going further north, perhaps towards a nuclear power plant, or maybe they've already made their point. We'll see.
We've seen Russian civilians, tens of thousands, evacuate that area. And it made many of us ask the question what Vladimir Putin might be preparing as he gets Russian citizens out of the way in a potential retaliatory strike against the Ukrainian military. But I know your specialty is in air power, air defense. Ukraine has F-16s now. I don't know how well trained these pilots are, but we're told they have U.S. munitions. Will those F-16s help to protect Ukrainians on the ground in Russia?
Good question. The F-16s are certainly helping to protect Ukraine. Are they doing a combined arms operation with the Ukrainian forces in Russia? You know, we simply don't know. We have seen a couple video clips of Ukraine Air Force weapons detonation in that Kursk pocket, but we don't know what the platform is. As to the F-16 pilots in Ukraine, you know, how well trained are they? Hey, these are really, really good pilots. First of all, they came in as experienced aviators with combat experience, and they've been through the F-16 schoolhouse. So they know not only how to fly the F-16, but how to employ it as a weapon system. And the F-16, of course, has incredible air-to-air capabilities, but mostly we're talking about air-to-ground attack and the ability of the F-16 to target Russian air defenses, including the air defenses that have been converted into ground-to-ground strike missiles for the Russians. So the F-16s definitely are opening a new chapter, and we're seeing some combined arms work between air power and ground formations in the Kursk pocket.
Spending time with Dr. Rebecca Grant at the Lexington Institute. I want to turn your attention, Rebecca, to the Middle East now. I know you're doing a lot of work for us today, but we're waiting for a retaliatory strike, possibly, maybe not, by Iran against Israel, to the point where the U.S. has been surging a lot of extra hardware into the region, not just the guided missile subs or the aircraft carrier strike group that have been making headlines, but more F-22s to stand by for whatever might happen. And remembering the April attack by Iran, the drone attack, the missile attack into Israel, we saw American pilots shooting down missiles and drones from U.S. fighter jets. Are we going to see that again with these F-22s if Iran decides to strike?
Oh, 100%. If Iran tries another big attack with, 300 objects like they did back in April. So the tactical problem is this. It's about 1,000 miles from Tehran to Tel Aviv. That's a big swath of airspace. And so U.S. Central Command is guarding that by using land-based fighters like the F-22s that have been surged into theater. And let me tell you, that, I think, is the biggest combat deployment of F-22s that we've ever seen. Already there was the USS Theodore Roosevelt aircraft carrier with her air wing, which, as far as I can tell, is doing 24/7 operations. So they monitor this airspace. I believe Jordan is probably helping out because Jordan, of course, borders over in that other side of the airspace. So we have to be able to watch the airspace using missile defense systems and then using the fighter aircraft to be able to chase down and intercept, particularly in this case, the Iran's rather slow-flying drones. They are incredibly vulnerable. So you're an F-22 pilot and your cockpit display is showing you a whole lot of Iranian targets in the air if Iran tries a similar type of strike.
What an incredible image that you're painting here. Rebecca, this is direct engagement we're talking about with Americans. It's the equivalent of boots on the ground in the sky in this case. What would that mean if one of our air crews was knocked out of the sky, if this became more complex in our effort to protect Israel?
Well, you're right. It is boots in the sky. Believe me, the fighter pilots have their own boots, and they fly in boots, and it is boots in the sky. You know, first of all, there's always a search and rescue plan in place. But more importantly, we've deployed our top-of-the-line systems, F-22s, F-35Cs. Actually, it's a Marine squadron heading into the region, and other F-15Es and other fighters in place. So the idea is to have enough superiority and enough visibility in the battle space, and by that I mean F-22 and others are looking to see where Iran's air defenses pop up. They can see when something goes hot on their screen and give warning to others in the strike package, and of course then attack and neutralize it if necessary. So using that great stealth and situation awareness should make this an airspace where the U.S. and allies can be absolutely dominant. That's the point of bringing in all our first-line weapons.
So you're clearly not worried about the potential for an escalatory standoff here by putting American service members, in this case, airmen and sailors, Marines, in a direct confrontation with unmanned weapons from Iran.
Well, make no mistake, the U.S. has deployed enough so that they actually have some good strike options available. And by that, I mean the ability to attack Houthi targets in Yemen, the ability to attack targets in Iran if that becomes necessary, and then to strike back against any other Iran-backed militia. So deploying enough to have offensive strike options is part of the deterrence equation. And this mass of high-level U.S. forces is meant to be squashing down Iran's tactical options. Hopefully that deters an attack. If not, it makes it much easier to defend against that. Might there be some retaliatory strikes by the U.S. depending on the circumstances? Well, yeah, they've got the firepower in theater to do it. But the goal is not to start a war. It's to maintain or reestablish deterrence.
Pretty remarkable. Just in our remaining moment, Doctor, the more time goes by, does that make it less likely that Iran strikes?
You know, only Iran knows. And we're here. Remember, their president has only been in power for a few weeks. We're hearing about divisions. I'd like to think the crisis diminishes, but really only Iran knows about that decision. But boy, they are staring at a lot of U.S. and allied firepower right now.
Fascinating conversation, Doctor, and I really appreciate your joining us. Those of us who've been watching on YouTube have been admiring what has to be the coolest mantle photograph I've ever seen behind you. 1010 on the room radar, Doctor. Many thanks, and don't be a stranger. Dr. Rebecca Grant, National Security Analyst, Senior Fellow at the Lexington Institute, with our eyes on two theaters here and a lot of questions about what might happen in the coming days. Just consider, we're going to be in Chicago on Monday for the DNC. Could this be the backdrop of day one when Joe Biden addresses the delegates, with Iran dealing with Israel and the U.S. in the mix? We're going to have a lot more ahead. We'll assemble our political panel next, as you would expect, on the fastest show in politics. Thanks for being with us. I'm Joe Matthew in Washington. This is Bloomberg.
It's 12:40 on Wall Street. I'm Amy Morris. Underlying U.S. inflation eased for a fourth month on an annual basis in July, keeping the Federal Reserve on track to lower interest rates next month. So-called core consumer price index increased 3.2% in July from a year ago, still the slowest pace since early 2021. Renaissance Macro's Neil Dutta says the core PCE number may not be as soft as CPI.
Medical care services inflation and CPI declined 30 basis points over the month. I don't think the PCE equivalent is going to be nearly that weak.
Renaissance Macro's Neil Dutta. You can hear more of that conversation on the Surveillance Podcast. We check markets for you all day long here at Bloomberg. The S&P 500 up 0.2%. NASDAQ is now down 0.2%, and the Dow is up 0.5%. The 10-year Treasury yield at 3.81%, and the 2-year yield at 3.94%. Candy maker Mars says it's buying Kellanova for $83.50 a share. Values the snack maker at about $36 billion. We get more from Dasha Afanasieva.
An asset like that, with the increased scrutiny on junk food makers because of their sugar and salt content, you could argue that an asset like that is better in private hands.
Bloomberg's Dasha Afanasieva says Mars is paying 30% premiums for Kellanova at a time many consumers are turning away from fatty snacks. Kellanova shares now 7.7% higher. And that's a Bloomberg Business Flash. Now we go back to Balance of Power with Joe Matthew.
All right, Amy, thank you. Welcome to the Wednesday edition of Balance of Power here on Bloomberg Radio, on the satellite, and on YouTube. It's good to have you. You can always find us on YouTube, all of our shows throughout the day. Search Bloomberg Business News Live. Blammo, there's our live feed. We'll meet you there. On CPI Day, which seems to have more political connotation than ever as we move closer to the convention, closer to the election, closer to the debate, when the economy, when prices for goods and services will be in the air. The smartest political analysis I read this morning after 8:30 came from Enda Curran. It was just one post on our Top Live blog, and it says it all. The fact of the matter is, fourth month of cooling inflation, great news for Kamala Harris, but both campaigns can find a lot to talk about in here. As I read on the blog from Enda, if you're on the Harris campaign team, you're probably breathing easier. The headline takeaway, inflation continues to ease. That's the easy part, right? Fed cut next month. But if you're the Trump campaign, you will not lose time highlighting the ongoing sting from housing costs. Remember, we talked about shelter costs with Stuart Paul. Car insurance, he also highlighted it. And other staples, the fodder for each side of the aisle. So everybody's happy today in the world of politics, and I'm glad to say Enda Curran is with us right now, Bloomberg Global Economics reporter. Good to see you. You've got a real political mind as you look at this data. I sort of think of you that way. And that's the way we have to be reading this stuff now, isn't it?
I think we have to be at this stage of the election cycle, as you know so well, Joe. All the polls have told us that the economy has been top of mind for people. Cost of living has been top of mind for people. Now we have this inflation data for July. Like you say, headline numbers pretty good, suggesting the Fed and the policymakers are turning a corner with inflation. Yep. Prices coming down for apparel, for airfares, prices coming down for new and used cars. There's good news there, inflation coming off the boil. But to your point, I mean, within that, big sting in the tail with rents still going up. Rents weren't meant to be going up at this pace by now. The hope was that they would be turning off. And then other daily staples like car insurance. You buy a cheap car, but you're going to pay a fortune on car insurance. Yep. Plenty of sting in the tail there. So yes, the point is good news on a headline basis. Of course, the administration will welcome that. But if you're in the opposition, you're in the Trump campaign, plenty for you to ride home on too.
You remember there was a presidential campaign wrapped around this whole thing at one point. Why? Because the rent is too damn high. Does Donald Trump start talking about this? Shelter costs are a real thing, and a lot of young people can relate with it.
Of course they are, and housing costs, very real. I mean, it varies around the country, of course, but certainly the housing market has been in something of a funk now for the past 2 years. Investors aren't willing to invest and develop property. People aren't willing to sell their homes. There's sort of an inventory problem. There's a high rent story. There's a lot going on there. So yes, you would say it's good fertile political ground for anyone to harvest. Yeah. But you would imagine maybe Vice President Harris too might come out with some ideas of her own. As you know, she has her speech coming up this week, so sure. she may also use that as an opportunity to lay out her
Well, I'm glad you brought that up, because we're going to talk to our panel about this next. Donald Trump talks today, and we've heard his plan is largely to get at it through energy. Drill, baby, drill. He says you bring energy prices lower and everything else follows. Some voters want to hear a little more than that. I know investors do. And you wonder, to what extent will Kamala Harris be able to show any sunlight between herself and Joe Biden on this issue?
Well, politically, I mean, she has to make that calculation. How far can she push from it? But on the ground, to your point, people would probably love to hear some solutions in terms of how do you slow the increase in rent? How do you increase supply in housing? I mean, 90% of the inflation increase today was because of the whole shelter story. So I think people on the ground of any stripe are open to solutions in terms of easing up the housing story. And in other aspects of cost of living too, how do you tackle what's going on in car insurance, for example? How can you keep an eye on companies who are price gouging? There's lots of territory there for both candidates. It's a question of just how they want to sell that to the public, so to speak.
That's right. Helping us get our arms around the most important issue on the trail. Enda Curran, thank you, Enda. Great to see you, as always, Bloomberg Global Economy reporter, connecting the dots for us here as we assemble our political panel. Jeannie Shanzano is with us, Bloomberg Politics contributor, of course, Democratic strategist and political science professor at Iona University, and Brittany Martinez, Republican strategist, founder of Espina & Company. Great to see you both, and thanks for joining the conversation. Brittany, I'll start with you because Donald Trump is up first here. We're going to hear from both candidates on their economic plans this week. Does he need to say more today than drill, baby, drill?
I do think he needs to say more than that, and also just stay on message. I think he needs to stop talking about crowd sizes, wondering what race or nationality, the vice president is, or race, I should say, and really focus on, what he did when he was president. A lot of people, whether you like Trump or not, a lot of people aren't happy with the economy under Biden, and they feel that they were in a better spot under Trump. And so he really needs to be able to hammer that point home and be able to connect with people on that level and not be just so erratic in his messaging all the time.
Jeannie, there was a poll that I think so far is an outlier from the Financial Times earlier this week, and we talked about it when it was released, suggesting that more people actually trust Kamala Harris when it comes to handling the economy than Donald Trump. But every other poll, including our own swing state poll, shows a wide lead for Trump on who do you trust to handle the economy, interest rates, the cost of goods, the cost of services. She's going to have to remove herself from Joe Biden on this issue to make a difference, won't she?
She will. And, you were just talking about the Suffolk poll. You look at that, obviously, Florida, but Donald Trump winning amongst people who say the economy is the most important issue by something like 30 points. And, we see that across the nation. As much as the Financial Times poll really got Democrats happy and excited, and they seem to be moving in the right direction. On the economy and on immigration, Donald Trump is still winning by large numbers. And so to Brittany's point, if he can stay on message, that would be very helpful to the campaign. The problem has been he has been way off message. I mean, I listened to the Musk interview. We had 40 minutes on the assassination attempt and much less on how his economic policy and plans and record, because he has one, is different than Kamala Harris's. And so that is what he needs to do. And to your point, she needs to define herself. As much as she has been our vice president, most people still don't know a lot about Kamala Harris and what her plans are and who she is. So she's got, unlike Joe Biden, this window to define herself on the economy. And it's going to be critically important. I think what she says in Maryland with the president and then in North Carolina this week, critically important to the rest of the campaign, because the economy is it for most voters as they run to the polls in November.
And that's a tall order, Jeannie. I'm sure you would agree. I mean, this has been in the White House with Joe Biden since we came out of COVID, since inflation has been a story here. So to try to slice this thing into something different is going to be a real task. Brittany, the fact of the matter is Republicans have the goods here. You can talk about a fourth month of ongoing inflation, but there's a reason why the White House, in its statement on the CPI today, said prices are still too high. Republicans, Donald Trump, anybody, J.D. Vance can point to very specifically shelter costs. You've done nothing to help young people get a foothold in the housing market. Car insurance, the cost of vehicles themselves, even getting at the EV issue here, Brittany. Isn't this a grab bag for the Trump campaign?
It absolutely should be. I think that when Republicans are able to stay on message when it comes to these sorts of things, they're able to be successful. But again, the question is whether he's able to stay on message or not. He hasn't really been able to. And then when you look at his candidate, Senator Vance, he has also kind of been in these first few weeks as the choice, a chaotic choice, a chaotic candidate, right? I mean, he, I think, was the lowest ranking VP pick in the polls of all time. And that, you're right, there are so many things to point to. And if you happen to catch yesterday, Nikki Haley, she did an interview where she was saying Republicans need to stop whining and they need to start paying attention to these issues and talking about these issues because this is what people care about. I think that when it comes to the debate in a few weeks here, we'll maybe see them on both sides really stick to those talking points. But we're a few weeks out and people are starting to pay attention, especially with the DNC convention coming up next week. So yes, I think there's more than enough here for Republicans, especially at the top of the ticket, to be talking about, but that's not the case, unfortunately, for them.
Talk about the convention for a moment here. Of course, we're going to be there Monday. 1 week from tonight, Jeannie, we've added another here to the list. Transportation Secretary Pete Buttigieg lands a primetime slot on Wednesday night. This is Tim Walz night. And Harris and Walz also, we have learned, next week are going to plan a rally, not in Chicago, but in Milwaukee. They're going to use, it looks like, the very same convention hall that Donald Trump used in Milwaukee. What do you make of these updates to the agenda? And what does it tell us specifically about Pete Buttigieg landing a slot like that?
Yeah, I think it's smart for them to go to Milwaukee, right? You know, it's not far, right across the border. Wisconsin, as we know, a must-win state. So it does make sense. And heck, if you can take Donald Trump's tax policies on, say, tips for waiters and waitresses, why not go to his convention house? So there you go. You know, I do think the Buttigieg move makes good sense as well. Incredibly popular with the base. He is an up-and-coming star in the Democratic side. And so, you know, that's the kind of person you want. And Joe, I have to say, I think earlier you gave me an idea for somebody else. Jimmy McMillan, the rent is too damn high guy.
Yes, thank you.
Yeah, as a New Yorker, we know him. He's, you know, the rent is too damn high for everybody. So get him out there at the convention along with the judge.
God, you just pulled that in. Jimmy McMillan. You think I'll have the gloves on, the leather gloves and the whole thing? The rent is too damn high party. Brittany, is there something there for Republicans to seize on?
Yeah, I mean, always, especially Trump. Look, we all know that Trump likes giving people nicknames. I think that would be a smart nickname to use as opposed to, you know, all of the crazy ones that he's saying. But yeah, I mean, there's, like I said, there's just so much here to pull from. And it's a matter of whether he can remain on messaging or not. And I think next week it's going to be really interesting to see what comes out of the Democrats convention. I agree with you, seeing that Buttigieg is sort of at a primetime spot shows that they care. That's what they want to be leaning into, not just now, but in the future. And they see him as a rising star in the party. I mean, obviously he is. He's been, you know, from Mayor Pete to Department of Transportation, right? And I think, though, Republicans, if they're paying attention and tuning in, especially the Trump campaign, they should be, I'm sure they will be, Trump Loves TV, be able to use some of those things to help them with what they should be saying to the American people.
Producer Matt says it all. Jimmy McMillan, best facial hair in politics, not counting Ty Cobb. If that means something to you, you are truly a wonk. Would you try to counter-program the convention, Brittany, or should Donald Trump lay low, reset the clock next week?
I think resetting the clock would be helpful. Is it possible or probable? Probably not. But we did see, though, between the debate and the assassination attempt, there were a few weeks there where he was pretty under the radar. I think right now what I've seen is Trump who continues to spiral. When all these polls are coming out that now has the vice president ahead of him, especially out of the swing states, I think he needs to take a breath, take a beat and just sort of reassess and just give his team an opportunity to sort of reframe what it is that they want to be saying, focusing on moving forward. I think that would be to his benefit. Yeah. Can he help himself? Who knows? Probably not. But we've seen him do it in the past. He can be more subdued and stay on message in those capacities.
Great panel today with Brittany Martinez and Jeannie Shanzano. Donald Trump, as we mentioned, we'll be talking a little bit later on about the economy, and our panel is going to be back with us in our second hour because Jeannie mentioned that call, the interview with Elon Musk the other night on X. Some of the things that Donald Trump said about workers, about his admiration for the way Elon Musk fires them when they try to organize, might mean him losing the endorsement by the Teamsters. Sean O'Brien was listening, and we're going to have that story next hour as well as we get back into the CPI conversation and the latest in geopolitics with former Ambassador Thomas Pickering. It's all ahead right here on Bloomberg.
politics to the world of business. This is Balance of Power. NBC.
Inflation eases for a fourth month, but both campaigns can find grist in today's CPI. Welcome to the fastest show in politics as the economy once again crosses over into politics. I'm Joe Matthew alongside Kaylee Lines in Washington. The data hitting today, Kaylee, as the candidates begin rolling out their economic plans. And first up today is Donald Trump.
Yep, he'll be in Asheville, North Carolina, giving his speech about economic policy, followed 2 days later on Friday by Vice President Harris, who will also be in North Carolina talking about the economy, not to mention the fact that she'll appear in Maryland tomorrow alongside President Biden in their first joint campaign appearance, in which they will be focusing on their administration's efforts to lower costs for the American people. Basically, Joe, they're planning to talk about inflation.
Yeah, which has been kind of a losing issue for the Biden administration, the Biden campaign, and now Kamala Harris is tasked with appearing on stage with him the day before she tries to draw distinctions between their own approaches. She's got good news to talk about, though. Michael McKee is going to join us to get into the data. Then again, Donald Trump can point to a lot of things in here as well, like the cost of shelter.
Exactly. Shelter costs comprising 90% of the inflation that we did see, and those sticky housing costs definitely a problem for voters as they consider their own costs of living as they get ready to head to the polls in November. So we'll have you fully covered on that coming up this hour. We have to talk about geopolitics as well. But first, though, as always, a check on the markets. Amy Morris has that for us today from here in Washington. Hey, Amy.
Hi, Kaylee. Year-over-year inflation, as you mentioned, reaching its lowest level in more than 3 years in July. The latest sign that the worst price spike in 4 decades is fading, setting up the Federal Reserve for an interest rate cut in September. We check markets for you all day long here at Bloomberg. S&P 500 up 0.2%. NASDAQ is down 0.3%. We're going to talk about that. And the Dow up 0.5%. The 10-year Treasury yield at 3.82% and the 2-year yield at 3.94%. So NVIDIA has pulled back after a 2-day rebound, and shares of Google parent Alphabet fell on the stock market today. This is because of talk about an antitrust action. NVIDIA shares little changed. Shares of Alphabet, though, down more than 3%. Candy company Mars buying food company Kellanova in a deal worth nearly $30 billion. Kellanova brands includes Cheez-Its, Pop-Tarts, and Eggo, with the net sales of more than $13 billion last year. Mars says it'll pay $83.50 per share in cash. The company put the total value of the transaction at $35.9 billion. The deal is expected to close in the first half of the year. Shares of Kellanova now 7.7% higher. Victoria's Secret is poaching the top executive from Rihanna's lingerie brand to lead the retailer's turnaround. The company says Hillary Super will replace Martin Waters. He was terminated as CEO and resigned from the board. Tim Johnson is the chain's chief financial and administrative officer and will serve as interim CEO. Shares of Victoria's Secret now up 13%. And that's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew and Kaylee Lines.
All right, Amy Morris, thank you so much. Taking a look at how markets are reacting to the data today, and certainly we're seeing political reaction to the data as well, including a statement from President Biden. Talked about how today's report shows progress being made on inflation, though once again, he mentions, as we've seen him do for a few months now, even when he was still running for re-election, prices are still too high. And therein lies the rub. If you're specifically the Harris campaign, who is attached to this administration, yes, inflation's getting closer to that 2% target. The problem is when prices are still more elevated than they were before this administration came into the picture in early 2021. It's a difficulty.
It's like every month, are they just copying the same statement here? Because that second graph
I think so.
always begins with, but prices are still too high. And that's where we start with Michael McKee, who joins us, of course, Bloomberg economics editor, with us live from New York. He's had some time to dig through the data here. And I don't know, Michael, it does look like both campaigns have a story to tell, whether your name's Kamala Harris or Donald Trump. Who's got a more convincing story when it comes to talking about an actual attempt to lower prices here in time for November?
Well, that's almost two different questions, because in terms of talking about lowering prices, Kamala Harris can point to the fact that the inflation rate has dropped tremendously over the last year, coming down from around 9% to now 2.9% for headline CPI, certainly within hailing distance of the Fed's 2% target. But prices are too high, and the American people look at what they're paying now, not the change in what they're paying now. And if you look at a chart of where we are with this, I mean, you can the overall price level is starting to level out, but it is still much, much higher than it was pre-pandemic and way off of the trend line from the pandemic. So the Trump people have a good story to tell as well.
Well, of course, it becomes the story that is being told or at least understood by the Federal Reserve that comes into question here, Mike, especially when we consider that a lot of the stickiness is still coming from shelter. It's owner's equivalent rent and rent prices themselves that we're considering here. And we've heard from a lot of, I guess, left-leaning economists on this program who suggest that actually the Fed's interest rates at this point, as elevated as they are actually stoking inflation because they're contributing to those higher housing costs. How should we be thinking about that here and as we look toward a rate cut of some size in September?
Well, that is a really key point, but the housing industry is very complex, and so it's not as simple as just saying the Fed has pushed up interest rates. Now, that's a reason that houses and maybe you could say condos are not selling as well as they used to because people don't want to pay mortgages that are this high. About 80% of Americans have mortgages that are under 5%, so why would you be paying 6 or 7? That's set up a lot of pent-up demand if we ever get mortgage rates down, and hopefully if the Fed starts cutting rates, we will. But the other problems are is there's not enough houses, there's not enough supply, and that's a zoning issue in most cities around the nation. And then there has been well, apartments, put it this way, are very cyclical. When there's not enough apartments, they build a lot of apartments, and then they have too many apartments and prices go down, and that's what happened. And now we're building fewer apartments, and so that's leading to a shortage as well. So there's a lot of things in there, and it's going to be interesting to see what both sides say about this and about bringing prices down, because there's really no great federal way to do it. Zoning is local. Apartment developers are going to develop based on what they think the business conditions are, and the Fed, at the moment at least, is still independent. So there isn't much they can say that would really be convincing, at least to any economist, that a particular president could bring down inflation, as it were.
Well, we recall the messaging, Michael McKee, of Jimmy McMillan, who, of course, chaired the Rent is Too Damn High party, ran for mayor in your city, ran for governor in your state. Remember, he actually was going to run for president at one point until he endorsed Donald Trump, knowing that Kamala Harris and Joe Biden are not likely going to fix this problem when it comes to housing costs before November. Yeah. Isn't that the winning message for Donald Trump? The rent is too damn high. He should have Jimmy McMillan join him on the stump here for the next 3 or 4 months and continue driving that message home, no?
Well, you see, we're way ahead of the game in New York here. People were way out in front of that. We are seeing some declines in housing prices now. We have for a couple of months in the numbers like the Case-Shiller report and things like that. And we have seen around the nation some drops in rents, but it is not the case here in New York. New York is always sort of a special case because you get a lot more people who are coming in here and a constrained supply. And so we see prices higher than most parts of the country. But it is certainly an argument. Now, whether or not it's a winning argument politically, you don't buy a house every day. So it's not quite the same. You want your winning argument, you can talk about the price of meat or the price of gasoline or something like that, which, though they've come down a lot, are still higher than they used to be.
You think about all those young people, though, trying to crack the housing market, Kaylee.
Mike says you don't buy a house every day. I'm still waiting for my single day to come where I do buy a house, Mike. Looking at the rates picture here. On that note, we've got PPI and CPI in the bag now. Jackson Hole's next week. Does this data that we've gotten over the course of the last 2 days actually materially likely change anything that will happen?
No, Jay Powell's going to come out. It keeps it from changing, put it that way. He can deliver the same message he's been delivering, that inflation's coming down, we're becoming more confident, and it will soon be appropriate for us to consider adjusting the rate. They do get the PCE inflation report at the end of the month, and they get another CPI report. And then, of course, in terms of the economy, we get another jobs report before their next meeting. So a lot of data still to come that could maybe change minds. But it does look like we're in train for a rate cut, probably only 25 basis points. But he's not going to go beyond that at this point.
All right, Michael McKee, Bloomberg International Economics and Policy Correspondent. Thank you so much, as always, joining us from New York. And of course, as we watch the inflation picture unfolding before our eyes, think about how we are talking a lot about shelter, maybe less so about other volatile components like energy now. It does speak to the not stasis, but the relative more calm that seems to be in energy markets now.
Yeah.
For now, though, as we still are on watch to see whether or not there is actually an escalation in conflict in the Middle East, as we are still waiting to see if and when Iran and Hezbollah will actually retaliate
It's
against
kind of incredible.
Israel.
It was crude oil, WTI, still just sitting there at $77 a barrel. Like none of this is happening.
Well, because right now, frankly, nothing really is happening. The question is that by design, or does that signal that actually maybe nothing will come for all of the talk and warning of it? So it's on this note now that we turn to Ambassador Thomas Pickering. He is former U.S. ambassador to the UN, former ambassador to Russia as well, U.S. ambassador to Russia, that is. Sir, it's always great to have you here. We would like to get your thoughts on Russia and Ukraine as well. But if we could just begin with what's happening in the Middle East, given that we have seen nothing yet from Iran or its proxies, does that just signal that they're delaying for what could be a larger attack than we saw in April, or that maybe they're considering not doing anything at all?
It's quite possible, and we've seen some statements on their part that they may, for reasons that are not yet clear, be holding off for any particular reason. It is certainly clear that the U.S. has sent a very stern and very tough message and wishes to avoid the outbreak of a conflict that begins to escalate and cascade in the region for very, very good reasons, having to do with, obviously, the safety and security of Israel on the one hand, to which the U.S. is committed, but also to the galloping death toll of Palestinians in Gaza, about which Vice President Harris has spoken out quite firmly recently.
Ambassador, we've seen the biggest mobilization of F-22 fighter jets into an area of combat that we have ever seen here. And I wonder if you're concerned or it gives you comfort to know that American airmen, sailors, and Marines will likely be directly involved in knocking down whatever Iran throws at Israel.
Joe, it has to be both. Obviously, anything that can deter, damp down any enthusiasm on the part of either party to launch a series of military actions which have the potential of cascading into a much broader conflict is very much in our interest. At the same time, obviously, any actions taken which precipitate that particular kind of activity are going to be clearly steps not in our interest, not in the region's interest, and not in the workout of the problems in the region, in the interest of those people who believe, as I do, that a ceasefire and hostage exchange are very much important questions, and that will come up tomorrow in the resumed talks. I wish I could tell you I would greet that with more confidence, but it remains a very, very conflictive, very contentious set of problems that does not appear at this stage from the outside to be on the edge of settlement as much as the U.S., Qatar, Egypt, and others are engaged in seeking to push it in that direction.
Well, on that note, Ambassador, if Hamas is not at the table tomorrow, do you believe that they will get there, or is this kind of the last chance to really get this done? If it doesn't happen this week, why would we have any faith that it will happen ever?
Kaylee, the process of seeking peace in a place like the Middle East is not based on auguries of hope driving us on, but alternatives that are worse, that manufacture what I would call the impulsion to move ahead. And it's been arguable that in the Middle East conflict, despite the very high casualty rates and the massive range of destruction and the problems on both sides, we have not reached the point where the parties feel there is enough disadvantage to continuing the conflict to precipitate the beginning of a serious look to see whether they can gain more from negotiations than they can gain from further shooting.
Ambassador, of course, you were also ambassador to a number of other nations here that give you expertise on what's happening in the world, including Russia. And we're looking at Ukraine continue its incursion into Russian territory, an offensive that appears to be taking hold. Now about 2 weeks old. Russia last night had to knock down 117 drones from Ukraine. Is this something that could become a foothold for a wider offensive?
I think that we're in a situation in which many of us remain skeptical that there is a battlefield victory in sight, but intrigued by the notion that the Ukrainians have launched a set of military activities into Russian territory, which the Russians, with all of their undoubted strength and superiority, have not been able to dislodge. And that is the kind of setup one would expect to see, if it continues, become a potential basis for convincing one side or another that they have more to gain in negotiations than they have to gain in continued conflict. We'll wait and see. I think both President Putin and Prime Minister Netanyahu, and perhaps politicians in this country as well, are very much engaged in the idea that in these conflicts, they have more to gain from avoiding things like prosecution and so on, either for international criminal courts or for domestic courts, by continuing the conflict than by moving it into the negotiating process. And we have to be careful of that and watch that as one of the determining factors.
Well, so Ambassador, do you see this Ukrainian incursion into Russian territory as something ultimately that does bring the war closer to its end than it was before, because either it makes Ukraine more likely to have victory outright, or at the very least may bring negotiators to the table?
Kaylee, that interpretation is not totally excluded, if I can be very cautious in saying it, but it is not something that I think is inevitable. But we have been looking in the Russia-Ukraine war for the idea that there does not seem to be at hand a military victory on the part of either side, despite both Russian larger capacity as a power on the one hand, and world continued support for Ukraine in the main on the other hand, to tip the balance. But a Ukrainian success which can be sustained may begin to open the door to thinking on the other side, do I have more to lose by continuing the conflict or more to gain by negotiating a solution? And it is that set of capacities, if I could put it that way, of changes that often precede a negotiated outcome. But it is not certain, and it is not based on any estimation of how the parties and their leaders have acted up until now to expect that a negotiated solution is around the corner. It is potentially a slightly greater possibility than a few weeks ago, but far from a certain.
Okay.
He was ambassador to Russia and U.S. ambassador to Israel. Thomas Pickering, we thank you so much for the insights today. This is Bloomberg.
It's 121 on Wall Street. I'm Amy Morris. Underlying U.S. inflation eased for a fourth month on an annual basis in July, keeping the Federal Reserve on track to lower interest rates next month. The so-called Core Consumer Price Index, which does not include food and energy costs, increased 3.2% in July from a year ago, still the slowest pace since early 2021. And we check markets for you all day long here at Bloomberg. The S&P 500 up 0.2%. NASDAQ down 0.2%. The Dow up 0.5%. The 10-year Treasury yield at 3.82% and the 2-year yield at 3.95%. Mars, whose brands include M&M's, Snickers, and Skittles, is buying food company Kellanova in a nearly $30 billion deal, giving access to brands like Cheez-Its, Eggos, Pop-Tarts. Kellanova came about when Kellogg split into 3 companies. It's based in Chicago and houses brands including Pringles, Townhouse, Morningstar Farms, and Rice Krispie Treats. It had a 2023 net sales of more than $13 billion, and now shares of Kellanova are up 7.7%. That's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew and Kaylee Lines.
All right, Amy Morris with a check on the markets on this CPI day. Thank you so much. I'm Kaylee Lines alongside Joe Matthew here in Washington. Welcome back to Balance of Power, where, of course, the inflation data, all the economic data always has political implications as we think about the impact it will have on voters and on workers, of course. And it is workers, union workers specifically, who have been in focus in the presidential campaign this week, as we saw earlier this week in Los Angeles. Governor Tim Walz of Minnesota, of course, the Democratic vice presidential nominee, made his first solo campaign appearance specifically talking to a union, talking about his role as a pro-union candidate. This is a little taste of what he had to say.
The only thing those two guys knows about working people is how to work to take advantage of them. That's what they know about it. Every single chance they've gotten, they've waged war on workers and their ability to collectively bargain to take that away from them. All we're asking for is better wages, better benefits, better lives, and dignity in the work that we do.
Okay, so when you get back to the Elon Musk interview with Donald Trump the other night, there was a conversation about whether Elon Musk, he was suggesting maybe play a role in the administration to help direct where tax dollars are going. And Donald Trump indulged him in some compliments about being the king of cutting, the greatest cutter, I think, and talked about how he would fire people at will for trying to leave the job to organize a union. That got the Teamsters really upset. Sean O'Brien was asked about this, the head of the Teamsters Union, who, of course, spoke at the Republican National Convention in Milwaukee, and he issued a statement to Politico, quote, "Firing workers for organizing, striking, and exercising their rights as Americans is economic terrorism," unquote. Now, the Teamsters, Kelly, have not endorsed yet.
No.
Looked like they were turning to Trump. And he says he's not been invited to the DNC in Chicago.
The question is that invitation now potentially forthcoming as we look ahead to next week, knowing as well that the Black Caucus within the Teamsters has come out to endorse Harris. So what kind of pressure does that put on the union's leader?
Let's see what the panel thinks. Jeannie Shanzano is with us, of course, Bloomberg Politics contributor and political science professor at Iona University, alongside Brittany Martinez, founder of Espina & Company, Republican strategist. Great to see you both. Jeannie, this is an opportunity. Is Kamala Harris on the phone with Sean O'Brien right now?
Gosh, I hope so. I mean, that's my big question. Why haven't we heard an announcement that he is speaking yet? He requested speaking slots at both the RNC and DNC. So that one should be forthcoming. They should announce it in the next day or so when she's on the stump. And of course, they should take that clip about economic terrorism and blast it everywhere, because his interview with Musk and those statements about cutting and firing people who dare to protest, that is the kind of thing that turns unions and union workers away from the Republicans. So that's what they need to be blasting out there. And I'm surprised we haven't seen that yet.
Well, I guess it raises the question, Brittany, whether or not Republicans really truly want the endorsement of union leadership, or does it mostly just mean trying to bring alongside the union rank and file, knowing that many union members in the United Auto Workers, for example, were supporters of Donald Trump, even though the UAW president, Sean Fain, has come out and endorsed the Harris-Walz campaign. Is the Trump-Vance ticket really seeking the union vote here, as we hear J.D. Vance talking often about not just union workers, but union and non-union workers when he talks about the working man?
I mean, apparently not, because he called the president of the auto workers stupid. So, he's not really doing a great job of winning those people over. And he said sort of kind of to what you were just saying now is that, okay, well, it doesn't matter what the leaders are doing. The members are going to be voting for me. But when you go out and criticize their president, when you go out and criticize Governor Kemp, when you go out and criticize all of these people, you're not winning over additional voters. You're probably going to make them upset, particularly if they're on board with what these leaders are doing. And I don't think that he's done a great job of doing that. And I think that, it would be extremely important to bring in the president next week to speak at the DNC convention. So I hope that the Harris campaign and Walz are trying to get him there if possible.
Jeannie, there's new polling out today from the Cook Political Report that confirms what we've been seeing in a lot of cases. Kamala Harris closing the gap, and in some cases actually taking a slight lead over Donald Trump. As an expert on polling, I'd love for you to weigh in on what we got from the Cook Political Report today, the Swing State Project survey. This is all 7 swing states that we track here at Bloomberg as well. Find Harris leading or tied with Donald Trump in all but one of the 7. A narrow lead, 48 to 47% in those states in the head-to-head. We've got a couple of issues here. The Trump still holds a slim lead in Nevada, for instance, if you're looking at this from the perspective of Kamala Harris. But what does the pollster inside you say at a time of uncertainty and a lot of noise before the Harris campaign starts to detail policy proposals when you look at these numbers?
Well, they're moving in the right direction, obviously, for the Harris campaign. This is quite a shift from where Cook had the race in May. It is, a neck and neck race at this point, I think. As you mentioned, most of these states are within the margin of error. I think the change in North Carolina is particularly important, and I think helps explain why Donald Trump is down there today, why Harris will be down there later this week, why the Republicans have a big ad buy now in North Carolina. This is what is happening when we talk about momentum, is from when Joe Biden was candidate, they have now opened up this map, forcing Republicans to play in places they quite frankly don't want to spend time and money in, but now they have to. So very good news for the Kamala Harris campaign, but there are warning signs here. They are in a deadlocked, heated race. This is not a winning race. It is a lock now. And so she needs to move this forward. And that's why this week on the economy is so critically important, because he still wins big, even in this Cook report survey release on the issue of the economy and immigration. So she's got to start to make movement there.
And what does the Trump campaign need to do, Brittany? You're looking at your lead, if you're Donald Trump, diminishing. How does he get his own momentum back? Is it through press conferences, understanding he's going to do another one tomorrow after Mar-a-Lago last week, or does he need to start hitting the swing state trail to the extent that Harris and Walz have?
Oh, he needs to mount an aggressive swing state trial campaign right now. I don't think the press conferences are ever too helpful. I mean, even when the thing he did with Elon the other day, when we're talking about, you're great at firing people. I mean, we have a strong labor market right now, but it's also one of the toughest times to find a job for people who are unemployed. So I think that was definitely out of touch messaging. When you get him for an extended period of time, that's when he seems to go off script. And I think that if he is able to stick to teleprompter, stick to talking point, and then go to those swing states, particularly the ones right now that Harris is only up a couple points, I think that's going to make a world of a difference, especially if we look at a month ago when Biden was still in the race. Trump was up in all of those swing states. Basically, he was up 5 and Biden was up 2. And so now that sort of flipped. And I think in order to get back on track, he needs to really hit those states.
Well, it's interesting. As we've learned today, Kamala Harris and Tim Walz are going to be going to one of those states. Milwaukee, Wisconsin, Jeannie. They're going to actually be using the same hall that Donald Trump held his convention in a couple of weeks ago, as Democrats are preparing for Kamala Harris's arrival in Chicago. It looks like this is going to happen on Tuesday, the second day of the Democratic National Convention. Is this time well spent when all the delegates are in the hall?
Absolutely. They need to spend as much time in these states as they can, particularly Wisconsin, Michigan, Pennsylvania, and the rest of the swing states. So it is good use of their time, taking it to the same venue where Donald Trump was, of course. And 3 weeks ago, the Republicans really felt like they had this in the bag, not so much today. But what they really need to be focused on is, number one, defining Kamala Harris before Donald Trump gets on message and does it, because trust me, he will. He's a very good campaigner. And number two, they need to define what this race is about. They cannot let this race be in a look at Joe Biden's economy or his record on the border, because if it's about that, she's going to have a tougher time. So that's where they need to work, and they need to work it in these swing states as they are. So, you know, things look good, but, you know, many people not paying attention until after this convention. So they've got a ways to go here.
Well, and so it raises the question of the ad buys. Once we are out of the convention and the media coverage that comes along with it, then we're going to be in more of the final sprint through Labor Day and beyond. We understand now that the Harris campaign is planning another $90 million in ad buys. Donald Trump's campaign, or at least a PAC affiliated, is going to be spending $100 million between the convention and Labor Day. How expensive is this going to get when all is said and done, Jeannie?
Oh, it's going to be very expensive. The most expensive in history. It has been modern history every 4 years. And the spending is going to, you know, surpass anything we've seen both in the U.S. and abroad. That said, paid media, as important as it is, doesn't work if it's out of line with the earned media. And that's the problem Trump is having. His paid media is on message. His earned media is not. You've got to get those messages together. So the spending matters, but it's got to be joined with that earned media, because social media, critically important for the voters they are trying to reach. People don't unsee social media. So that's where Trump has a challenge getting back on message.
Brittany, there's a question about to the extent Donald Trump will try to counter-program the DNC. There's also a lot of reporting that there will be tens of thousands of protesters next week in Chicago. This is something that's been looked at as a Democratic problem here since long before Joe Biden left the race. How can Republicans seize on that discord, use those optics against Democrats?
Yeah, I mean, I definitely think that there is an opportunity for counter-programming. I know that we talked about it also might be in his best interest to sort of sit this one out for a little bit and you know, sort of get back on messaging. But absolutely, I mean, I can already envision a campaign ad about that. And look at all these people who are upset at Democrats who are ruining our cities and the crime is up, and, you know, use all of those typical talking points Republicans use when talking about Democrats. But another thing that I really want to point out here is that he's already sort of laying the groundwork of saying that this election is stolen. He said that Kamala Harris was part of, you know, staging a coup, and this is unconstitutional, what happened to Joe Biden. And so we already kind of see him doing that as it is, and I can see that going into next week as well.
All right, Brittany Martinez and Jeannie Shanzano, our political panel on this Wednesday. Thank you both so much for joining us. We have much more still ahead here on Balance of Power, including Bharat Ramamurthy, formerly of this administration, on CPI. This is Bloomberg.
It's 1:40 on Wall Street. I'm Amy Morris. Annual inflation has fallen to a 3-year low, the latest sign that the worst price spike in 4 decades is fading and clearing the way for the Fed to begin cutting rates. We check markets for you all day long here at Bloomberg. The S&P 500 is up 0.2%. NASDAQ is down 0.2%, and the Dow is up 0.6%. The 10-year Treasury yield at 3.82% and the 2-year yield at 3.95%. What's going on with NASDAQ? Shares of Google parent Alphabet have fallen on the stock market today amid talk of an antitrust action. Shares of Alphabet right now down about 3%. Mars, whose brands include M&M's, Snickers, and Skittles, buying food company Kellanova, a nearly $30 billion deal, giving it access to brands like Cheez-It, Eggo, and Pop-Tarts. Kellanova houses brands like Pringles, Townhouse, and Rice Krispie Treats. It had 2023 net sales of more than $13 billion. Kellanova shares are 7.7% higher. Victoria's Secret has been struggling for years, in part because of competition like Rihanna's Savage X Fenty lingerie brand. So Victoria's Secret says it has now hired the top executive from Savage X to lead the retailer's turnaround. The company says Hillary Super will replace Martin Waters, who was terminated as CEO. Shares of Victoria's Secret now 14% higher. And that's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew and Kaylee Lines.
Amy, thanks, and thanks for being with us on the Wednesday edition of Balance of Power here on Bloomberg TV and radio. Kaylee, CPI Day, which has more to do with politics than ever as we get closer to Chicago and, of course, November, with a couple of important speeches happening this week on the campaign trail. We got a lot of speeches, Kaylee, but these are ones we actually listen to for details. Today it's Donald Trump.
Yep.
Friday it's Kamala Harris. Actual economic plans that both owe voters, so we can tell how much difference there is here and whether there is a plan to lower prices.
Yeah, and both of these speeches will be given from the swing state of North Carolina, which is interesting. They're just 2 days apart, of course. But the question really is going to be, how specific do they get on the policy that they want to pursue? And frankly, how much overlap might there be? As we know, on at least 2 issues, the child tax credit, which J.D. Vance is now out saying he is in favor of expanding, and taxing, or not taxing rather, tipped income.
Yes, right.
They agree. So where exactly, knowing that this administration Harris has been part of also has kept intact many of the tariffs from the Trump administration, where are the differences here?
You might get a little squinty-eyed, as Kaylee likes to say, trying to tell the difference here. Look, it's not just the difference between these campaigns, Kaylee. It's going to be the difference between Kamala Harris and Joe Biden.
Surely.
When she speaks on Friday. And now we're really splitting hairs. Potentially, we have a lot to hear from them.
And of course, before we hear from Harris on Friday, she will be sharing a stage with
just
President
to remind
Biden
everyone.
in Maryland tomorrow, where they will be talking about their administration's efforts to lower costs for the American people in the aftermath of today's inflation data. So it's a lot that we're looking forward to, and I'm pleased to say joining us to talk about it as we look ahead is Bharat Ramamurthy. He is Senior Advisor for Economic Strategy at the American Economic Liberties Project, also formerly Deputy Director of the National Economic Council at the White House. Bharat, always great to have you here on Bloomberg TV and radio. If we could first begin with the data today, obviously we heard some similar words from Joe Biden about it, that it does show progress, that prices are still too high. When you see, looking at the data, still stickiness in shelter costs, for example, are you confident that prices can get materially lower between now and November?
Yeah, look, I think that CPI is on a really good trajectory. If you look at over the last 3 months, headline CPI is up only 0.4%. That's obviously actually below the Fed's target for annual inflation. The housing number is obviously driving the vast majority of the inflation that we still have. Some of that is lagged data. Some of that is does not reflect disinflation that's in the pipeline. So I actually think that it's a sign of, should be a sign of optimism that housing is the overwhelming force here. But I think it's incumbent upon both candidates to explain what they plan to do on housing. I think on that front, the Biden administration and the Harris campaign has talked a lot about putting significant federal dollars into building new affordable housing supply, which is ultimately the medium-term and long-term solution to the housing cost problems that we have.
Of course, what Kamala Harris could really use at this point is lower interest rates, helping young people maybe get a foothold in this housing market as policies move forward to build more homes Bharat, I wonder what you think about this idea. You've actually worked in the White House with both of the people we're talking about here, Joe Biden and Kamala Harris. The extent to which she needs to find her own message when she speaks to the economy on Friday, and maybe even find some sunlight between herself and Joe Biden to show a new approach at lowering prices. What could we hear on Friday?
I think ultimately what you're going to see is, to go to the point that you were making as we came into this segment, is to drive a contrast between the Harris economic agenda and the Trump economic agenda. Just to quibble with one thing you said on the child tax credit, it's great that J.D. Vance has not only expressed some support for that, but if you look at when the bill that actually expanded the child tax credit was before the United States Senate, every single Republican senator voted against it. And denied us the ability to provide a little bit of tax relief to parents with children. So,
do we actually know if Donald Trump supports that? He's never said that.
I would suspect that he doesn't, to be totally honest, and that might be a bit of daylight between himself and his vice presidential nominee. And so, but I think what the Harris campaign is going to do, I suspect, is identify a few areas of emphasis where there's a really sharp contrast with the Trump economic agenda. Number one, on taxes. It's not just the child tax credit that we talked about. When it comes to fiscal responsibility and raising taxes on the very wealthy and large corporations, the Trump plan is clear. It's a $4.6 trillion tax cut that goes primarily to households making well over $400,000 a year. The Harris economic agenda, which comes out of the Biden-Harris budget, is to raise some taxes on the very wealthy and large corporations, help bring down the deficit by $2 trillion over the next 10 years, and at the same time provide some middle-class tax relief, something that's absent from the Trump economic plan. And so whether it's on taxes, whether it's on a willingness to actually stand up to corporate actors who are squeezing American families, where the vice president has a track record of that as Attorney General of California, Trump as president bent over backwards to do the bidding of corporations. And so I think you'll see a few areas of sharp contrast, and I think ultimately a case made by the Harris campaign that they are being more responsive to the actual concerns of American voters.
So while you may see sharp contrast in some areas, Bharat, there are at least similarities in others, including this idea on the subject of taxes and the deficit about not taxing tipped income. The Committee for a Responsible Federal Budget estimates that not doing that would increase the deficit by $100 to $200 billion over 10 years. Is this actually good economic policy?
I think, again, you have to put all of this into the context of a broader fiscal plan, a broader budget. I think when you put that plan alongside a policy to raise substantially more tax revenue from the very wealthy and large corporations and to ultimately drive down the budget deficit, which is what the Harris plan, the Harris-Biden budget, it does, versus the Trump agenda, where this additional $100 or $200 billion in tax cuts comes on top of a $4.6 trillion tax cut that primarily goes to the wealthy. You can see how one is a reasonable set of policies that puts America on a better fiscal track, and one would massively blow out the deficit on top of, I should note, the $8 trillion of deficit increase that you saw in the first Trump term.
So on Friday, Kamala Harris gets on stage and says, look at the last 3 years of progress we've made. The Biden-Harris economic proposal moves forward if you elect me as president. Because if you look at the CPI today, 4 months straight of easing inflation, everybody expects rate cuts to start in September. This coincides pretty nicely with the November election, doesn't it?
Yeah, I said before that I think you're hitting a patch of real economic momentum here with inflation clearly easing, where at this point I think the question for the Fed in September is not whether they will cut, but whether they cut by 25 basis points or 50 basis points. That's going to be an important moment where I think it will send a signal to the American public we've officially turned the page on inflation. And so there's a lot of momentum in the economy.
Can she say that, though? Can she say that? Because everyone's asking about drawing contrast with Joe Biden. What if she just gets up there and says, we won the war against inflation? Is that mission accomplished 2024?
I'm not sure if she's going to use that exact language, but I do think that she's going to be able to ride a lot of positive economic data into the fall and into November. If everything stays on the current trajectory, that's going to be another boost to a campaign that's already done very, very well over the last couple of weeks. and building the case for it. And so I think what she has an opportunity to do is to try to explain to the American public how her economic agenda is going to be responsive to the concerns that they are feeling in their lives today. Obviously, the cost of living is a big one, the cost of housing, the cost of childcare, the cost of higher education. But I also think part of it is who can create a calm, predictable atmosphere for businesses to thrive in. And what we saw during the first Trump term was chaos and uncertainty that I think really put a toll on the ability of businesses to conduct, to do their work on a daily basis. And with the Harris administration, I think you'll see a lot of regulatory predictability, a lot of working with the business community, especially the small business community, to make sure that they have the tools that they need to grow.
As we consider her economic policy, it is also pointing out she's been hit too on the border, specifically an issue with which Republicans are charging that as borders are. She essentially, to summarize, really messed things up. Can we separate migration, immigration policy from economic policy now, though, as Donald Trump is accusing her of taking a turn toward his kind of policy, hardening some of her language when it comes to migration, knowing the impact that it has had on growth on the labor market? Could that kind of more rightward shift, or at least harsher shift when it comes to the border and migration, actually be something that takes an economic toll?
Look, I think the president and the vice president from the very beginning of the administration have been talking about the need for comprehensive immigration reform that involves more border security, more funding for border patrol agents and so on, but also changes on legal immigration and a way of addressing all the folks, the dreamers that have been here in the United States and providing them with a pathway to citizenship. I think that's the right balance of steps to address some of the labor issues that you talked about, while at the same time making sure that we have a strong border and can enforce the rules that we have about crossing the border. I think that the vice president, if you look at the actual data, the administration has done a good job of addressing migration across the border. We saw that the steps that the president took a couple of months ago via executive order have led to a significant decrease in illegal crossings. But at the end of the day, this is an area where Congress needs to act. And we remember the Senate had a bipartisan proposal that the president and vice president supported, and that Donald Trump came in at the last second to urge Republicans to vote against it, in my view, because he would rather campaign on the issue than try to solve the problem.
Bharat, finally, before we let you go, and I do ask you this question knowing that you spent years working for Senator Elizabeth Warren, who certainly has thoughts about this industry, but Politico is reporting there is a Crypto for Harris event happening tonight in which a number of lawmakers are going to attend virtually, including Senate Majority Leader Chuck Schumer. I'm not sure you expect to hear the vice president talk about crypto policy specifically on Friday when she's outlining economic policy, but do you expect she'll be very different than Joe Biden on that front?
I honestly don't know the answer to that. It's not something that I've talked to her or her team about.
Would you encourage her to be?
I think generally speaking, we should have innovation in the United States, and that we should have regulatory policies that encourage responsible innovation. At the same time, my view on crypto has been that we need to address some of the scams that have been taking advantage of consumers and causing real financial harm. We also need to look at steps we can take to insulate the broader financial system from any issues that may arise in the crypto space. And we need to do something to address money laundering and other ways of using crypto to evade the rules that we have for the rest of the financial system. I think that there are ways of doing that while at the same time creating an atmosphere that allows innovation to proceed. Obviously, the devil's in the details on how you strike that balance, but I think ultimately that should be the goal.
Bharat, it's great to have you back. Bharat Ramamurthy, now with the senior advisor, I should say, for economic strategy at the American Economic Liberties Project, formerly advising the Biden White House on the economy. Bharat Ramamurthy, thank you. The CPI, of course, going to be followed, Kaylee, by a retail sales report.
Yeah.
That's going to have a lot of people wondering about the strength of the consumer, even as we keep our eyes on prices.
Yeah, as Bharat was indicating, he expects actually that the data will be improving as we get closer to the election. There are others, including the likes of JP Morgan and Goldman Sachs, who are actually raising their odds of a recession.
Correct.
Given that we are seeing some softening in the data as we are seeing inflation coming down. We always knew that there might be a trade-off when
Absolutely.
we consider the dual mandate. But it's not just inflation we have to contend with as we look forward to November. It's also whether or not the economy starts to struggle.
And so one of the most important political conversations this week will be the conference call after Walmart earnings this week, right? To really find out what the trade down is all about, what people are actually thinking. That anecdotal evidence goes a long way here in the world of polling and politics. Kaylee, I'll meet you at 5 o'clock, late edition of Balance of Power. That's coming up right here, of course. We'll meet you then on Bloomberg TV and radio.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
All right, everybody, a very good afternoon. Live on radio, TV, YouTube, Bloomberg Originals. This is Bloomberg Business Week for this Wednesday, August 14th. Carol Masser along with Tim Stenivek. Let's get to the setup for you on this Wednesday. And we've got stocks as measured by the S&P 500. Well, folks, they're headed toward their fifth consecutive day of gains. That's the longest winning streak in more than a month. And we did get that CPI report, a second inflation read this week.
Yeah, quote, does the job, you might say. We're going to have more with Michael McKee in just a minute. Also this hour, Carol, little quiz. What do you get when Pop-Tarts and Pringles meets Greenies and Ben's Original Rice? Maybe throw in some pet food there as well.
You get a really cool buffet.
Yeah, biggest M&A deal of the year.
All right, we're going to talk about that one. It's been long in coming, folks, but finally we've got the terms and the details. Plus, Google's push to rival Apple and why you may not want to buy into all that hope around the iPhone 16. We're going to talk with our own Mark Gurman, check in with him.
Also, speaking of Google, is a breakup in the offing. Could that happen?
Yeah, that's a big one. And one more thing, a data point that takes us back to the days just after the pandemic. It's all coming up, Tim, in the next 60 minutes.
First up, though, a check on the day's trade and top business stories. Here's Amy Morris in for Charlie Pellet.
Hi, Tim. The World Health Organization has declared a fast-spreading Mpox outbreak in Africa a global health emergency, the agency seeking to contain the spread of the potentially deadly virus. This is a mutated strain of the virus. It causes unsightly, painful rashes and lesions. Again, the WHO declaring a global health emergency. Year-over-year inflation reached its lowest level in more than 3 years in July. The latest sign, the worst price spike in 4 decades, is fading, and it sets up the Fed for an interest rate cut in September. We check markets for you all day long here at Bloomberg. S&P 500 up 0.1%. NASDAQ now down 0.3%, and the Dow up 0.6%. The 10-year Treasury yield at 3.82%, and the 2-year yield at 3.95%. And you mentioned it, candy company Mars buying food company Kellanova, a deal worth nearly $30 billion. Kellanova brands, that's stuff like Cheez-Its, Pop-Tarts, Eggo waffles. It had net sales of more than $13 billion last year. The company put the total value of the transaction at $35.9 billion. Shares of Kellanova now up 7.7%. And Victoria's Secret poaching the top executive from Rihanna's lingerie brand to help lead the retailer's turnaround. The company says Hillary Supra will replace Martin Waters, who was terminated as CEO and resigned from the board. Shares of Victoria's Secret now 15% higher. And that's a Bloomberg Business Flash. Now back to Bloomberg Business Week with Carol Masser and Tim Stenovec.
We are all down into Pop-Tarts. I'm just going to say that.
I think Cheez-Its, too, is kind of what people are talking about today.
Food groups, right? Food staples.
Yeah, I guess
or
you could
something.
say that.
All right, so we've been waiting on this report, as has the Fed. I think it's safe to say. Underlying U.S. inflation eased for a fourth month on an annual basis in the month of July, keeping, Tim, the Fed on track to lower interest rates next month. I guess the question is, though, is it 25 basis points? Is it 50?
No, that's a good question to pose to Michael McKee, Bloomberg News International Economics and Policy Correspondent. He's here in the studio. Mike, okay, worth repeating some of these numbers for folks who haven't been tuning in all day. Core consumer CPI, core consumer price index, I should say, increased 3.2% in July from a year ago. It's still the slowest pace since early 2021. So what does it mean for Jay Powell and co? 25 basis points, kind of all but guaranteed?
Probably. There's another CPI report and another PCE inflation report, and we have another jobs report before the next Fed meeting. So in theory, something could go wrong. We could have the Boeing Starliner of, economic data or something like that will keep the Feds, nobody got hurt, so put it that way.
Yeah, that's true.
But we could keep them from doing something. But right now, it does appear that they are on track to cut rates. I suspect next week we'll hear Jay Powell not be definitive about it, but basically say we're getting more confident and soon it will be appropriate to consider adjusting the policy rate and try not to be specific because something else still could happen.
There's still some time, right? When we go through CPI, Mike, month versus year over year, headline versus core, I know we always talk about the importance of core. I mean, what is it that you care the most about? What does the Fed care the most about?
Well, the Fed doesn't care about the CPI in that sense. Their target is based on the PCE, which generally runs 4 to 5 basis points below what the CPI does. So, you can extrapolate from that. But basically, they have two things that they're watching. One is the core rate on both of these because that's your better measure of inflation if you take out food and fuel. Obviously, drought has an effect on prices that nobody can do anything about, and the same thing with geopolitical tensions and oil prices. So to get a flavor of the underlying inflation rate, they look at the core. But they have made the headline rate of PCE their target. So when they say 2%, they're looking at the headline rate in terms of where they think inflation needs to
So
go.
we're not there yet.
So we're not there yet. We'll be probably 2.6, 2.5, maybe on the PCE at the end of the month. We should have a pretty good idea pretty soon because all the number crunchers are sticking in their Excel spreadsheets the data from CPI and PPI. And basically, we just keep getting closer. But the last mile, as they say, is very, very hard.
When you peel back the layers of today's CPI report, is there anything in there that surprises you, or was there anything in there that's indicative of a consumer that's getting a little more cautious about spending money?
Not so much on the consumer side, but we did see a surprise in that housing prices, shelter prices went up in terms of the rate of inflation to 0.4 from 0.3. And there was a lot of talk last month. Now we're down to 0.3, and it's finally happening. We expected housing prices to go down, and now they're doing it. And then in July they did not.
Not so much.
So is this a reversal? Is it a blip? Do we have an ongoing housing problem? That's going to be an issue.
I mean, we've talked so much about housing, right? We know the issues, right? There's not a lot of supply out there. And then there's also been higher mortgage rates that don't have people moving around. Is it easily explained away by those two things?
Well, those are the primary reasons behind it. There's also, when you talk about apartment buildings, developers are very cyclical. When there's a lot of demand, there doesn't seem to be enough apartments, then they start building a lot of apartments, and then they build too many, and then we go through a down period. So that factors into it as well. But mortgage rates are the biggest things, and the fact that there are no houses available. But in terms of mortgage rates, 80% of people still have mortgages below 5%. So why are you going to buy a house and pay 7%? You know,
Right.
Today we went down to like 6.35 or something like that, but we're
gonna
still
talk
up.
about that later.
We're actually seeing some people refinance right now because rates have come down ever so slightly.
Yeah, and not a lot of people out there who would benefit from that. I mean, especially when you throw in fees. But if we get down into the 4s or something, you know, below 5, you're going to start to see a lot of that activity.
Okay, speaking of the consumer, retail sales tomorrow. What are you looking for? What can we look for?
The analysts who look at this think that we're going to see kind of a rotation away from bigger ticket items, which might hurt some department stores, for example, and we might see more groceries, that sort of thing, staples go up. It wasn't back to school in July quite yet, so you're not going to probably see a lot of movement in apparel. But we'll look at some of the more indicative numbers like restaurants and bars. You know, are people still going out? That tells you something about how they feel about disposable income. And we'll see what they're doing on the internet. That's been very volatile lately. It's been a bit of a surprise that shopping there has been up and down, but you do know that July was Prime Days. So we may see a rise in that you can't.
It's not as exciting as it used to be.
It used to be, but maybe a rise that you
Prime
can't.
Days and not Prime Day.
Yeah.
Well, it's now because
Just
there's also the pre-Prime Days and the post-Prime Days.
Doesn't have the same oomph to it that
Just
it used
lower
to.
prices across the board, 365
Buy
days,
stuff.
and then we'll
You
keep.
like Prime Days better than Singles Days? That's China.
I don't know. I just buy what I need, I guess. I don't know. Mike McKee, thank you so much. We'll watch for those retail sales. And speaking of the consumer, we'll also get Walmart earnings before they open tomorrow. All right, that is our look at the economy and what's to come when it comes to retail.
Okay, so from retail to, how about a little M&A news today? As the makers of Cheez-Its, Eggo, Pop-Tarts, Pringles, and Special K join the company
can't say these
behind
brands enough.
M&M's, Dove Bars, Ben's Original, Greenies, and Pedigree Original, not to mention some vet providers as well.
Oh, big time. My vet is part of one of their,
So you can go to
groups.
the vet, get your Cheez-Its, get your M&M's.
Yeah.
Get your dog and
it's
get your dog
one-stop
fix.
shopping for the
Yeah.
family. Well, the actual deal that I got to say has been in the works. We've talked about this for a while. Ever since Kellogg, remember, said it would separate into Kellanova and WK Kellogg. That was more than 1 year ago. That separation was completed in early October of last year. So let's get to the specifics on the deal. Again, Mars agreeing to buy Kellanova for nearly $36 billion. It does include debt, bringing together two major food companies in the biggest deal of the year. We've been saying this all day, all long on Bloomberg. Let's get to it, what you need to know, and whether the deal maybe kicks lists off some others in this space. With us is Bloomberg Intelligence Senior Retail Staples and Packaged Food Analyst Jen Bartashis, with us from BI headquarters in Princeton, New Jersey. Also with us, Bloomberg News consumer reporter Dina Shankar. She also joins us on Zoom. Hey, Dina, walk us through the deal, why it does or doesn't make sense here.
So basically, Mars is a massive company. They are privately held. They have a number of divisions, as you guys just mentioned. And in their food department, they have snacking, but their snacking is very chocolate heavy. So buying up Kellanova gives it a little bit more balance for the salty snackers amongst us, because Kellanova owns Cheez-Its, Pringles, etc. So Kellanova used to be Kellogg, of course. They spun off the cereal side, the North American cereal side, which has been kind of an anchor for them, weighing them down. So now here they are. They're growing as they what they call reaching commercial. They're initiating all their commercial activity. They said in their last earnings release, meaning that they still have more room to grow, which a lot of the packaged food companies cannot say. They've been seeing volumes go down. So Mars, we can't say really how much they've been growing or not because they're private, but this gives them a lot more shelf space in the supermarket and a way to balance their offerings.
Hey, Jen, come on in here because you cover retail staples and packaged food over at Bloomberg Intelligence. I'm curious what we know about Mars, since it is a privately held company, in terms of revenue, in terms of its revenue mix. What can you tell us about what it's going to end up doing with the Kellanova brands?
Yeah, thank you for having me. So when we look at Mars, they have a little over $50 billion in revenue. Of 59% of that, so nearly 60%, is coming from pet. So that is the bulk of their portfolio. So if you strip that out, the remaining $20 billion in revenue is really in that snacking category. And when you think about it, Kellanova has about $13 billion in snacking. So those two companies, like those two segments together, are much more comparable in size than people might assume when they hear about how big Mars is as a company. So when you bring those together, I think we're looking at potentially up to a little over $1 billion in synergies that they can realize through the procurement of raw ingredients, through manufacturing efficiencies, distribution gains, and things like that. So there really is a lot that is attractive about this deal for both companies, especially in that snacking segment.
Yeah, Jen, I was thinking about, in our write-through, and Dina, in your write-through, you note that the packaged food industry has been dealing with declining volume, slowing growth, weakening global consumers, and so they're looking for innovation. They're looking for new markets to bolster sales. So, Jen, does that check all the boxes by doing this deal?
It really does. For Mars, because they are very chocolate heavy, as Dina said, it helps mitigate some of the risk because there's kind of some long-term structural challenges with the cocoa market that Mars is certainly aware of. For Kellanova, they've been growing in places like Latin America. They have a distribution business in Africa and Nigeria. So they have a good exposure to emerging markets, which are growth areas that I think both Mars and Kellanova can accelerate their sales in.
Dina, I found the timing of this really interesting, given that Kellanova is barely a standalone publicly traded company. I mean, it hasn't even been on its own for a year at this point.
Let it have a year to trade, kids,
or why not just carve it out before the spinoff? And a new publicly traded company, and sell that part to Mars before going through all the public market rigmarole. What do we know about the timing, Dina?
I can't say what conversations they were having before they decided to split it up, and when they were hoping to sell, or if this was a brand new idea. But the timing is good in that they haven't completely filled out their commercial capabilities yet. They still have room to. Steve Cahillane, the CEO of Kellanova, told me that they're reaching their full commercial activity on Pringles, but not for all their brands. So it means that there's a lot of upside still for the company, which makes it a really good time to have another company swallow you up because they see more value than you've been able to realize yet yourself.
Jen, sounds like you want to come in on this in terms of the timing.
Yeah. What I would say is when we go back to when they were doing their original spinoff, part of Kellogg's original plan was to also sell off their Morningstar Farms brand. And ultimately, they retained it because they couldn't get the multiple that they thought that it deserved. So, part of the consideration certainly must have been about what kind of multiple could they have gotten at that time versus the multiple that they're getting now that they have a couple of quarters of strong growth in that streamlined snack business. So I think that that's part of the consideration as well.
Hey, Jen, in any of this, because I feel like we have talked pre-pandemic, post-pandemic, how important like the pet business and everybody spending on pets and how big it's become. And, Mars, when you really thought about it, oh, candy, no, actually pet business. That was their big thing. Anything in this that says, as we know, nearly 60% of their sales, right, coming from that pet world. Any sign that the pet business is slowing down?
Well, if you look at some of the comments that, for example, General Mills has made with regards to Blue Buffalo, there's certainly a slowdown in premium, and Mars does have exposure to premium. So it's not their entire pet portfolio, but it is part of their pet portfolio. And in addition, we've seen slowing in snacks for pets and treats and that sort of thing.
One of mine is on a diet, to be quite fair. So yeah, there's no treats. Anyway, keep going.
Yeah, so we've seen a pullback in treating, especially because people aren't as home as much. People are back at work. People are on the move a lot more. And so that portion of sales has also slowed for these pet companies. So, when you take that into consideration, growth in other parts of their overall portfolio is a very welcome thing.
Scout actually flings her bowl at us because she's like a little ticked off that we cut back on the food too.
Well, I hope she's not watching.
She's got to lose weight. She's a little older. We're a little worried about her.
Dina, I just want to end with you. As we mentioned, an absolutely massive deal here. Does it mean a return to M&A when it comes to the space?
I think we will see more M&A because we typically see M&A when companies are looking for growth and they have a lot of cash on their balance sheets. And right now that is a fair description of a lot of the packaged food companies.
Well, the bankers will be happy and the lawyers will be happy. We got to kind of do our
Cheese a dog treat for Scout?
No, although they love cheese.
That's synergy.
Yeah, there's a few carrots I do toss to Scout. Keeping her in the greens. Guys, thank you so much. Important story. It's among our most read, and it's certainly been something we've been captivated with all day. Bloomberg Intelligence senior retail staples and packaged food analyst Jen Bartoshis and Bloomberg News consumer reporter Dina Shaker. Want to mention a story, though, crossing the Bloomberg terminal.
Yeah, Apple pushing ahead with a tabletop robot in search of new revenue. We're going to talk all about it with Mark Gurman coming up at 2:40 Wall Street time. The company is seeking more sources of revenue. It's moving forward with development of a pricey tabletop home device that combines an iPad-like display with a robotic limb.
Yeah, apparently the company now has a team of several hundred people working on the device, which uses a thin robotic arm to move around a large screen. This is according to people with knowledge of the matter. We're going to get actually the insight on this when Mark joins us because this story just crossed, so looking forward to that. Hey, coming up next, we're staying in the big tech world. A breakup of Alphabet's Google. Is it likely? What could it mean longer term for other players in the big tech space? And ultimately, could it lead to a breakup of the company? That story on the other side.
It's 2:21 on Wall Street. I'm Amy Morris. Some world news for you. The World Health Organization has declared the Mpox outbreaks in Congo and elsewhere in Africa a global emergency now. Cases are confirmed among children and adults in more than a dozen countries, and a new form of this virus is spreading. Few vaccine doses are available. Mpox causes nasty blisters and lesions and can give you a fever and swollen lymph nodes, muscle aches, and exhaustion. Underlying U.S. inflation eased for a fourth month on an annual basis in July, keeping the Federal Reserve on track to lower interest rates next month. CPI increased 3.2% in July from a year ago, still the slowest pace since early 2021. And we check markets for you all day long at Bloomberg. The S&P 500 up 0.2%, NASDAQ down 0.2%, the Dow up 0.5%, and the 10-year Treasury yield at 3.82%, the 2-year yield at 3.95%. Mars, whose brands include M&M's, Snickers, and Skittles, is buying food company Kellanova in a nearly $30 billion deal, giving it access to brands like Cheez-Its, Eggos, and Pop-Tarts. Shares of Kellanova now 7.7% higher. And that's a Bloomberg Business Flash. Now we go back to Bloomberg Business Week with Carol Masser and Tim Stenivek.
Amy Morris, thank you so much. You still have Skittles in my trick-or-treat bag.
Yeah. Wait, did you say still?
Skittles. No, way back when.
Okay, because, it's almost October.
Getting ready for it, getting ready. Hey, let's get to a Bloomberg exclusive. We talked about this yesterday. It did break after the market closed yesterday about a bid to break up Alphabet's Google, one of the options being considered by the U.S. Justice Department after a landmark court ruling found that the company monopolized the online search market. This is according to people with knowledge of the deliberations.
The move would be Washington's first push to dismantle a company for illegal monopolization since unsuccessful efforts to break up Microsoft. That was 2 decades ago. So let's get to it. We got Bloomberg Intelligence senior antitrust litigation analyst in New York City, Jen Rhee, along with Bloomberg Television co-host of Bloomberg Technology, Ed Ludlow, in our San Francisco bureau. Jen, let's start with the legal case here and the potential implications of the outcome. Just explain from the legal side what's going on.
Well, there was a trial last September. The Department of Justice had sued Google over conduct that was maintaining its monopoly in search. And specifically what the DOJ was concerned about and where Google lost was that it was paying companies a lot of money, about $26 billion a year as of 2021, to place Google search as the default search option at all key sort of access search points. So behind Apple Safari or behind Mozilla's Firefox and on Android phones. And basically what this did is it just didn't provide an outlet for competitors in search, such as Bing and DuckDuckGo. And the judge said, look, first of all, this excluded your competitors because you're locking up all of these access points for search, and you're also depriving those competitors the data they need for scale to actually get to be better because they get that data via searches and they're not getting a sufficient number of the searches.
So Jen, harsh, fair, or likely in terms of a breakup?
In terms of a breakup, I think unlikely. I think expected that the Department of Justice would ask for that. As a matter of fact, they said so when they filed this lawsuit back in October of 2020, right in their complaint. It says they may ask for structural relief. And I would expect them to. They won on liability pretty resoundingly, and why not go for that? I think it's very unlikely, though, in this case, that is what will happen. I think there's some other options on the table for the judge that are a little bit more tailored and less drastic. He has shown himself to really be adhering to that opinion you mentioned at the start of this segment, the Microsoft case back in the 1990s. And that case actually cautioned against structural remedies like these under certain circumstances. And I think those certain circumstances apply here, too.
Ed, can we talk just for a second about kind of the historical irony of of a potential breakup of Google? I mean, this is a company that I think it's fair to say many would argue emerged post antitrust efforts from the U.S. government against Microsoft, and maybe wouldn't even exist now had the U.S. government not gone after Microsoft in the 1990s.
You guys know, like, I'm a student of history, and I always do the research, but I was single digits years old in June of 2000 when the United States looked at Microsoft. And, Jen makes her analytical point on the reality of a breakup of Google, but the point in the reporting, the detail of the reporting is there are actually many options of specific parts of Google being looked at by DOJ officials and attorneys, at least according to our sources. And it's worth trying to understand how Google's search business works and the data behind it, and how the Android operating system for smartphones works, to kind of ask the question, how would this work in practice?
So how would it work in practice, Ed? I mean, how do you separate the Chrome browser from Google as a company?
Oh, Tim, I'm so glad that you asked. So well played. Basically, Google, in simple terms, has what's called a web crawler, or let's call it a web scraper. And what that does, company websites allow Google to go in and use the crawler to get information. And as a result, those websites appear in searches. One of the options sources tell us is being considered is give third-party searches, just like Jen outlined, access to that data set, or divest the data set, which I don't quite understand. I guess maybe Jen can talk about if there's been past precedent for that, but you would incorporate an entity responsible for that data. On the Android side, it works quite simply. Google does deals with smartphone makers. They get Android operating systems on the smartphones, but in return, Google gets preferential placement of its key apps in key positions on that smartphone, on the OS. Good examples are the Gmail app or search. And it's those contracts that are being reviewed, a divestment, according to our sources, of Android. The easiest way of putting it is, imagine if someone said to Apple, you make the iPhone, but you must divest iOS. This is the reporting. I don't know how that would work in practice.
Jen, come on in. Any thoughts?
Yeah, I'm thinking about this, and the thing about Android, and the reason DOJ might be thinking about that is because I said before, this judge seems to be really adhering to that Microsoft opinion from the year 2000. It was an appellate court within his circuit. And in that case, the court said it can be easier to divest an entity when it was once independent and it was acquired rather than developed internally. So Google developed Chrome internally, but it acquired Android. So the thought here by the DOJ may be, we might have a judge that's more amenable to the idea of divesting Android rather than Chrome. I still don't think, though, that this judge is going to go that far. And the judge said these default agreements are illegal, and they're depriving the entities of data. So it seems to me to fix those two things, you prohibit those illegal agreements and you force share the data. It seems to me those are the most straightforward fixes for what the judge found was wrong. And I should also say that what the Microsoft court said is you have to have what's called really significant causation to require a divestiture. And that means the judge has to be pretty convinced that but for Google's conduct, it would not have the position in the market it has today. And I don't know that this judge got there. This judge lauded Google's innovation and ingenuity in developing the best search engine that's out there. And he didn't say it was only because of these default agreements that Google has strong share in search and Bing and DuckDuckGo don't. He didn't make the determination that absent those agreements, Google would be much smaller. And I think that's where the decision he would have need to make in order to require a divestiture in this case.
So go ahead.
No, go ahead.
If a divestiture is not required, what ends up being some sort of remedy that the Justice Department demands or that the courts demand?
I think it has to be a variety of things. I think those default agreements that the judge deemed to be illegal have to be prohibited. It means the company cannot pay to have that default search access spot anymore. That's one thing. I think there may be some sharing of data. It may not be all data because there could be some privacy issues, but there's certainly search data that doesn't implicate privacy that Google could share with its competitors to help give them a leg up to try to compete in the future. And I also think that there could be something having to do with AI. Leah Nyland's excellent reporting mentioned that the DOJ doesn't want Google to use its dominance in search in order to get a leg up on AI on its competitors. So maybe something that has to do with AI there. And repeating decision like a choice thing.
That's what I wonder, Ed. Is this all about looking forward to AI, the next wave in terms of technology, and Google's and Alphabet's position in it?
Yeah, to go back to what we were talking about, I guess, web scraper or web crawler, the underlying focus on Alphabet is its work on AI, and that data, some of it is used in the training of the large language models that are powering Gemini. And that's what we're talking about here. You know, I find Jen is so smart. Like, it's such an honor to be on with Jen Rhee. She was in San Francisco the other day, and we met each other in person, and it's just really cool. But I would look at the stock down, significantly in the session, but not draw a causal link directly necessarily. But the point there being that look at the brilliant equities team reporting. We are off 17% from the July 10th high on Google, and a big deliberation is AI. It all goes back to, will Google be able to or not continue with its rate of development and commercialization of AI? Because that's what the stock trading is predicated on.
One thing I think about, and I do remember the Microsoft case, which went on for about 5 years before all was said and done. Jen, how long does this lag, or how long does this go on? Because I do think how this can be an overhang on the stock. You just got about 30 seconds here.
This is going to take a long time. Google will appeal, and I think they'll seek to stay this remedies process pending that appeal. So you're tacking on at least another year to 2 years, and it may also appeal all the way to the Supreme Court. And I think it could get the remedy implementation stayed pending all of that.
Ed, back to what Jen said earlier about possible remedies when it comes to what Google can and can't do when it comes to search, what Apple can and can't do when it comes to search. What would this mean for consumers on the consumer end of things?
Well, I'm going to do my due diligence as a reporter and editor and say that Google will appeal anything that happens, and we don't know what's going to happen, but that is surely going to happen, the appeal. I think that this is the main point in the context of the handset market or smartphone market. It's a small player in a hardware perspective, but Android OS is so pervasive around the world. There are 2 billion monthly active users of the suite of Google apps. You can't just say to the world, the term Google, you're going to have to stop Googling, and I think that's the struggle here for investors and consumers alike. If the DOJ pursued on any path of action, what does that look like for us in the real world? It's very hard to conceptualize.
I can't do that. I'm sorry. I'm already in on it. Hey, one last question to both of you. Jen, I do think about like a case like this. Does it cast a chill on big tech in terms of a reminder that once again, big tech, regulatory, they're watching.
No, absolutely. They're all going to have to be careful. They may get to a dominant position because they've made a better product, but once they're there, there's certain responsibilities that apply, and they're going to be watched carefully for what they do and how they may or may not exclude their competitors. And if they do something that excludes their competitors, they're going to have a very legitimate pro-competitive business justification for it, or they're going to have a lawsuit.
Ed, what are you hearing in Silicon Valley? I'm just curious about how much conversation is going on about this.
Just micro-focused on the presidential election, with particular interest in J.D. Vance because of the continuity of FTC policy. That's what's so interesting about him as an individual. And then how does the Harris-Waltz ticket position itself, read big tech and antitrust, knowing that J.D. Vance has that position? A lot of people talk to me about that, and I think we should probably discuss it more.
Can I just say...
Strange bedfellows, right?
It is strange bedfellows. I mean, we're living in really strange times, weird times, some say, but really exciting. And I got to tell you, it's so cool to have both of you who are super smart to be able to talk about this kind of stuff and really give a lot to our audience. So listen, thank you so much. Really appreciate it. Bloomberg Intelligence Senior Antitrust Litigation Analyst, of course, our Jen Rhee, joining us here in New York City, and out there on the West Coast, watching all things tech, is our own Ed Ludlow, co-host of Bloomberg Technology on Bloomberg TV. Hey, coming up, we saw a story that crossed about a robot, tabletop, Apple.
Mark Gurman joining us in just a minute. This is Bloomberg.
It's 2:40 on Wall Street. I'm Amy Morris. Apple looking for some new sources of revenue. It's moving forward with development of a pricey tabletop home device combining an iPad display with a robotic limb. Now, this device is envisioned as a smart home command center, video conferencing machine, and a remote-controlled home security tool. Shares of Apple are little changed on the upside. Year-over-year inflation reached its lowest level in more than 3 years in July, the latest sign that the worst price spike in 4 decades is fading and setting up the Fed for an interest rate cut next month. We check markets all day long at Bloomberg. S&P 500 up 0.3%, NASDAQ down 0.2%, and the Dow is up 0.6%. The 10-year Treasury yield at 3.82% and the 2-year at 3.96%. And shares of Google parent Alphabet fell on the stock market today amid talk of an antitrust action. Shares of Alphabet now down a little more than 3%. Mars, whose brands include M&M, Snickers, and Skittles, buying food company Kellanova, a $30 billion deal, and it gives it access to brands like Cheez-Its, Eggos, and Pop-Tarts. Kellanova houses brands including Pringles, Townhouse, and Rice Krispie Treats. Shares of Kellanova now 7.7% higher. And some world news for you now. The World Health Organization declaring a fast-spreading Mpox outbreak in Africa a global health emergency. The agency is seeking to contain the spread of the potentially deadly virus. It is a mutated strain which causes unsightly, painful rashes and lesions. That's a Bloomberg Business Flash. Now back to Bloomberg Business Week with Carol Massar and Tim Stenevec.
All right, so appreciate it. Amy Morris there in D.C. Well, as Amy just mentioned, Apple seeking new sources of revenue, moving forward with development of a pricey tabletop home device that combines an iPad-like display with a robotic limb. This story crossed the Bloomberg less than 30 minutes ago. So who wrote it? None other than Bloomberg News senior technology correspondent Mark Gurman, who is in our San Francisco bureau. So happy to have you here. A tabletop robot. What did you find out about it?
Well, let's just take a step back here first. It's really been a while since Apple has done something, amazing, something wholly new, right? I mean, obviously we know the history. We know about the Mac, the iPod, the iPhone, the iPad. Then there was the Apple Watch in 2015. And since then, they've sort of dabbled in new areas. The AirPods, they're a hit, right, for an earbud, but they're not a life changer, so to speak, for Apple's business. They've done the HomePod, which was like their home speaker. They still sell that. It's a commercial dud compared to their other products. Don't get me started on the Vision Pro. I was using...
Wait, you're on a roll.
I was using mine last night. This thing is absolutely mind-blowingly amazing, right? But at $4,000 all in, they're not going to sell many of them. And so they've basically run out of these product categories that is going to generate enough revenue to be a real new business, right? And then they canceled the big one that could have actually changed the company perhaps as much as the iPhone changed them, and that was the self-driving car. I think the cancellation in the self-driving cars and what led to that is going to go down as a business failure like no other, looking back, 10 years from now, unless they reboot that project. Anyways, they've landed on this home device. They're all in on robotics right now. Robotics is the next big thing at Apple. They're talking about humanoids. They're talking about mobile robots to go around your home. Now they're talking about this home device. It's a robotic neck connected to an iPad. It can swivel 360 degrees, bend, move up and down, move around on top of a table or a desk, video conferencing.
Okay.
But it's essentially your first Apple Intelligence device. It's a AI-ified iPad, a fully voice-controlled system that can move around on your table. It's going to be pretty niche, but it's also going to be pretty cool, like the Vision Pro.
It sounds, Mark, like you're describing the Facebook portal, which is no longer sold, and you do mention in your story. Is this meant for video conferencing in the sense of just being able to FaceTime with somebody while you're, doing the dishes, so you don't have to hold your phone and you can move around a little bit?
Well, it's going to do that, but I'm describing a Facebook portal or an Amazon Echo Show that's probably 3 or 4 times the price of those devices. But the robotic arm is going to be extraordinarily advanced, and it's going to use artificial intelligence and machine learning to understand your environment, understand who's talking. So let's say we're having this conversation over that device, and you actually have that device in front of you, maybe I'm on my phone or my Mac, and I nod my head or move it side to side, the display on that device will actually move around and shift to match my head movements. Let's say Carol starts talking to me, that screen will understand that it's Carol talking and turn to face her. So I could see her instead of you, Tim, right? And so it's going to have these pretty cool features that use AI, that use contextual information, that use the camera, that use the robotic arm. And again, having a robotic arm to control and move around this device, that's really expensive and advanced technology, and probably would set the framework and the foundation for future robotics devices from Apple. They really see robotics as where the industry is moving, and really the hardware application of AI. But in order to get there, they really have to get their AI software and infrastructure up to snuff. And I think this is all going to time out together, right? I think we're about 3 years away from Apple's AI efforts really hitting their stride. And I think we're 3 years away from AI hardware at Apple, and I think it'll all mix and match together at the right time for them.
My family needs this as we shift around the phone when we're like, you know, propped up on a table and having a conversation. It's like, where are you? Can you move it? Having said that, what would something like this cost? Do we even know, or it's just too early?
Well, you know, Apple, when they're manufacturing a product or they're developing or designing a product, they come up with a price point that they want to hit, and they really think about that price point from the get-go. But it takes a lot of time to actually get down to that price, right? Just like when they start building a prototype of something, it could be the size of a table, but they needed to get it to the size of something that can sit on your wrist, right? So it's going to take time to get to the price point they want to achieve, which is around $1,000. So if they were to start producing this product today, it would probably cost twice or 3 times that. But by the time they bring it to market, they want to get it down to about $1,000, which is interesting because they've not always been able to hit their price targets, right?
Yeah.
Like, let me give you one example. The iPad, when they developed that device, they wanted to shoot for $500. They got it out at $500. When they developed the iPhone 10, they wanted to get it around $1,000. They got it out at $1,000. The Vision Pro, they wanted to get it out about $3,000, right? Ended up coming in at $3,500 at the base. So let's see what they do here. Quite frankly, I think $1,000 is too much for this device. But you know, we're entering a time at Apple where they're not coming out with these mass consumer new hit products anymore. We're talking about a bevy of sort of these high-priced niche products, and I think you put them all together, you come out with enough devices, you're going to drive that revenue. But I'm not seeing anything that's, you know, effectively a game changer. There are a few other sort of, if you read through the end of the story, there are a few other things there that I think could be needle movers. I talk about 2 of them with detail. One is this gigantic iPad with about a 21-inch screen. That's a foldable iPad. I think that's going to be really cool. And then when that hits the market, when that hits the market, that's going to be the coolest thing Apple has done in a decade. That's going to be really expensive too. I would expect that to be between $2,000 and $3,000. So, you know what? Price aside, this is cool technology, and you know, us tech fans should get excited about it. The other thing they're exploring, we don't know yet if this is actually going to come to market, are glasses. Not AR glasses that we've been talking about, but non-AR smart glasses that replicate many of the features of AirPods. These would be almost the same as the Amazon Echo frames that were updated a couple of years ago, but more importantly, similar to the Meta smart glasses they've done with Ray-Ban over the past few years. Meta has said over and over again, those are really popular. And even Mark Zuckerberg said on their earnings call recently, we simply can't make enough. And so, you know, that's a popular category right now, and maybe something that Apple could to get into as well. Not sure what they would bring unique to the space, but certainly there's a lot of people that would pay a couple $100 for Apple branded glasses or sunglasses.
Hey, Mark, always appreciate you joining us. I know you're visiting San Francisco right now. Come hang out with us in New York in some time and join us here in the studio, because it's always great to have you on the show. Mark Gurman, out with the exclusive. Check it out. It's on the Bloomberg terminal, also at Bloomberg.com, about the latest that Apple's working on when it comes to robotics and AI. Some bold-faced names in there, too, that everybody should have on their radar.
All I can say is I hope my husband wasn't listening, because I'm just going to see him like, oh, I got to buy this. Wait, I got to buy this. Thank God it's like 3 years in coming and some other stuff.
He's got some time. Got some time, right?
Mark Gurman is the best. All right, coming up, a sign of the changing times as mortgage refinancing surges by the most since the pandemic. One more thing right after this.
company news headlines on Bloomberg Radio.
From Bloomberg in Washington, I'm Amy Morris. Candy company Mars is buying food company Kellanova, a deal worth nearly $30 billion. Kellanova brands include Cheez-Its, Pop-Tarts, and Eggo. It had a net sales of more than $13 billion last year. Mars says it'll pay $83.50 per share in cash. The company put the total value of the transaction at $35.9 million. The deal is expected to close the first half of next year. Shares of Kellanova about 7.7% higher. Word that the Department of Justice is considering whether to break up Google is having an impact on Alphabet shares, down right now about 3.2% after a landmark court ruling that found Google monopolized the online search market. The government is reportedly considering whether to dismantle Google, force the company to share more data with its competitors, or put guardrails in place to prevent it from gaining an unfair advantage in AI products. Marriott International reduced its guidance for full-year earnings, citing softer domestic travel demand in China and North America. CEO Anthony Capuano spoke with Bloomberg Television.
Everybody's waiting for September, and if the rate cuts that are expected materialize, that'll be a boost for the consumer. The thing that gives me confidence beyond the next quarter or two is this almost sociological shift we've seen with this appetite for travel, and I think that bodes really well for our business.
Marriott CEO Anthony Capuano on Bloomberg Television. Victoria's Secret's poaching the top executive from Rihanna's lingerie brand to lead the retailer's turnaround. They say they'll hire Hillary Super to replace Martin Waters, who was terminated as CEO and resigned from the board. Shares of Victoria's Secret now 14% higher. And the World Health Organization has declared the Mpox outbreaks in Africa a global emergency. A new form of the virus is spreading. Those are company stories we're following this hour. I'm Amy Morris. This is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, this is Bloomberg Business Week. Carol Massar, Tim Stenevec joining us here in our studio. Sorry, I was looking at that Mpox story. You know what it is?
I knew that one would get you.
I know. Spread to at least 6 African countries. Amy Morris was just talking about it, affecting about 15,000 people, killing more than 500 in the DRC this year alone. The variant was first reported there less than 12 months ago. You and I talk about, come on, I feel like, 4 years off the pandemic, and, it finally feels like some things are back to normal, but there's so many conversations about kind of what comes next potentially. If you talk to people in the medical community, you think about what comes next.
Well, the World Health Organization Director General last called Mpox a public health emergency of international concern. That was back in May of 2022, but that was when cases of a milder strain erupted globally. When the WHO lowered its alert a year later, cases in Africa continued to increase. Now there's this mutated strain of Mpox. It's spread, as you mentioned, to at least 6 African countries.
I feel like for a long time we're going to continue to measure things against the global pandemic, whether it's health issues and so on and so forth, but just every metric. And this brings us to our one more thing today, because U.S. mortgage refinancing surging by the most since 2020 on lower rates, something we talked a little bit about with Mike McKee at the top of the broadcast.
Yeah, the Mortgage Bankers Association refinancing index jumped 34.5% to a more than 2-year high of 889.3. Mortgage applications to purchase a home climbed 2.8% in the week that ended August 9th. It's the largest advance since the first week of June.
Yeah, and what we've seen is basically, if you look at the 30-year, the contract rate on a 30-year fixed mortgage, it eased 1 basis point to 6.54%. That's according to MBA data out today. It showed the rate on a 15-year fixed mortgage dropped 7 basis points to 5.96%. That's the lowest since May of last year. This is something we have talked so much about in terms of the housing market. Again, with Mike, like what's holding it back? Well, some of it has to do with the supply of homes out there, but also folks that have really low rates on their mortgage are less likely to move or do something because rates are so high.
Yeah, Mike mentioned that 80% of homeowners in the U.S. have mortgage rates under 5%. So in order to actually see refis really bounce higher, you're going to have to see a significant decline in mortgage rates to make it worthwhile, especially after fees, for people to go out and refi.
Well, and this is what happens. It's almost like a rate game, right? You have to think about, okay, what do you expect the Fed's going to ultimately do? And we were kind of kidding with Mike. Is it 25 basis points? Is it 50 come September? Which is, we expect some kind of move by the Fed. But if it's not going to be as much, if you're thinking about buying a home, you start to say, okay, maybe we're getting to the bottom, or it's going to be at this kind of level for a while. If I want to make a move, maybe I do it now, because maybe we don't think the Fed will ultimately be as aggressive. And only time will tell based on the economic statistics.
And interestingly enough, well, not so interesting for people who are looking for homes, in many markets, home prices have continued to go up even as mortgage rates have gone up over the last couple of years. That's typically not supposed to happen.
Yeah.
But we have such a structural deficiency of the number of homes that are needed in this country right now that home prices are still really high.
Yeah, exactly. Here's one other interesting statistic. At 48%, excuse me, of U.S. markets, an income of at least $100,000 is required to afford a mortgage with a 10% down payment. That's according to the NAR. First quarter, that was the case in 40.7% of the nation's real estate market. So throwing some stats at you. Would you buy that Apple tabletop robot?
Sounds expensive right now, but I love the idea, especially for FaceTime, with grandma and grandpa.
I love that
Follow
idea.
the kids around and they can.
I'm constantly with my
that's pretty
husband,
cool.
like the phone, like he puts it, he's like holding it and then it gets lowered. I'm like, I can see your forehead. Honey, if you want to talk to me, I need to see the face. That's just how it goes. All right, everybody if you are watching on Bloomberg Television, the close is coming your way in just a moment. For those of you who we hope stay with us on Bloomberg Business Week, we have a lot coming up, Tim.
Yeah, we're going to talk about an update from the campaign trail as Kamala Harris is expected to release her economic agenda in just a couple of days.
Yeah, and a cool thing in the EV market. Don't go anywhere.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
All right, everybody, we are just about 1 hour away from the closing bell. Welcome back to Bloomberg Business Week. Carol Masser along with Tim Stenivek live in studio. Tick-tock, 60 minutes.
Hey, it's all happening. We have a great program coming up over the next couple of hours. What's that, Carol?
I don't know.
It's a bird.
It's a plane.
It's a plane. It's a new breed of EVs that can go 700 miles and no.
I'm in.
No.
What?
You can't be in.
Okay, I'm not in.
Unless you go to China because they are not available here in the U.S. At least not yet.
Come on, man.
Hey.
What?
Stellantis. They're working on it, okay?
They're working on it. Sounds like our producer, Paul Brennan. I'm working on it. I love that. I love when he says that. All right, can you, man, we talked about doing a test with each other. Can you name all three branches of the government? Of course you can.
Of course. Yeah, executive.
Yeah.
Legislative.
Yeah.
Judicial.
Well done, well done.
Thank you.
Nearly
I didn't know you were quizzing me on that.
Nearly a fifth of Americans can't even name one. So we're going to get into the importance of civics with the author of a new book.
Hey, speaking of civics, we're going to get an update from the campaign trail because Vice President Harris is set to unveil her economic agenda in the coming days. So what does business look like under a President Harris?
All of you in the control room, you know the three branches of the executive, right?
No,
Yes.
it's not three branches of the executive.
I mean, the three branches of government. Okay. All right,
Carol.
failure. I'm back to school. All right, let's get a check on the trading day and get to someone who's going to save me. Amy Morris, over to you in D.C.
I'm here for you, Carol. It is a done deal in the snack aisle. It's Carol's favorite story. Candy maker Mars says it's buying Kellanova for $83.50 a share. That values the snack maker at nearly $36 billion. We get more from Bloomberg's Dasha Afanasieva.
For Mars, the upside is that they're diversifying away from cocoa-based snacks, and they're also got geographic spread by acquiring these non-chocolate snacks like Cheez-Its and Pop-Tarts and Pringles.
Bloomberg's Dasha Afanasieva says Mars is paying a 30% premium for Kellanova at a time a lot of consumers are turning away from fatty snacks. Kellanova shares now 7.7% higher. And the impact of the pandemic-era inflation breakout continues to weigh on American families, as we learn with Bloomberg's Vinny Del Giudice.
Inflation may be finally in a downward trend, but wage growth isn't keeping up with the cost of living. Weekly and hourly earnings adjusted for inflation decelerated from a year earlier in July. Both measures are running below the 10-year average based on government data tracked by Bloomberg. Nonetheless, that's better than 2021, 2022, and early 2023, when inflation-adjusted wages were falling as inflation surged. Vinny Del Giudice, Bloomberg Radio.
And we checked markets for you all day long at Bloomberg. The S&P 500 up 0.3%. NASDAQ down 0.1%, and the Dow up 0.7%. The 10-year Treasury yield at 3.82%, and the 2-year at 3.82%. 0.94%. That is a Bloomberg Business Flash. Now back to Bloomberg Business Week with Carol Masser and Tim Stenivek.
She saved me.
She did.
She always does.
Thank you, Amy. Do appreciate that. Well, as we just heard, the S&P 500 in the green right now, higher by close to 0.4%. We can round that up. It's headed toward its fifth straight day of gains. It's the longest winning streak in more than a month. What a difference just about 8 trading days makes, Carol.
It's a little wacky.
Yeah.
It's a little weird, as they would say. Alexandra Semenova is with us. She's Bloomberg News equities reporter, joining us here in our Bloomberg Interactive Broker studio. A couple of things we want to get to, but first of all, how are you thinking about the trade today? After what? It's only like a week and a half ago that we all were feeling very differently.
Yeah, first of all, great to be on with you guys as always. Looks like, CPI came in line with what everyone was expecting, which is a good thing. Markets aren't really reacting much to it. They're kind of waiting for the next catalyst, which is the Jackson Hole meeting, for more direction from the Fed on the extent of rate cuts that we might see in the fall, and then of course NVIDIA's earnings reports. But so far, after that blow up that we saw last week, we're kind of back to humming along. This rally is kind of moving higher, and that was to be expected because even though there was some panic selling last week, the fundamental picture didn't really change. Earnings were still coming in good. We did get that one scary jobs report, but it's not like we're getting mass layoffs.
And I'm going to say, last week while you were out, we kept leaning on Gina Martin-Adams and the team to say, okay, tell us what's going on with earnings. Tell us what's going on with earnings estimates in terms of looking forward to get an idea of what the fundamentals were all about.
Right, exactly. We're seeing earnings growth expand beyond the so-called Magnificent Seven companies, which is expected to bode well. We're going to see, some of the companies that were laggards start to move higher after big tech kind of dominated market gains. So all the signs are pointing to the fact that this rally can continue for the rest of the year.
Does everybody think the rally can continue for the rest of the year?
Well,
I'm thinking of somebody who you've written a lot about.
There's, one particular person who has reemerged to say that, he might have been right. He looked very vindicated, of course, last week. He was one of the most viewed people on the Bloomberg terminal during that sell-off that we got. And it was very interesting. A lot of people on Wall Street were talking about the fact that, look, as soon as Marco left, that kind of possibly marked a top. And so far it did. It did mark a local top.
Yeah.
But, we're going back on. He
the Marco you're talking about is Marco Kolanovic.
Marco Kolanovic, indeed. One of the most famous names on Wall Street. When he talks, people listen.
And long time at J.P. Morgan, correct?
Indeed, 19 years at J.P. Morgan. He became known for his calls on volatility. He correctly called major flash crashes, not major ones, but volatility-focused crashes of 2015, 2018. In 2020, he was one of few people who predicted a rebound in stocks, after the COVID sell-off. So he had a lot of very prescient forecasts that made him popular. But recently, he's been very wrong. He was bullish throughout 2022's equity rally.
It's hard to be a bear in a bullish market.
Indeed, he was bearish through, last year and this year. And the thing with him is, the market can humble a lot of people. You can have a lot of poor calls, but he is still someone who has made enormous contributions to Wall Street. He is an Institutional Investors Hall of Fame. He has a PhD in theoretical physics. He is an incredibly smart person who has created trading strategies for hedge funds, done enormous research on volatility. So people listen when he talks. And here he is back on social media now doing his own thing. We'll see what happens next for him.
Well, we're going to be certainly watching, and it's been really great to follow your reporting on it as well, especially in this market environment. Alexandra, thank you so much.
Thank you, guys.
Alexandra Semenova, Bloomberg News equities reporter, right here in studio.
Okay, so that's what's going on Wall Street. Now what's happening a little closer to K Street, I guess we could say. Vice President Kamala Harris is set to roll out details of her economic vision in North Carolina on Friday, with a focus on easing voter concerns about inflation in a swing state Democrats aim to carry. Over the weekend, she was in Phoenix and she gave a preview to reporters of her focus. Harris was saying over the weekend that she's going to be focused on the economy and bringing down costs to strengthen the economy. Apologies for not hearing that sound. To that end, Harris will speak in Raleigh, North Carolina about, quote, her plan to lower costs for middle-class families and take on corporate price gouging. That's according to a campaign announcement.
Josh Wingrove is Bloomberg News White House correspondent, and for Bloomberg Business Week, he writes about what a Harris presidency would mean for business and the economy. Josh joining us from Washington, D.C. By the way, his story featured in the forthcoming issue of Business Week magazine magazine coming out monthly. You could read it now on the Bloomberg and also at bloomberg.com/businessweek. Josh, so glad we could talk with you. What do we know about a Harris presidency? Can we just assume it's Biden 2.0 or no?
Pretty much, and I want to meet you halfway on something earlier. There kind of are two branches of the executive right now, in a way, because
well said.
Right. So Harris is running as an incumbent, but not really as an incumbent. And remember, back when she was a senator and when she was running for president the first time in that primary that Joe Biden won, she was really on the progressive end of the spectrum, and stuff that she proposed looked a lot different from stuff that Joe Biden would ultimately propose. And so the question is, like, which Kamala Harris is it going to be? Is it the sort of tough on crime California Kamala Harris? Is it the progressive wooing Senator Kamala Harris? Is it the vice president in the Biden administration? And it looks kind of like more like the third one with sort of sprinkles of that. Her starting point is whatever Biden administration policy is. For instance, she's sticking by the call to raise the corporate tax rate from 21 to 28%. Remember, next year is going to be all about taxes here in Washington, a big fight over that, whoever wins the presidency as well as both chambers of Congress. And so she's going to sort of try to put some top spin, shall we say, on Biden policies with this announcement on Friday. I would temper expectations. I think this is important. Do not expect some giant PDF from her on Friday. It's not going to happen. But she's going to, give this speech and I guess lay out more of a rhetorical guardrail, shall we say, I think would be a fair expectation from her on the push to, go after costs. She's been saying she will do it on day one. Republicans have kind of been teasing her for that because, of course, she doesn't have to wait to day one of any administration to do anything. She's the vice president right now. So they are pushing on costs now. She's, I guess, going to say that she'll redouble those efforts.
You bring up a really good point, Josh. How does she put some daylight between the Biden administration's policies and what she's proposing, given that she is vice president currently? And a lot of Americans, if you look at surveys, are not so happy with the economy.
Totally, but for whatever reason, and voters are fickle, funny creatures sometimes, they don't blame her as much as they blame Joe Biden. So simply being his deputy has bought her some elbow room to run both as a change agent and as sort of a steady hand. She's trying to have her cake and eat it too. But what it shows is that voters are open to, like a tweak essentially, and they are giving her credit that she would do things slightly differently than Joe Biden with her at his side did them. So that's sort of, a big one. All these other sectors, meanwhile, are trying to get their foot in the door. For instance, crypto has exploded in influence since Kamala Harris was, really writing a policy manual from page 1 or at least page 2 or 3. That is a sector, for instance, that we're told we do not expect some sort of big rollout in. It's going to be more Main Street focused, more entrepreneurship focused, and individual sort of family focused. Remember, she's a big advocate for the child tax credit. That could be a big one next year as well. I wouldn't be surprised if we see her pushing for that in those talks.
You say child tax credit, and I think of J.D. Vance on the Sunday shows talking a little bit about, was it the Sunday shows? Oh, sorry, Josh. All the interviews are getting kind of like...
Yeah, I think they're blurring together here, too.
Yeah, okay. So I won't say, I don't know when he said it, but he did talk about it, which was interesting given that that's a policy that the Biden administration has pushed and traditionally one that has been a talking point for Democrats. So there's not so much daylight between at least that policy with Harris and Vance.
Yeah, and this after Harris came out and said no tax on tips, which of course was something that Trump proposed.
Exactly.
And they're trying now. Joe Biden supports that too. Funny how that works. So they're picking each other's pockets a little bit right here on policy, and part of the reason is because this is going to be a very compressed campaign. You normally don't roll out a lot of policy as a presidential campaign past, say, Labor Day-ish. And so for her to start her campaign functionally, 2 or 3 weeks ago, as I check my calendar here, what day are we? What month are we? What's going on? She sort of tried to cram things out the door in the next couple of weeks. And that, I think, lends to her approach of not totally upending this, right? They're comfortable more or less with what the themes that they're talking about. Lower costs. They want to talk about expanding the cap on drug prices that currently applies to some seniors on Medicare. They want to talk about expanding required caps on insulin prices, $35 a day to some people. Voluntarily, the drug companies extended it to a lot of other people. Things like that. She's not going to be kind of jumping off the ropes with any grand new proposals, or at least that's the signals we're getting. I guess time will tell. But Friday is the beginning of it. We expect more policy speeches in the couple of weeks to come. And of course, all eyes on Chicago next week for that big convention.
Where is she on corporate America, our bread and butter? Like I think about our audience, right? And companies and executives and CEOs who are running, largely what we cover is the publicly held companies, but we do a lot of startups and smaller companies, a lot of small business as well, venture. Is she a friend or foe? How is it again a continuation? How are we expecting she will kind of embrace or not embrace those groups?
Here, and I should say off the top, I'm reading tea leaves, so it's a little bit of that, admittedly. Yeah. But I do think we'll get a bit of a break here in two directions. On the one hand, everyone who knows Kamala Harris will tell you her time as an attorney general is sort of baked in her bones. So if you are a company that is maybe on the edge of an enforcement issue or already dealing with enforcement or, dare I say, antitrust issues, I think there's a reasonable expectation that Harris might have a faster trigger finger on enforcement actions than Biden does, or at least as fast as one. She believes in using the tools of government when she thinks people have been wrong. We saw that in the massive settlement with the banks over housing issues when she was in California. But on the flip side, she comes from San Francisco. She's raised a lot of money from San Francisco. She's sort of seen to be a little more open to the tech sector more broadly. So I think the way of answering this is if you're a business that is, above board, you might have a bit of a gentler ear with Kamala Harris than you do with Joe Biden. But if you're someone tiptoeing on the line or stepping over it, the AG Harris might sort of erupt out of the Oval Office and come after you. So I think it's a bit sort of twofold on that. I'll note there are advocates for her VCs for Harris, for instance. So there is support from the business community. She continues to do really well with fundraising. And more broadly, as opposed to the tech sector, I would go back to that thing. She does want to raise the corporate tax rate. Donald Trump wants to lower the corporate tax rate. She wants to raise it by about 7 points. She wants to drop it by a point. That's a pretty big difference. But of course, a lot of that will depend on who wins the House and who wins the Senate. Our frequent guest, Frank Luntz, has been on Bloomberg Airways recently saying that he thinks Harris has a lot of momentum right now and that the chances of a potential Democratic sweep presidency in both House and Senate are rising. So it's a very dynamic moment right now. A lot of good polls coming up for Kamala Harris. And all that is to say, if you're winning and you have momentum, you probably don't want to roll out a lot of controversial policy to sort of, throw a rock under your wheel.
I just want to say, Josh just mentioned two branches of government, Carol, not three. So,
Josh and I are on the same page. I'm just going to tell you.
He said, totally. Both parts of Congress. Okay, that's one branch. That's the legislative branch. Okay, and then the presidency. That's the executive branch. Okay, got it.
We're getting there. We're working our way. We're Schoolhouse Rock when we need it. Having said that, I do think about. I mean, she's waited on the Fed. I also think about like the people she's surrounding herself with. Josh, is that giving us an indication? Because it sounds like she's leaning on maybe some Biden people, maybe some Obama people. Like what that kind of says. A presidency, what kind of presidency she might have, and what kind of policies really matter to her.
There's a lot of continuity. It looks like from the big economic names. For instance, the people that are advising her on the economy specifically include Mike Pyle, Brian Deese, Bharat Ramamurthy. These are all people from Biden land. Ramamurthy also from Elizabeth Warren land, for lack of a better phrase. We are told that her list of potential Treasury secretaries includes names that would have been on Biden's list for potential Treasury secretaries, including Gina Raimondo, Lael Brainerd, current Chief of Staff Jeff Zients, and Wally Adeyemo, the current Deputy Secretary, who Harris has worked a lot with. So all that is continuity. But in terms of her people, her policy people, and they're not really totally, eco people per se, although one, Brian Nelson, comes from the Treasury Department, very high-ranking official there, particularly in the sanctions space. She's got a longtime policy aide as well, Renee Kozloglu, who is in the mix right now advising her. So Harris relies on her people. There's not like a, Larry Summers type of figure right now, so far as we can tell, so far has been reported, that is advising her on the economy. So I think in terms of the people staffing those offices, it's a lot of continuity from Democratic circles more broadly, as opposed to just the economy. You're pulling a lot from Obama land and Clinton land, more than Biden land. I think that signals that she wants to shake things up a little bit and maybe hints at, if I want to take a cynical view, an Achilles heel of our field sometimes, maybe she doesn't want to leave all eggs in the Biden basket. She's taken over the campaign. Everyone is singing from the same song sheet, kumbaya moment, but it seems like she wants some people who are not Biden people in the fold on her behalf.
Maybe she's doing it her way, cue Frank Sinatra a little bit here, right?
Totally.
Yeah.
And the polls are right. I mean, it's the things they're I'm sure looking at the polls and thinking, hey, we got to be doing something right.
We'll also see what happens next week in Chicago, Carol, as the DNC gets underway.
Yeah, absolutely. And I also do think, as Josh was saying, and what the polls are saying, like if it is a real Democratic sweep, what it means for Congress, and if you have a Democratic Congress and a Democratic president, what that means for policy. Josh, such great stuff, as always. Josh Wingrove, White House correspondent, Bloomberg News. Check out his story coming up in the new issue of Bloomberg Business Week. This is Bloomberg.
It's 3:21 on Wall Street. I'm Amy Morris. Apple seeking new sources of revenue. It's moving forward with the development of a pricey tabletop home device, combining an iPad-like display with a robotic limb. Apple shares little changed at this hour. Underlying U.S. inflation eased for a fourth month on an annual basis in July, keeping the Federal Reserve on track to lower interest rates next month. The so-called Core Consumer Price Index increased 3.2% in July from a year ago, still the slowest pace since early 2021. We check markets for you all day long here at Bloomberg. The S&P 500 up 0.2%, NASDAQ down 0.3%, and the Dow up 0.6%. The 10-year Treasury yield at 3.82%, and the 2-year yield at 3.95%. Mars, whose brands include M&M, Snickers, and Skittles, is buying food company Kellanova in a nearly $30 billion deal. That gives it access to brands like Cheez-Its, Eggos, and Pop-Tarts. Shares of Kellanova are 7.7% higher. That's a Bloomberg Business Flash. Now back to Bloomberg Business Week with Carol Masser and Tim Stenovec.
Still hungry, Amy.
What do you want, Carol? I mean, we got Cheez-Its here at the office.
I know, and it's really not the kind of stuff I'm really like the popcorn or peanut girl, you know that, or banana.
Yeah.
I'm just saying.
We got a lot of good stuff. We're lucky with the pantry here at Bloomberg HQ. Okay, so you're familiar with EVs, Carol.
I am.
You're familiar with hybrids.
Yes.
What about so-called EREVs?
Walk me through it.
Okay, it stands for Extended Range Electric Vehicle. I'd never heard of it. They're EVs that also have a small internal combustion engine. Before you say, wait, that's a hybrid.
Yeah.
No, it's not a hybrid because the sole purpose is to automatically recharge the battery. It gives them a whole lot of range. We're talking about more than 600 miles on a charge compared with the typical 300.
So a little motor to charge the battery.
That's it, the little motor, the little engine to charge the battery.
The little engine that
Yeah, the little internal combustion engine. I didn't know about him until I read Keith Naughton's latest story for Bloomberg Business Week.
We kind of adore Keith Naughton for many reasons. Truth be told, we learn, Keith.
Well, one of the reasons, Keith, that Carol and I don't know about these is because you cannot get them in the U.S. right now. You got to go to China.
Not yet.
Yeah, not yet. That's key. Okay, explain how these things work and how they're different from hybrids, and why you can't get them in the U.S.
So, a traditional hybrid like the Toyota Prius that's been around for over 25 years, it's primarily run by the internal combustion engine. That's what turns the wheels. And then the car's electrical system and braking, kinetic energy from braking, recharges the battery that's also in a hybrid that supplements the internal combustion engine. But the driver in a traditional hybrid is still the internal combustion engine, and the battery is sort of the backup. These extended range electric vehicles, EREVs as they're known, kind of flip the script on that. They are primarily driven by the battery. They run on electricity about 95% of the time. However, there is a small internal combustion engine on board that is not connected to the wheels. It's only connected to the battery, and it recharges the battery. So if you're driving on a long trip, 300 miles or more, you're going on your vacation, and the battery's running down, the internal combustion engine automatically clicks on and recharges the battery. You don't have to do anything. And you also don't have to stop at a roadside charging station and sit there for a half hour or more while it charges. So it extends your range, up to 700 miles.
This sounds like, okay, Holy Grail, found. This sounds brilliant, is it not?
It is a very smart solution, and it especially addresses the things that have become roadblocks for pure electric vehicles. Range anxiety, we've all heard about range anxiety, right? That's a big issue in America. It's a big country with not a lot of charging stations yet. And price, because these EREVs don't require as big a battery because you have that internal combustion engine backup. So the battery is about half the size. Well, that lops $4,000 off the price of the car compared to a pure EV.
Okay, Carol's in here.
More affordable.
Carol's in here just saying, brilliant, brilliant, brilliant. Yeah, you might be excited about it, but I know some folks who aren't. The Sierra Club, for example, as you point out in your piece.
So not so great for the environment?
They're saying it doesn't go far enough.
They want zero emission vehicles. They don't consider the Toyota Prius a green vehicle anymore. They believe that if you're not zero emission, you're not helping to solve climate change. Toyota, by the way, has a very different point of view on that. And, when you think about what goes on with these vehicles, they are mostly running in electric power. That means they actually emit fewer, global warming gases, carbon dioxide, than a Prius does. So, it is not a pure EV, it is not a zero emission vehicle, and that is the issue the Sierra Club has. But it goes a lot farther than traditional hybrids do right now.
What are the emissions on what are they called? EREVs. EREVs. What are the emissions on them, Keith?
Well, Carol, it kind of depends on how often that internal combustion engine goes on, how often you take a long enough trip to nearly drain the battery and the engine has to kick on. So that's pretty rare. I mean, what automakers tell us is, the average, daily commute for Americans is under 60 miles. So, when you have a 700-mile range on your car, you're not going to get to that internal combustion engine need until deep into that range. So, this, as Jim Farley, the CEO of Ford Motor Company, says, these cars are running on 95% electricity. So, that's far fewer emissions than you would get from a hybrid.
Hey, Keith, help me
Better
understand.
than what I'm doing right now. Better than what you are doing, Tim, right now.
What, my Subaru?
Sure.
Just saying.
Yeah.
Same with me.
I
Anyway,
know.
go ahead.
Still got nowhere to charge in New York City, like, parking on the street.
little
but it's a little bit of a niche issue that only affects New Yorkers, and New Yorkers don't really have cars. Anyway, we're not talking.
But this addresses that, Tim. I know you have a question, but that would address that. The city dwellers, the apartment dwellers who don't have a garage with a charger overnight, they don't have to be plugged in every night.
I love it.
Cars go for a very long distance.
Before I ask you how I get one, which is a long answer because it involves many years.
Moving.
I'm curious about efficiency and when that gas motor does kick on to charge the battery. We think of efficiency when it comes to internal combustion engines here as miles per gallon. How many miles per gallon in battery life do you get when that gas engine kicks on to charge the battery?
Yeah, I don't know the answer to that question, Tim. It's a good one, but again, it depends on getting to that point where you need the gas engine to click on. I talked to one person for the story who was over in China and rode around with a friend who had an EREV, for the entire time he was there, and they drove all over the place, and the gas engine never came on.
It's amazing.
I think that's pretty cool.
All right, so here's the question, Carol.
Hurry up, because I got another one.
How do you get one? You got to go to China for now, right?
You got it.
Yeah, move to China, but they are coming. The first one will arrive in the U.S. next year. Stellantis, the Chrysler parent company that also makes Jeep and Ram pickup trucks, has an EREV version of its Ram 1500 pickup truck. They're going to call it the Ram Charger.
Tim is such a pickup truck kind of guy.
Such an easy thing to
I'm
park
just
on
gonna
the
tell
streets of
you.
Brooklyn.
No problem there.
Yeah.
Anyway, go ahead. Good with the car seats too for the kids. Anyway, go Keith. Go.
So Stellantis says the Ram Charger will have a driving range of 690 miles. Wow. And they say it's being built, in their words, to pull in an entire skeptical demographic into the electric age, because this seems to be the answer to mainstream buyers' concerns about electric vehicles.
You know what I love in your story, you say America ceded the market for EREVs to the Chinese just as it did a decade ago with battery technology, which China now dominates. I just think about the mistakes that maybe we make as a country, right, in terms of thinking about the technology that we need to be focusing on. And I do wonder, will the U.S. catch up? Is this the way really forward?
It's an excellent point, Carol. General Motors actually pioneered EREVs 15 years ago with the Chevy Volt. I don't know if you remember this car, but it was a small sedan that ran primarily on battery power and had, an onboard internal combustion engine to recharge the battery. They did that. It didn't sell that well. It was expensive to make, so they lost money on every car they sold, and they eventually pulled the plug in 2019 as they were moving away from hybrid-like vehicles and going to pure EVs. GM's now bringing back plug-in hybrids in 2027, but they won't commit yet to saying it's going to be an EREV. So far, only Stellantis, even though Jim Farley, as I said, expressed all sorts of enthusiasm for EREVs. He has in a couple of different forums since he came back from a visit to China in the spring. Ford doesn't have one that they say is coming yet. Some of this could be related to regulation. It's not clear yet how the U.S. regulators will treat it. It probably won't get the same kind of benefits that a pure electric vehicle will, the $7,500 tax credit and so forth.
Yeah.
So there's a little reluctance from U.S. automakers to field these things.
Yeah, I do wonder, though, something like this, how it might move people to actually say, oh, I can get that. That makes more sense to me. Having said that, you understand this industry so well, and the cycles and the challenges and the move that we've seen over the last few years into EVs in a big way. Do you think this is what we will ultimately see all of the big American automakers focusing on, and maybe it takes a year or two, but this is maybe the route forward?
It does seem like an ideal solution for America, where we have the most range anxiety. And these things, this technology works the best on the vehicles we love most, SUVs and pickup trucks. It lowers their weight, it extends their range. It just seems like a technology that would actually have a consumer pull instead of a regulatory push, which is what we've seen with so much green technology. Everyone I've spoken to about this technology, they're like you guys. How can I get one? You know, people are telling me about the story that, yes, they've read about them and they want to know where they can find one. So it just, Jim Farley calls it an in-between solution, and it is. Maybe it's the bridge to the electric future, whatever. But it seems like something that would resolve a lot of the issues that people have with electric vehicles, but still get them to drive one.
And better than a hybrid in terms of impact on the environment.
Yeah. So Keith, if okay, we could get the Ram next year potentially. When's Jim Farley at Ford going to have something out for us? Or is there a chance that we could get some of these Chinese vehicles in the U.S. Anytime soon? I think the answer.
Have you
to
read
that is
headlines
no.
lately?
Yeah.
Seen an election?
I mean, I also read Keith's story, and at the end he talks about this.
Yeah, so President Biden wants to put 100% tariffs on Chinese EVs, right? And on Chinese cars in general. And Donald Trump wants to be even tougher. So yeah, getting the Li Auto L6 or L9 that I cite in the story and have pictures of, which do wonderful things beyond just having this great range. Getting them here anytime soon, not likely. So it's really up to the automakers in the United States, not just the U.S. automakers, because that would just be GM, Ford, and Tesla, right? But the automakers who operate in the United States, Toyota, Nissan, the Germans, you know, all of them. And by the way, BMW had one too, called the i3, that then they stopped making. So they know how to do it. They just have to come back into the market with it.
All right, everybody, for your barbecue this weekend or next cocktail party, talk about EREVs and read the story.
EREVs.
Unbelievable stuff. I love it.
Very cool.
This to me sounds like Answer.
All right, I can see you buying that Ram.
Keith Naughton, thank you so much. Bloomberg News auto reporter joining us there in Detroit. Coming up next, we drive to the close in a day where markets are a little changed. It's coming your way in just a moment.
It's 3:40 on Wall Street. I'm Amy Morris. Stocks are mixed. Let's go to the first word breaking news desk for today's afternoon call. Here's Bill Maloney.
And good afternoon, Amy. That's right. U.S. markets are trading mixed right now, with the Dow currently higher by 224 points. The S&P's gain 11, while NASDAQ is lower by 0.3%. The U.S. 10-year yield at 3.83. Gold is down 20 points. Oil is also slumping. And Bitcoin, that's lower by 2.8%. Regarding the main 11 S&P sectors, leaders were financials and energy. Only consumer discretionary and telecom were in the red. And leaders to the upside in the Dow, Home Depot and American Express, while Intel fell 2.9% and led to the downside. In deal news, Mars to buy Kellanova in a $36 billion deal. And in the biotech space, Gilead's liver disease drug won FDA approval. Wrapping things up, Cisco reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Amy?
All right, thank you, Bill. And to hear live breaking news over your Bloomberg, type SQUA on your Bloomberg terminal. And that is your Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, 18 minutes left to go until we wrap up the Wednesday trading session. Bouncing around a little bit, just a little bit lower, as you just heard from Amy on the NASDAQ 100. S&P, though, on track for its 5th consecutive day of gains, and we haven't seen that in some time. I had it at the top of our broadcast. What was it?
5 straight days.
Longest winning streak in more than a month.
Yeah, 5 straight days for the S&P.
You got it.
Okay, all right.
Yeah.
I listen sometimes.
I know.
Let's go to Montreal.
Let's do it.
Should we go to Montreal?
I would love.
It's where we find Dominique Lapointe, Director of Macro Strategy for Manulife Investment Management. Dominique, how are you?
Pretty good. Yourself?
We're doing pretty well, trying to make sense of sort of the shift in tone that we saw. Although I was on vacation, as now everybody knows.
Yeah, there's no shift in tone for you. But.
Yeah, I mean, from last week to being up 5 days in a row, the S&P 500. I don't know, like, people aren't talking about a 75 basis point emergency rate cut anymore.
No.
What are you keeping an eye on?
Yeah, well, I think like what this morning's CPI data told us about the market function or reaction function going forward is that like inflation maybe is not front and center anymore. Except housing, which was a little hotter than expected. The rest was what the consensus was expecting, which is very few inflationary pressure. So I think that the market and the Fed, rightly so, has shifted their focus on the labor market data, which have seen, I'd say, marginal sign of weakening. And also on the consumer side, retail sales tomorrow will be very important because that's where we have yet to see any sign of a crack or a slowdown, unlike in other areas of the economy.
As someone who oversees macro strategy and macroeconomic, financial market research, all the things, when you get up every morning, what is it like the first thing you really kind of want to know that's going on in the world when it comes to the global economy and the global market situation?
Well, we always watch what happened overnight. So especially in an area where there's a lot of movement in global central banks. So for instance, when we wake up and we saw that the Nikkei is down by quite a bit, we look at the Japanese market. And then at the same time, as we think that China is not necessarily reaccelerating, we're going to watch the Chinese data to see how it will impact global trade. But more or less, what we can say from that is the global markets still follow most of the time the U.S. development. So when I wake up today, I'll look at the global markets, but then I'll prep up for what sort of U.S. data is going to come in because I know that pretty much regardless of what happened, except big exceptions like Japan, the market will shift after we get some important data or some Fed speakers going on.
Do all roads really still point to the United States, or what happened with the yen carry trade remind us that not all roads point to the United States? What happens in the Japanese market and a shift in what they are doing really matters, certainly for investors.
Yeah, it did, for sure. But this was sort of once in a decade move, I would say. If you look at one good approximation of how the unfamous yen carry trade was unwinded, it probably just happened 2 times over the past 3 decades, right? So the subprime crisis of 2007 is an instance when we saw such a move in short covering. And then you have to go back to 1998, probably after LTCM collapsed, to see such a short covering. So this was a big event. But once again, when you look at the data, it does seem to suggest that some of that trade has been unwinding. And so back to focus will be, again, the domestic U.S. data, because once again, the U.S. is what's driving most of the global economy. If the U.S. undergoes into a recession, the global economy will have a hard time staying afloat.
Do you see signs that the U.S. could go into recession anytime soon?
Well, at Manulife, we've always been more pessimistic than the consensus in the market on this. So it's been a couple of months that actually, for at least the time I was there, the market and the consensus has moved closer to our view of the U.S. economy. So we still think that we're going to go into a pronounced slowdown, right? And that might involve 2 quarters of negative real GDP growth. So that would imply like a very shallow recession. Maybe the unemployment rate will go to 4.7%, which is our point forecast. But at the same time, you know, it's nothing like 2008, 2009. We don't see the same kinds of financial imbalances. But all I'm saying, though, relies on the fact that the Fed should start cutting in September, right? And even in our opinion, maybe they should have started cutting last month in July. But if they do so at a gradual but constant pace, we could say that the worst of the possible outcomes will be avoided.
How do we whittle all of this that you are saying down into investable advice?
Yeah, so we're moving a little more defensive right now, and not necessarily because we have this very sharp correction. Actually, we'd be buyers if there was another large correction happening after retail sales tomorrow or another data point, right? But at the same time, when you look at earnings for the second quarters, companies report still good growth. Surprises have been strong, but then you look at where the economy is going. I don't think that estimates are priced in for a consumer slowdown. That's where we're expecting, right? And so that means that probably we've seen the top for the S&P for this year. And when we look at our sector preferences, we shift a little more defensive, and we're going to gradually move towards more safe assets, adding on a little more government bonds. That was probably a good move to do over the past couple of months. And we're watching credit. Credit has still performed well, but we're on watch sign over credit.
You said you've seen the top for the S&P 500 so far this year?
I think it's like looking at where the data might involve and looking at where profits has evolved and not necessarily reacted to where the consumer would go. It's possible that we get negative surprises on economic data that would translate into a reversal in valuation and at some point lower earnings. So that would imply that not sure we're going to see other tops.
Big tech. Oh, big tech. Stay, buy. You said, you know, would be a buyer of stocks after another leg down. Does that include big tech, or where would you be buying?
Well, it depends on the magnitude of the correction. What I mean by that is when you see a very large reaction like we've had to the NASDAQ following the Fed and the non-farm payrolls, right? You look at this move and you're thinking this might be overdone, because when you analyze the details of the non-farm payroll, it wasn't great, but it was not suggesting that the economy was about to collapse. Actually, it was no layoff. It's just that employment growth has been slow. So to us, it means that it's an overreaction. And what I mean by that is, maybe you want to buy at this point from a tactical perspective, but more from a strategic perspective, you're looking at earnings growth from the big tech. They've been revised down a little bit, so it's not something that we would stay away from, but it's also other parts of the S&P 500 where the market actually expects earnings growth to accelerate, and this is where we're a bit more skeptical considering where the economy is going.
All right, I think we're going to leave it on that note. Hey, listen, great to check in with you. A lot of macro things to certainly keep on our agenda, and you can see that's what investors kind of go from, certainly, as he said, U.S. data point to U.S. data point.
I mean, we're already halfway through August. So we got September, October, November, December. So 4.5 months to go.
Slow down. It's too much.
What's going on?
I know. Well,
it's like, yeah, what?
It just tick, 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 tick.
I know. The sands of time.
Dominique Lapointe, Director of Macro Strategy for Manulife Investment Management. Thanks for joining us. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg in Washington, I'm Amy Morris. Mars has agreed to buy Kellanova for nearly $36 billion, bringing together two major food companies in one of the biggest deals of the year. The companies released a statement saying that Mars will pay $83.50 per share in cash for the maker of Pringles chips and Eggo waffles. Shares of Kellanova now 7.7% higher. Word that the Department of Justice is considering whether to break up Google is having an impact on Alphabet shares. Alphabet right now down about 3%. Apple seeking new sources of revenue as it moves forward with the development of a pricey tabletop home device that combines an iPad-like display with a robotic limb. Bloomberg's Mark Gurman explains.
It's a robotic neck connected to an iPad. It can swivel 360 degrees, bend, move up and down, move around on top of a table or a desk.
The shift into robotics is part of a broader effort to boost sales and capitalize on Apple Intelligence. Apple stock 0.2% higher. Marriott International reduced its guidance for full-year earnings, citing softer domestic travel demand in China and North America. CEO Anthony Capuano spoke with Bloomberg Television today.
Everybody's waiting for September, and if the rate cuts that are expected materialize, that'll be a boost for the consumer. The thing that gives me confidence beyond the next quarter or two is this almost sociological shift we've seen with this appetite for travel. And I think that bodes really well for our business.
Marriott CEO Anthony Capuano, and Marriott shares now 0.3% higher. The World Health Organization has declared a fast-spreading Mpox outbreak in Africa a global health emergency as the agency seeks to contain the spread of a potentially deadly virus. And those are the company stories that we're following at this hour. I'm Amy Morris, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, it's that time of the day. Get
Is
ready.
it? Hey, you know there's still earnings happening? We got Walmart tomorrow. We got Cisco after the bell
With a
today.
big, yeah. And these are, right, we're at the tail end of it.
Yeah.
So we'll be breaking down those numbers.
Sorry,
Look
I
at-
interrupted you. You were going to say something.
it's okay. We interrupt each other. And it works. We're seeing some buying into the close in the last few minutes of trading.
That messes up my gainers. I'm going to be very...
Is it mess?
It better not. I better check because I got yesterday, I had to only go with 2 gainers.
And you know what?
Or 2 decliners.
We were a super tough crowd. That used to happen to me a lot with my gainers, and they would flip into negative territory. Looking at our most read story on the Bloomberg terminal, Michael Burry, the hedge fund manager famous for his 2008 bet against the U.S. housing market. You guys all know this. And also his subsequent decision in the book and the movie, The Big Short, that was kind of played out, the depiction, I should say, in the book and movie, The Big Short, further increased his stake in Alibaba Group holding while slashing his overall equity portfolio in half in the second quarter.
It's pretty wild.
You having problems there?
Yeah, having
What
some
the heck
problems.
happened to you?
Having some problems with
All
the
right.
old
Folks,
computer.
can you call tech? Because we're going to need someone in tech to help Tim out because his computer has just.
Why don't
kinda
you
gone
take
down.
it away, Carol?
Yeah.
I'm going to
Well, so
mosey
my-
on over to a different station. How's
Okay, you get yourself set up because we've got our simulcast to go. Scion Asset Management, that is Burry's investment firm, reported an $11.2 million position in Alibaba. That was in the quarter, up from $9 million in the first quarter after adding 30,000 shares, according to the firm's most recent 13F filing. That came out today. Shift4 Payments was the firm's second biggest holding, with total net value of around $7.3 million, as the company initiated a new position in the stock, buying 100,000 shares during the quarter. Again, this is all from the filing. But we keep an eye on what he's doing because of his incredible call during 2008, but he also just kind of catches some nuances in different market turns.
Carol, I'm back.
Are you back?
I'm back.
It's nothing
better than ever.
shifting around the table.
Yeah. Okay. So you talked about what he exited. You talked about JD.com, Alibaba. Wednesday's the deadline for institutional investors. That's today, including hedge funds and pension funds, to report certain U.S. equity holdings to the SEC, since the data tracks holdings through the end of June.
All right. Yep. So you can read that whole story, but we'll have those filings, so don't miss them as we go through them. Hey, right now we're going to head over to our TV colleagues, check in with them, and count you down to the close on this Wednesday. Tim and I heading over because the closing bell starts right now.
Can you guys tell them I'm at a different computer?
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Steele, taking you to the closing bell. It's a global simulcast, starting now with Scarlet Fu joining us in the TV studio, Carol Massar and Tim Stenovic in the radio booth. Here on a Wednesday afternoon, Carol, where we're actually seeing stocks now get a bid into the close, things flipping into the green as we get closer.
I always think that's a positive, right? In those last few minutes of trading to see actually some buying into it. On a day or just right before, Tim, we're going to get some interesting data points.
Yeah, kind of a double dose of the consumer tomorrow morning with an update on retail sales. And then Walmart, because we are not done with earnings yet, Walmart's going to report so we get an understanding of how the consumer's feeling about the economy. Are they trading down? What are they buying? Always some good insight coming from Walmart.
So that's the consumer economy. There were some ominous remarks about the industrial economy with China Baowu Steel, the biggest producer, warning of a severe industry crisis. I was just looking at the steel makers and the S&P indexes, down 1.2% as a group.
Yeah, and that's not a good macro read for sure. But also, guys, you know, volume is terrible right now. So I have a hard time taking any sway in where we're going with the indices. I called it a nothing burger, called it CPI nothing burger.
Why'd you call it a nothing burger? Because of volume? Because everyone's on vacation?
Yeah, but also like it was just confirmation bias. That's how I was looking at the CPI.
But I guess taken in hand with what we saw 2 weeks ago at this point with the jobs numbers. I don't know. This one's pretty Fed friendly.
Are you saying the people that are buying into the close are kind of lame investors, that they really don't know what they're doing?
No, they're probably the systemic investors buying into the close.
Just checking.
All right, well, we look at a day here, a mixed day in the bond market. The VIX remains lower once again, down around that 16 level. The dollar relatively unchanged, and Bitcoin taking a slight leg lower. We did see a bid come into some of the equities here at the closing bell, just enough to flip a couple of the indices from red to green. The Dow Jones Industrial Average higher by more than 200 points, or about 0.6%. The S&P 500, which has been holding in the green for most of the session, is going to finish higher as well, 21 points, or about 0.4%. The Nasdaq, which was in the red just a few minutes ago, looks like it's going to close in the green, though we can call it relatively unchanged, only up by about 5 points. But the Russell 2000, it's been in the red all day, and that is where it ends, down 0.5%.
Yeah, pretty small moves there. So let's go dig a little bit deeper into the S&P 500. What you're finding, guys, is almost an even split. 293 names in the S&P 500 gaining ground on this Wednesday. Scarlett, just about 202 to the downside, 8 unchanged.
Yeah, but the majority of the sectors in the S&P 500 are in the green. Financials leading the way, up 1.3%, by far the best performers, thanks to some strength in insurance companies. Energy stocks and tech gaining about 2/3%. On the flip side, Alphabet is dragging down communication services by 0.9%, and consumer discretionary and utilities also finishing in the red, but not by a whole lot.
All right, guys, gainers, individual gainers, something to eat, something to wear, and something to do. So we start with Kellanova, finishing the day just shy of an 8% gain. It is your #1 gainer in the S&P 500 today. We all know the story, the merging of these two companies, essentially, or I should say an acquisition. Mars agreeing to buy Kellanova for nearly $36 billion, including debt. I know mergers don't happen. I got it. Bringing together two major food companies in the biggest deal of the year. Not a surprise, right? We probably knew something was going to happen when they announced that they were going to break in two last year. I'm talking about Kellogg's and Kellanova, and then said that they were going to spin it off. And so we finally get this deal. So this has been certainly percolating for some time. What, though? You guys have been talking about it with all of our Bloomberg team. It does sound like it brings some growth, though, and some growth brands into the Mars world, if you will. Victoria's Secret, 16.4% higher in today's session, rising the most intraday in 3 years. Company is poaching the top exec from Rihanna's lingerie brand to lead the retailer's turnaround. Stock still under pressure, though, in 2024. And we know this is a brand that's been struggling for years. We'll see whether or not they can bring some excitement back into it. And then Flutter Entertainment, up about 8% in today's session. It's a $36 billion market cap company. No, online, mobile, gaming company, operator of FanDuel, online sportsbook, jumping after reported second quarter sales and profit that beat analyst expectations. So some big outperformers there, Tim.
Okay, you got the outperformers. I got the underperformers. Let's talk about Alphabet. GOOGL, we've been covering the story all day. Shares finishing the day down by 2.3%. As a result of that story that we reported, our Bloomberg News team, late yesterday after the close, that a bid to break up Alphabet's Google is one of the options being considered by the Justice Department after that court ruling found that the company monopolized the online search market, according to people with knowledge of the deliberation. So what could actually happen here? perhaps a divestiture of the Android operating system, maybe Google's web browser Chrome, or perhaps a possible sale of AdWords, or none of those things, and maybe a different settlement. We'll have to wait and see. Ed Ludlow joining us a little earlier on our program, reminding us that whatever they hear from the Justice Department or from regulators, certainly the company will appeal. Shares of Tencent, or ADRs, I should note, fell as much as 3.6%. That's how they finished the day today. Pressures from a weaker Chinese economy. The segment for fintech in the second quarter recorded its slowest growth since 2022. Tencent's revenue was slightly below estimates, despite stronger growth across the high-margin revenue streams of the company. And finally, taking a check of Starbucks today after yesterday's record 25% increase. Shares falling 2.1% today. Shares gave back a little bit of that gain yesterday. It was down as much as 4.6% earlier in the session. Keeping an eye on analyst reaction as they digest the Brian Niccol news. Starbucks was upgraded to a buy-equivalent recommendation over Deutsche Bank, Evercore ISI, and Stifel. Alex.
All right, getting to the bond market here. If I said a nothing burger for stocks, I gotta mean a nothing burger for bonds as well. Yes, things moved, but the moves were very muted. You saw a little bit of selling in the front end. You got yields up on the 2-year by about 3 basis points. In the back end, a touch of buying, but really on the back end, like the 30-year, you had to go out there. The 10-year, nothing doing, guys, on the 10-year.
I love when you talk nothing burgers.
Thank you.
You're very welcome. All right, so one story that caught our attention, we've talked about kind of the rate reset, our moves that we've seen certainly over the last week or so. U.S. mortgage refinancing surging last week by the most since the early days of the pandemic. Borrowing costs, as we know, continuing to drift lower, and that is certainly moving the needle on this one, Tim.
Moving the needle ever so slightly, given that, rates are still significantly higher than they were a few years ago, and given the fact that so many Americans out there who do own homes right now own homes with a mortgage rate that is sub 5%. So significantly lower than what you'd actually get today if you were to refi or buy a new home.
Yeah, and we were talking about the idea that once you started to see those rates come down, you would see a lot of activity. And most people said the initial activity, Alex, was going to be in the refi and home equity space. Alex.
All right, Cisco out with earnings. The big headline here, they're cutting more jobs, and they see a pre-tax charge of up to $1 billion. We had reports that they were going to be cutting another 5% of the workforce. They are cutting more jobs. Let's take a look at their full year 2025 revenue. They now see that coming into $55 billion to $56.2 billion. I do have to say that they upgraded it the last quarter, and they seem to have upgraded it again for this quarter. So, and they're maintaining their quarterly dividends. Scarlett, again, sort of the traditional tech, that hardware tech, continuing to try to transform.
Yeah, in terms of the quarter that ended, we should mention that adjusted EPS did come in higher than anticipated by 2 cents. Revenue was also better than anticipated, $13.64 billion, and adjusted gross margin, 67.9%, so almost at that 68% mark. Analysts were looking for 67.1%.
Okay, looking at what Chuck Robbins is saying, looking at what Scott Herren, the CFO of Cisco, is saying in the press release, quote, as we look to build on our performance, we remain laser focused on growth and consistent execution as we invest to win in AI, cloud, and cybersecurity while maintaining capital returns. That's coming from Scott Herren, the CFO of Cisco.
Kind of one of these legacy tech companies, right, that have been around for a long time, trying to address a market that has been changing. I mean, they've been working on this for some time. This is a stock that's been under pressure this year, off of about 10% year to date. But we are seeing investors like what they got here. And so you've got the stock in the aftermarket, guys, up about 5.1% here, but that's a lot of jobs. That's really some changes there at that company.
Yeah, it's interesting too, the commentary though about sort of how they fit into the AI space and the idea of sort of helping to protect their customers. And this has been the big thing I think a lot of investors wanted was, can they articulate a strategy of how they fit into all this AI hype and whatever this AI future is going to be? I'm not sure this quite does that, but at least now they're putting something on paper.
Well, also, if you just take a look at some of the areas of growth, right? Like earnings wound up beating estimates. Their service revenue also beat estimates. So not all doom and gloom. And you wonder, is this going to be the trough?
Yeah, absolutely. Of course, guys, we are also trying to keep an eye on what's been going on in the world of politics. President Donald Trump, former President Donald Trump, is set to unveil an economic proposal here. He's holding a rally down in North Carolina that we've been told is going to focus here on some of his economic policy proposals if he is getting back into the White House. Let's take a listen in to what the former president has to say.
North Carolina, thank you very much. It's great to be back in this beautiful state with the proud, hardworking patriots who make our country run. You really do. You built our country. You make our country run. I want to thank a very good man, and he's in there fighting. He's fighting, and we know he's a fighter. The next governor of North Carolina, Mark Robinson. Thanks, Mark. Mrs. Robinson, thank you. They're a great, great couple. Thank you both. Thank you very much. Thank you both. Thank you very much. Well, this is a very frisky group, I have to say. And by the way, we have some very good polls coming out today, I just heard. Despite all of the fake publicity about this radical left person from San Francisco. How's San Francisco doing? Not like North Carolina. No, we have some very good polls coming out, so that's good. You know, considering the fact that what they do, what the fake news is able to do, and yet we're leading, and let them have their convention, and who knows how that's going to turn out. Joe Biden is a very angry man.
All right, everybody, you've been listening to Donald Trump holding a rally in Asheville, North Carolina. So again, just beginning to make some comments. We will, of course, monitor it for any news that potentially is relevant to the Bloomberg audience.
Yeah, the reason we took that is because, he was supposed to make comments about the economy, and that is, he's actually flanked behind him, if you're not watching this on YouTube, by a sign that says no tax on tips. A proposal that he unveiled a few weeks ago back in Las Vegas that the Harris campaign has recently adopted as well. So the idea was that his campaign speech would focus on some of his economic agenda. So we'll bring those to you if we get them.
Yeah, we'll watch for some headlines, folks, and monitor that. In the meantime, one of the big headlines, certainly here at Bloomberg, we've been talking about it all day, is a deal in the packaged food space today between brands we all know. We've been talking about it, whether it's Cheez-Its, M&M's, Dove Bars, Pedigree, Original, Greenies. We mentioned earlier, Mars agreeing to buy Kellanova, formerly of Kellogg's, for nearly $36 billion. It included in debt in that deal, and it really brought together two major food companies in the biggest deal of the year. And then we get a lot going on. We've got retail sales tomorrow, Walmart, so it got us thinking big time, Tim, about the consumer.
There's a voice we turn to again and again on the consumer and the retail environment. It's Eric Clark. He's portfolio manager at Rational Dynamic Brands Fund, ticker HSUTX. $68 million fund. Top holdings include Amazon, Live Nation, Uber, Netflix, Apple, Chipotle, and more. Eric joins us from San Diego. Eric, how are you?
I'm great, Tim. How are you?
We're doing pretty well. Hey, we're going to get to I want to get to big picture in just a sec, but when we were on our planning call this morning and our producer Paul Brennan told us that you were adding to Chipotle after the news of Brian Nichols' departure, we were both like, whoa, wait a second.
Wait, what?
Give us your thesis here, given that we saw shares fall significantly yesterday after this news was announced.
Yeah, sure. I mean, listen, Brian has done an amazing job with Chipotle, and he will do a lot of great things at Starbucks. But the reality is he put a big team in place, a big formula in place, and it's working. And he's a builder and a fixer. And, psychologically, builders and fixers get bored when things are kind of stable. And I think that's where we are with Chipotle. They are appealing to lots of demographics. Traffic is strong. Digital was amazing. They've removed all the friction from acting, and it's just one of those restaurant fast casual brands that's just very, very popular. And, for him, it's probably less interesting than, where can we go to fix something else? And I'm sure, the compensation at Starbucks was amazing, so the deal was probably too good to pass up. But I do not worry about Chipotle at all.
Okay. That's interesting. That's interesting. So having said that, but did you buy any Starbucks?
I didn't. It's funny. We were looking at Starbucks as well as, I like to call them diamonds in the dumpster. And you have, Starbucks, Nike, Lululemon, Estee Lauder. There's a bunch of really amazing brands that are just down on their luck. So we ended up adding Nike and Lulu back, and we haven't owned those for a while, thank heavens, because they're down over 50%. But I think it's a great time to start picking up those things. But Starbucks, I certainly wasn't going to chase it after 20, 25%, because I feel like that's the first 2 years of benefit of having Brian come in and assess everything. It gets harder from here, I think.
Okay, so let's move on to a little bit big picture stuff, and then we're going to go smaller picture once again and talk about more individual names. Strength of the consumer. Strong, weak, recession coming. What say you?
I think without the recession, I think yes. The consumer, I just wrote a report, a little note that said, is the consumer tapped out or opting out? And it's the latter. The consumer has been getting overcharged, all of us, for 2+ years. Eventually, we get tired of it and we push back on brands. And so consumers are basically saying, I am going to say no to that, at least for now, until you right-size prices. I really love that concert, so I'm going to overspend on that one, or I want to go on vacation, and I know I'm going to have to overspend there, so I'm not going to buy some goods. And so I see this kind of almost seasonal consumer spending that's happening because prices are just too high everywhere, and I don't buy the inflation is almost back to 2%. I don't see it anywhere in the real economy.
Hey, one thing that's a big holding in your portfolio, and I believe has for a while, is Alphabet. And we talked earlier about the Department of Justice, Eric, mulling an idea of maybe breaking up Google after a landmark antitrust win. Does that, depending on how this plays out, will that impact your investment thesis for Alphabet?
All of these big techs, and I'll put Google and Amazon in particular, if there were any type of real breakup, and I don't think the odds of that are very high, and that would take multiple years, that would be an unlocking of value, because there's so many great brands inside of these great companies that if you set them free on a standalone basis, the sum of the parts is much higher than the current market cap for Google or Amazon, Amazon in particular, which is why it's the biggest holding. But I think it's a lot of noise, and certainly it could keep people away because they don't want to deal with headline risk. But I don't think it's anything more than just typical DOJ stuff, and just trying to make waves about big companies that are dominant.
There's a well-known brand that just reported earnings, Cisco, that is also trying to right its ship. And we just broke down the numbers, and we did see the stock actually pop in the aftermarket. How do you think about a brand like that? Is it just something when you look at the tech universe you're not interested, or do you see some value there?
We don't follow Cisco as much because it's not kind of direct consumer. Within our portfolio, Amazon, Apple, and then we have some Google and Meta. We're more in the communication services, with a Netflix or a Live Nation or things like that. So we have owned some direct tech, but Cisco isn't part of that.
That's true, because it's not as much consumer focus there.
Hey, Eric, I looked through your holdings in the Rational Dynamic Brands Fund, and I see a couple companies, or segment, I should say, that it's like kind of that old, is it Sesame Street? One of these things does not belong. It's like
one of these things is not like the other.
Yeah, one of these things is not like the other. Okay, you have all these consumer-facing companies, and then you have private equity. Blackstone, KKR, Apollo. You've added to Apollo recently on the dip. Why is private equity, or I guess alts, as they want to be called now, why is it appealing to you?
Yeah, it's a major theme in the high net worth area, money migrating on the margin from public equities and public fixed income over to privates. And very few people have any exposure to the private market, which is 80% of the economy. So it's just that little area that I think it shields people from volatility. You get access to some of the smartest investors on the planet. They can see around corners. They have great information kind of advantages. And they've been, all of them, since their IPOs, they've been monster outperformers. And they all pay a dividend, and they grow that dividend. So, sometimes they can be a little bit volatile, but they are terrific companies, terrific stocks. And they are really under-owned still, even though 2 of the 3 are part of the S&P, and Apollo, I'm sure, in the next 12 months or less would be part of the S&P.
Oh,
too.
interesting.
So
okay, I like a prediction. I like a prediction.
Absolutely.
We'll come back to that in the next 12 months.
Yeah, exactly.
See if you're right about that, Eric.
Talk to you about it. Hey, listen, Eric, take care. Enjoy the rest of the summer. Eric Clark, portfolio manager at Rational Dynamic Brands Fund. As we mentioned,
it's always summer in San Diego. You don't have to say enjoy the summer to somebody who lives in San Diego.
I know.
Like 365,
Yeah, but
it's beautiful there.
It's a state of mind.
It really is.
Year to date, his fund is up just shy of 9%, according to Bloomberg rankings, putting it in the 17th percentile. 1 year, it's in the 75th percentile. All right, we're talking about raising a citizen. That's coming up.
It's 421 on Wall Street. I'm Amy Morris. Cisco Systems, the biggest maker of computer networking equipment, gave a bullish revenue forecast for the current period thanks to a rebound in orders, but also announced plans to cut jobs. It's part of a strategy shift. Shares of Cisco now up 5.6% in the post-market. Underlying U.S. inflation eased for a fourth month on an annual basis in July, keeping the Federal Reserve on track to lower interest rates next month. We bring you these closing numbers each day here at Bloomberg. The Dow gained 243. NASDAQ, after being down most of the afternoon, was up 5 points, and S&P 500 up 21. Mars, whose brands include M&M, Snickers, and Skittles, buying food company Kellanova in a nearly $30 billion deal, giving it access to brands like Cheez-Its and Eggos and Pop-Tarts. Shares of Kellanova rose 7.8% in the regular session. And some global news for you here. The World Health Organization declaring a fast-spreading Mpox outbreak in Africa as a global health emergency. That agency is trying to contain the spread of a potentially deadly virus. It's a mutated strain of the virus which causes unsightly, painful rashes and lesions. That's a Bloomberg Business Flash. Now back to Bloomberg Business Week with Carol Massar and Tim Stenbeck.
Yeah, you're going to understand maybe what we need to be doing with all of our kids that are out them. I've got them, Tim's got them, you've got them, I'm sure. And there's something important when it comes to understanding politics, but probably more importantly, how our government works.
Okay, so here's some numbers that might freak you out, Carol.
Okay.
According to a 2023 Annenberg Constitution Day civic survey, nearly 1 in 5 Americans cannot name a single branch of government.
You and I can do it. We did a test before.
We did a test. It's executive, legislative, and judicial, by the way. But
yeah,
nearly 1 in 5 can't name a single one of those branches.
20%.
Yeah. So perhaps it's not surprising given the state of civics education in the U.S. According to the Committee for Economic Development, it's the Public Policy Center of the Conference Board, only 7 states require a full year of civics or government in schools, and 13 states have no civics course requirements.
I didn't take a civics class, did you?
Not in high school.
But I learned about government.
Yeah,
Yeah.
I did not do it in high school. You're right.
I don't know. All right. Anyway, a lot at stake if Americans really don't know how their government works. Just ask Lindsay Cormack. She is Associate Professor of Political Science and Director of the Diplomacy Lab at Stevens Institute of Technology, my dad's alma mater, by the way. She got a new book out about all of this. It's entitled How to Raise a Citizen and Why It's Up to You to Do It. And she joins us right here in New York City. Professor Cormack, great to have you here with us. We feel like there's so much we want to talk about, including your book, but we are very interested also, because of your background, in hearing about your thoughts on today's presidential political environment. And that's also too been going on in the past month. Is this, in your view, democracy at work?
Yeah, I really think it is. You know, we have systems in place for if it doesn't go the way that everyone thinks it's going to go, and it seems like it's working out in the selection of a new candidate.
What do you mean? How is it working out in the selection of a new candidate?
Well, I mean, when Biden stepped down, a lot of people were like, oh, is there going to be an open convention? How are we going to pick someone? And really, at that point, it was already with the delegates. And because of our primary system, it's like, well, they're deciding it's going to be Kamala, and that's who it's going to be.
You know, it's funny because it's just, I've been listening to a lot of podcasts, political podcasts. Tim has too. And we've been doing mega deep dives just because of everything that's going on. And I heard something that said, you know, we're still a young country, and other countries have seen a lot of, you know, their ups and downs over hundreds and hundreds of years or even longer, you know. And I guess, you know, we asked the question, and we've seen the Democrats, at least President Biden was for a long time while he was still on the campaign trail, is saying, you know, we've got to protect democracy. It's really important. But democracy isn't necessarily working for everyone who feel like they're struggling to put food on their table, make sure there's a roof over their head, just struggling to make monthly payments. Is democracy, though, working for everyone?
I mean, that's a great question. Yeah, it's a really good question. Is it working for everyone? It works in different ways. I think the relevant comparison might be like what a life would look like under an autocracy. And I think it probably looks worse for people who are having a bad time here. And so I think one of the problems is we don't really know how to engage in our democracy to necessarily make it work for us. And that's kind of the research that I'm into and what I'm all about.
That's interesting, Lindsay and Carol. An interesting thing that you brought up. I don't know if you can read my mind, but as I was preparing for this, I was looking at some stats to try to set this up. The American Bar Association, Lindsay, says that less than 1/3 of millennials consider it essential to live in a democracy.
Huh.
You know, I see that sort of slide everywhere. Yeah, I mean, part of it is we don't have a tradition of really talking about this in a very positive way. And instead, our children get messages from really early ages that, like, government is bad, it's annoying, it's negative. And so it's not surprising to me that people think like, it's not really worth fighting for or worth working towards. But I don't think that's true. None of our millennials know what it's like to live under an autocracy, and I don't think they'd like it that much more.
So how do you, so let's talk about that. I mean, I have a 21-year-old, Tim has young kids. You know, my daughter will remind me of how we've kind of messed up everything for her generation. We talk a lot of politics. She is the daughter of 2 journalists and folks who have been in the news business, so it comes up a lot. I had a family that we talked around the dinner table about a lot of stuff that was going on. But how do you think we should be approaching it with the younger generation, and how early do you start on all of this stuff?
Yeah, so you all are lucky because that's atypical. Most of our families don't have those sorts of discussions. In research that we did for the book, we found that only 25% of 18-year-olds report that they ever had an intentional discussion about politics or government with their parents. And my sort of stance on this is you can't start it too early because kids are just trying to make sense of the world around them. They're soaking it up. So if they hear us talking, you know, like saying like politicians are all bad or they're negative, they're liars, they're cheaters, they're going to hear that. And so it's not that not talking to them doesn't give them a message. They sometimes just pick up the negative pieces. So it's up to us to kind of recast the narrative around this in front of them.
Okay, and I have a large family, a lot of nieces and nephews. What do you do, though, when a 20-something-year-old or an early 30s like, yeah, all the politicians, they're really lousy. They're what's the right response? How do you deal with that where they're kind of so set in their view?
Yeah, so when I hear something like that, I usually think that people are talking about federal politicians, and I try to change the conversation to think about who their local and state representatives are.
Yeah.
Because for the most part, the people who do this work at lower levels, they're not bad. They're not out there to do ill. They're really trying their best, and oftentimes they're not that well supported financially. The jobs don't pay that well. People yell at them, and so really I think most of the people doing our politics are trying their best.
You know, we hear what you said, we hear a lot from the mayors we talk to. We check in with mayors around the country quite a bit, and oftentimes they are Democrats or Republicans. They're required to have a party affiliation, but regardless of what party they're in, they don't really consider themselves members of a certain political party because their job is to come up with solutions to, you know, fixing potholes and making sure that things are running on time in a small city or in a metropolitan area. And it's an interesting issue because there's this separation between the local level versus what happens on the federal level, and so much air is taken out by national politics, and that's sort of the vibe that people pick up on.
Yeah, that's absolutely true. You know, we talk about federal politics more than anything else, despite the fact that local politics is some of the most consequential for our quality of life decisions.
You know, it's funny, my husband and I, as I said, he's a news guy too, and he just said, you know, when he was kind of working his way up, you always went to the town hall meetings and local politics. And part of it is, you know, the demise of local journalism.
Yes.
Like there's just no reporting on it anymore. And so it's all kind of the same stuff, as you said, a lot of it at the federal level, but it's not really getting down to, you know, what's happening on a different level. I mean, it is why Tim's right. Like, we love talking to mayors. We love talking to governors. Like, what's going on in your state? What's going on in your towns? It's really important. All right, so you've got a 5-year-old. How do you teach them about government? How do you teach them about civics?
Yeah, I think if you have a 5-year-old, the point is just to make sure that you are comfortable doing it in front of them. Have conversations around them, have conversations in front of them. We don't need to raise like little government trivia experts. You know, they don't need to know all the presidents. They don't need to know how a bill becomes a law at that age. But it's about giving them the vocabulary, letting them hear these words so they can kind of start to make sense of it. For every other subject, we start kindergarten with little concepts, little vocab, and we build. But for government, a lot of the times we wait until they're almost 18 and then say like, here, we're going to teach you everything right now. And so it's just this idea of scaffolding like we do with every other skill and subject.
Okay, so parents can't always be the ones who are doing this because they're not necessarily the ones who are doing this. What's your view on how this should be taught in schools?
So we do need to take an approach that prioritizes things younger, like we do with everything else. A lot of the ways that we do this is very idiosyncratic because states will say, here's how we think we should do it, but then it gets further devolved down to school boards or it gets devolved down to counties. And so we don't have a unified curriculum. We never are going to. But the thing that we can do is start earlier and start building over time instead of just backloading everything in that second semester of senior year when kids really aren't that receptive to new information anyhow.
You know what's interesting? I'm getting some messages from a member of our audience who says that the kids aren't necessarily the problem. It's the parents who seem to be the least educated, the most susceptible to misinformation online. We only have 30 seconds left. Then we're going to come. Actually, we have a little more time with you.
Those grown-up kids, what do we do with
Yeah,
them?
what do we do with those grown-ups?
Yes, you know what? That's one of the reasons I wrote this book in the way I did. The first half is sort of like, here's the problem, here's what our kids need to know. And the second half is a primer because I understand that people who are parenting today, we are products of systems that were deprioritizing civic education. A lot of times we had parents who were not comfortable talking about these topics. And so whoever's pointing that out to you, I share that viewpoint. With the parents, we need a little bit more education here too. And that's sort of what this effort is about.
How do you, it's interesting because I think we've all had conversations with adults where it gets heated, and how do you have that conversation? Like, well, wait a minute, you don't really understand how this works. Like, how do you do that in an environment where there's just a lot of anger and nobody wants to listen?
Yeah, I'll tell you the strategy. I'm mostly talking with college students, like 18 to 22-year-olds, and they get heated too. But instead of asking someone what they think or why they believe that, the first question I always like to ask is, what have you heard about that? Because I think when you ask someone, what have you heard, it removes them from having the responsibility of defending or justifying a position. They can say, oh, I heard this on Twitter. Oh, I heard this from my uncle, or whatever it is. And then you can kind of work with that instead of putting it on them to defend whatever it is they're trying to think.
Source matters, right? It's funny that, I find myself doing that too a lot. Like, where did you hear that?
It does, but I think one challenge now is the polarization that we see on these online platforms. So you have, for example, the Elon Musk, the owner of X, has endorsed Donald Trump, and he has hosted a conversation with him on the platform.
Right.
And he is in complete control of that platform. Can you imagine the outrage that you'd hear from folks out there if you saw that on the flip side of, like,
If it was more open, you mean, or?
no,
or
if you saw the opposite, like on Facebook or something, like the CEO of
like if
Facebook.
Zuckerberg
Yeah.
sat down with Kamala Harris?
Yeah, exclusively, or endorses her. Yeah.
Yeah, you know what? That might be like a pulse on current politics, because I imagine that probably would have more outrage than what happened with 1.2 million people listening to Elon Musk and Donald Trump. But yeah, it's hard to know, but you're probably right. Your intuition there kind of goes with what I would think too.
All right, we're going to come back and we're going to continue with Lindsay Cormack. She is Associate Professor of Political Science and Director of the Diplomacy Lab over at Stevens Institute of Technology, just across the river here from where we are here in New York City. We'll continue with her because we want to get into, too, she's got 5 skills our kids ought to have, and I want to kind of go through that list. I also want to think about kind of reforming Congress a little bit. Maybe talk a little bit about that with
Get in line.
This is Bloomberg.
It's 4:40 on Wall Street. I'm Amy Morris. Cisco Systems, the biggest maker of computer networking equipment, gave a bullish revenue forecast for the current period thanks to a rebound in orders. It also announced plans to cut jobs, part of a strategy shift. Shares of Cisco now up more than 6% in the post-market. Underlying U.S. inflation eased for a fourth month on an annual basis in July, keeping the Federal Reserve on track to lower interest rates next month. The core consumer price index increased 3.2% in July from a year ago, the slowest pace since early 2021. Renaissance Macro's Neil Dutta says the core PCE number might not be as soft as CPI.
Medical care services inflation and CPI declined 30 basis points over the month. I don't think the PCE equivalent is going to be nearly that weak.
Renaissance Macro's Neil Dutta. You can hear more of that conversation on the Surveillance podcast. And we bring you the closing numbers each day here at Bloomberg. The Dow gained 243 points, and the NASDAQ had been down pretty much all afternoon. It was up 5 points. The S&P 500 up 21. Candy maker Mars says it's buying Kellanova for $83.50 a share. Values the snack maker at nearly $36 billion. Mars paying a 30% premium for Kellanova at a time many consumers are turning away from fatty snacks. Kellanova gained 7.8% in the regular session. That's a Bloomberg Business Flash. Now back to Bloomberg Business Week with Carol Masser and Tim Stenovec.
All right, so appreciate it. Amy Morris there in D.C. Let's get back to our guest. We're talking with Lindsay Cormack. She's Associate Professor of Political Science, Director of the Diplomacy Lab at Stevens Institute of Technology. Her new book, How to Raise a Citizen and Why It's Up to You to Do It. She is still with us in New York City. Hey, Lindsay, we mentioned that you have got basically 5 rules or 5 skills that you think kids ought to have. Can we go through them?
Sure thing. This is the things that you need to go over with your kids before they leave your house. So before they're gone for college or whatever awaits them after. The first one is they need to know how to have hard conversations. And one of the reasons that I know that that's true is as a college professor, I have students who are afraid to upset anyone and they're afraid to feel this discomfort themselves. And so that's like a big skill that we need to make sure that they have. The second one is parents need to make sure their kids know how to register to vote, and then they have to change it when they move. I take our kids to vote every year that we have an election, and without fail, some of them are turned away because they thought they were registered, and they don't realize that if you're registered in one county, it doesn't transfer to the other. So make sure that they understand how to do this and how they change that when they move. The third one is they need to understand the difference between primaries and general elections. All too often, we only focus on general elections when we talk about this in schools, and so they really miss out on this big piece of power, which is picking someone in a primary election. The third thing is they need to have an understanding of federalism because we oftentimes focus on the federal level, and then they don't realize that state and local governments control so many things. When we think about big policy issues like gun licensing or healthcare or marijuana policy, things that matter to young voters, this happens at the state level for the most part. And so having an appreciation of these different levels is an important thing for them to have. And the fifth one, and this is a hard sell, but a lot of parents that I'm talking to are pretty receptive to it. Your kids need to have read the Constitution at least once before they leave your house. It's our charter of government, it's the rules of the game, and once they have an understanding of it, they can't be as swayed with bad information or misinformation because they'll really just have a rooted understanding of what our system is all about.
And yes, you can start with Hamilton. Like, it'll get you really excited. Like, no, seriously. Like, I think about something like that gets people interested. They're like, oh, wait a minute, this is really our history in a fun form, but there's a lot of information there. What is it that the kids that you teach, 18 to 21, 22, you've got a young daughter too, but I am curious about the questions that come up the most when it comes to government politics. What do they want to know? What is it that they're like, I don't really understand this? I feel like when there's a piece of legislation going through Congress, we all are kind of like, wait, where are we in this process? And where are we? And what vote is this? And how does this work? Because there's still things, I think the mechanics that don't always make sense or don't, there's just, it feels like nuances to it. But anyway, what do kids ask you the most?
I mean, I wish I could tell you that there was this one thing that they didn't understand, but truly they're lost. Like, their understanding of the courts is based on like courtroom drama TV. Their understanding of the presidency is sort of like whatever they've seen on Instagram or TikTok that morning. And when it comes to like how the legislature works, it's really hard. And so it's not something where we can fix it overnight, but I do think that if we start a little earlier, if we're a little bit more intentional about it, and we recognize that we have a role as families in writing this thing, we can get to a lot of their questions because they're kind of lost all over the place.
Do the social platforms have a role too? You mentioned Instagram and TikTok just now. How do you see them?
I mean, they're already here. They're going to be here for for good, I think. And so we have to understand what they are. I think something that parents can do is, we're not going to see the same things as our kids. We're algorithmically fed different things. We all know this. And something that I argue in my book is that take a little time with each other and say, like, what is it that you're seeing? And make sure that you kind of have an understanding of what their algorithm feeds them and let them see what you're getting fed as well. That way you can talk about things with a better understanding of the background inputs that either side has.
We talked about education. Tim, you asked earlier, I think, Lindsay, some questions, but do we need to have mandatory civics classes in school? Do we need to have a civics test before people vote?
I don't think a civics test is necessarily the way to do it. The people who study like education, the people who are experts in this field, always come back to this idea of action civics, which is like giving kids a project so that they can really see how the process works. They find like a playground and say, oh, our basketball courts are kind of cracked and they don't really work. How can we figure out how to fix that? And that process is, figuring out which branch of government is responsible, which level is responsible, trying to figure out how you activate to talk to those people. And even if you don't succeed in getting better basketball courts, you understand a lot more about the process. And so the people who study that sort of like, what can we do in schools, they mostly point to action civics versus study for a test, get 10 answers right, and go on with your life.
The January 6th riot on the Capitol, was that, how do you think about that in our political history? And I'm just thinking, like, does it make you nervous? Like, those individuals, did they think, well, this is democracy. I believe the vote was stolen. How do you kind of teach around that those are citizens too, people who may have thought, listen, we think things weren't democratic, and so we're protecting our state.
Yeah, that's a really hard one. And I talk about this a little bit in the book. I think one of the things that's challenging there is my guess is the people who were storming the Capitol on January 6th, I don't think many of them ever worked as poll workers or election workers, because I think if you had, you would understand how difficult it is to actually steal an election or how unlikely it is that enough people would conspire to do that. And so this is all sort of going back to the point of like, if we understand our systems better, I think they operate in better ways and we're less prone to things like misinformation that could incite violence. So I think about January 6th as an ultimate failure of political education more than anything else.
But many Americans do still believe the 2020 election was stolen and question, and again, I'm going to the American Bar Association. They write that they question the integrity of our election systems. And you actually hear the current frontrunner and Republican nominee still questioning the 2020 election. How do you view those in positions of power making comments like that?
So I think it's easier to give Donald Trump a pass versus seasoned politicians a pass, because seasoned politicians, they understand these systems. They've interacted with them for a longer time. I think what Donald Trump kind of brings is more of an infotainment style of things and not a deep-rooted understanding of how the processes that underlie our systems work. I think it's kind of dangerous for us to kind of take that as the teaching versus going back to basics and saying, you know what, maybe I'll go volunteer as a poll worker and go see how that actually is. That would be the version of doing like your own real research. And I think when people do that, they realize it's very hard to steal an election. It's very hard to do these sorts of things because we have so much redundancy in place in the U.S. system.
Hey, Lindsay, one last question. We've got to wrap up, but got about a minute. I think there are a lot of folks, too, that are like, this isn't my government. It's companies who do lobbying. You worked at a lobbyist in Washington for about a year. And I just, how do they're like, why should I vote? Because it doesn't really matter, because my vote doesn't matter, because it's money that matters. What do you say to them? And again, we just got about 45 seconds.
Yeah, I think that's a hard feeling, and I understand it, to think that you're inconsequential. The thing is, you're truly not at all the local and state levels. Federal government, sure, you're a small piece of that. But when you're doing things that are on your state and local level, you are pivotal. We have elections that are decided in fewer than hundreds of votes. So I understand that concern. I think you should put it away and still exercise the rights that you have here.
All right, really cool stuff and very thoughtful as we are. How many days are we away?
Just over 80.
80 days away, and people can start voting come September. Lindsay, thank you so much. Really enjoyed this. Lindsay Cormack, she is Associate Professor of Political Science and Director of the Diplomacy Lab at Stevens Institute of Technology. Her new book out, How to Raise a Citizen and Why It's Up to You to Do It. That book is out as we speak.
82 days.
82 days.
Yeah, according to the countdown clock at 270towin.com.
All right,
Can you believe
everybody. Yeah, no, I know. Fast and Furious. All right, you're listening and watching Bloomberg Business Week.
company news headlines on Bloomberg Radio.
From Bloomberg in Washington, I'm Amy Morris. Cisco Systems, the biggest maker of computer networking equipment, gave a bullish revenue forecast for the current period thanks to a rebound in orders. But they also announced plans to cut jobs as part of a strategy shift. Shares of Cisco have jumped now 5.5% in the post-market. Apple, seeking new sources of revenue, is now moving forward with development of a pricey tabletop home device, combining an iPad-like display with a robotic limb. Bloomberg's Mark Gurman.
They're all connection lost right now. Robotics is the next big thing at Apple. They're talking about humanoids. They're talking about mobile robots to go around your home.
The shift into robotics is part of a broader effort to boost sales and capitalize on Apple Intelligence. Apple stock is now 0.2% higher. Candy maker Mars says it's buying Kellanova for $83.50 a share, valuing the snack maker at nearly $36 billion. Kellanova gained 7.8% in the regular session. Word that the Department of Justice is considering whether to break up Google had an impact on Alphabet shares, which fell 2.3% in the regular session after a landmark court ruling that found Google monopolized the online search market. The government is reportedly considering whether to dismantle Google, force the company to share more data with its competitors, or put guardrails in place to keep it from having an unfair advantage in AI products. Marriott International reduced its guidance for full-year earnings, citing softer domestic travel demand in China and North America. CEO Anthony Capuano told Bloomberg Television that it was just because of the softer domestic travel demand. Marriott CEO Anthony Capuano was talking to Bloomberg Television earlier this afternoon. And those are the company stories that we are following this hour. I'm Amy Morris, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, we're getting ready to wrap up on the Wednesday edition of Bloomberg Business Week. Carol Master along with Tim Stenevec live in our Bloomberg Interactive Broker studio. Watching shares of Nike in the aftermarket, they're up about 5% as we speak.
Wow.
Bill Ackman's Pershing Square Capital Management disclosing it had a new position of about 3 million shares worth $229 million at the end of the second quarter. Remember, we mentioned 13F filings. Pershing Square disclosing it in that 13F filing for the quarter, which ended June 30th. So we're seeing definitely a bump up in that one.
Nike, though, has been getting beat up. It's down 28% so far this year, Carol. If you take a longer-term view of the chart and go back to the all-time highs that were back in 2021, you see that. Just doing a little live charting on the Bloomberg terminal right now. See that it's down 51% from those all-time highs.
Yeah, it's really been taking a beating. But, we were talking with Eric Clark of Rational Dynamic Brands Fund, and he talked about Nike, right? Some of these brands that have been beaten up a little bit, that he's finding opportunities and buying into them, which I thought was interesting. Yeah.
So shares up. Yeah, shares you mentioned up, 5% in the after hours?
Yeah, they're up 5% as we speak. So looking to see, I just wanted to see how much Eric had said. I'm just going back to our notes. I think Nike was one of his recent purchases that he's been adding. We talked about, we've meaningfully added meaningfully to superior operators, Amazon, LVMH, Hilton, Netflix, but I think he also talked about Nike, though. Oh, we also restarted positions, he said, in Nike, Lululemon, looking at other brands left for dead, included Estee Lauder, Dollar General, Disney, Home Depot, but not chasing Starbucks, but restarting positions in Nike. So I would say that's not too bad, because his position's now up 5%, at least based on the post-market trade.
Okay, so you're watching that story. I got my eye on another one of the most read stories. Sophie Alexander out with a story about Mike and Jackie Bezos.
Mom and dad.
That's same last name.
Yeah.
They've given $186 million to the Aspen Institute. Wow. This week to establish a new center focused on young people.
Yeah, really interesting. Donation exceeds Bezos' family's foundation's total 2022 assets. So it's the biggest the Bezos Family Foundation has ever made, the largest ever donation to the Aspen Institute, according to a spokesperson for the nonprofit. New project called the Center for Rising Generations will use $175 million of the gift to create a permanent endowment.
Here's a fun fact.
What's that?
So Bezos, according to the Bloomberg Billionaires Index, is the second wealthiest person in the world. They were early but his parents were early investors in Amazon. They gave $245,573 to Bezos back in 1995. It's unclear exactly how much Amazon stock they still own, but as Sophie writes, their charitable activities indicate they've done very well.
Yeah, go back to 2022, and Mike and Jackie, separately from the foundation, committed more than $710 million to the Fred Hutchinson Cancer Center in Seattle. As of the end of that year, the Bezos Family Foundation had about $113 million in assets. And that year, Mike and Jackie donated shares of Amazon that would be worth $168 million at today's prices, taking into account a June 2022 stock split. So, yeah, they've made some big donations. So I would say that initial backing of about $245,000 back in 1995 of their son in Amazon, they did okay.
Yeah, they're pretty good venture capitalists, aren't
Mom
they?
and Dad, I think we're even.
Yeah.
It's like, well done, cool. Son. This is why, you support your kids.
$193.4 billion is Bezos' net worth, according to the Bloomberg Billionaires Index.
All right, everybody. All right, we are almost on to Wednesday. Tomorrow, we'll watch out for that retail sales print. We're going to get Thursday. How did I do that?
I don't know. I mean, you just
Where am I?
You just want this week to keep going because you're having so much fun.
One thing I know, there's 3 branches of the government.
And what are they?
Executive, judicial, and legislative.
Yes.